取らない方がいいってことですね。はい。
東京都内で資産運用業の開業を目指す皆さん、東京独立開業道場であなたのキャリアを次のステージへ。起業家 EM、アセットマネージャー、アセットオーナーが一堂に集結し、これからの EM 像をリアルに語り合う特別セミナーを開催します。第一線で活躍する専門家による講演、パネルディスカッションを通じて今すぐ実践できるヒントが満載。登壇者や参加者と直接つながれるネットワーキングの時間もご用意しています。独立を考え始めたばかりの方も、すでに準備を進めている方も、そして EM というキャリアに興味があるという方にも、必ず新たな気づきと出会いがあるはずです。お申し込みはこちらの QR コードまたは URL から。皆様のご参加を心よりお待ちしています。東京独立開業道場ホームページでは、開業経験者の体験談やレギュレーションに関するレクチャーなど動画コンテンツも多数公開しています。こちらもぜひご覧ください。
よろしくお願いします。もう喋るときはそのままなんか電源つけたりせずに喋っちゃう。
本日は一般社団法人東京国際金融機構主催東京アセットマネージメントフォーラム2026にご来場いただきまして誠にありがとうございます。ご来場の皆様にご注意事項のご案内を申し上げます。開演中は他のお客様のご迷惑にもなりますので、携帯電話の電源をお切りいただくか、マナーモードに設定いただきますようお願いいたします。また、カメラ、ビデオカメラ、レコーダーなどの録音、撮影は禁止とさせていただいております。ホール内は禁煙になっております。おタバコはステージ向かって左側、会場外の道路沿いの、喫煙室をご利用ください。開演は午前9時を予定しております。それではお時間まで今しばらくお待ちください。
東京都内で資産運用業の開業を目指す皆さん、東京独立開業道場であなたのキャリアを次のステージへ。起業家 EM、アセットマネージャー、アセットオーナーが一堂に集結し、これからの EM 像をリアルに語り合う特別セミナーを開催します。第一線で活躍する専門家による講演、パネルディスカッションを通じて今すぐ実践できるヒントが満載。登壇者や参加者と直接つながれるネットワーキングの時間もご用意しています。独立を考え始めたばかりの方も、すでに準備を進めている方も、そして EM というキャリアに興味があるという方にも必ず新たな気づきと出会いがあるはずです。お申し込みはこちらの QR コードまたは URL から。皆様のご参加を心よりお待ちしています。東京独立開業道場ホームページでは、開業経験者の体験談やレギュレーションに関するレクチャーなど動画コンテンツも多数公開しています。こちらもぜひご覧ください。
皆様、本日
Thank you very much for joining us today for the Tokyo Asset Management Forum 2026. I have the honor of serving as the MC. My name is Nana Nakata. Thank you. First, before opening, I would like to provide some important information. Please refrain from recording or photographing this forum. Simultaneous interpretation receivers are available at the venue entrance. Channel 1 is Japanese and Channel 2 is English. For those of you joining online, today's program will be streamed in both Japanese and English. You can switch languages via the URL provided in the description. If you experience any technical issues or have questions, please contact us by email and the Secretariat will assist you. Now I'd like to explain about today's event. With the theme of understanding the depth of asset management, this forum primarily aims to promote asset ownership reform and foster emerging managers, EMs, while deepening discussions on strengthening the competitiveness of Japan's asset management industry. The forum will proceed according to the schedule shown. Now, in its 8th year, the forum will again host the EM Showcase, introducing distinctive emerging managers and deepening discussions with experts from Japan and abroad on topics such as impact investing and allocation strategies by overseas institutional investors, so that the EM will be further utilized and developed in Japan. Also, we'll be coordinating with the FinCity Global Forum 2026, which will start at 2 p.m. this afternoon. And we will provide a venue for in-depth discussions amongst stakeholders in the asset management field. Now, we'd like to have opening remarks. Please welcome Mr. Tokio Morita, Executive Director of FinCity Tokyo, or Organization of Global Financial City Tokyo. With a round of applause, please.
皆様おはようございます。
Good morning. I am Executive Director of FinCity Tokyo. Morita is my name. Thank you very much for taking the time and joining with us at this the critical event that is TAMF, or Tokyo Asset Management Forum 2026. For those of you who are here today at Kabuto 1, as well as those that are joining with us remotely throughout the world, thank you very much for your participation and interest. I'd like to express my heart appreciation to you all with from the bottom of my heart. Well, the place that we are meeting here has been the center of the financial activities here in Japan with a long history, and now Kabuto 1 has become a major landmark, and we are very much delighted to have this event together with you about asset management. At the outset, the FinCity Tokyo, the organizer of this event, is what I'd like to introduce to you. The FinCity Tokyo was established to make Japan one of the top the financial centers in the world. In 2019, in April, it was established under the collaboration between public and private for the promotion. Megabank, security firms, the asset managers, and those financial institutions, among others, as well as real estate companies involved in redevelopment of this Kabuto-cho area, as well as lawyers, accountants, and the other members are supporting this organization. I would say this is for the purpose of dissemination of information and development of the market in the united manner, and also trying to promote the networking among those concerned within and outside of Japan, and that this is one of the culmination of those efforts. In December 2023, Japan advocated to make Japan as a leading asset management center, and ever since, corporate governance improvement as well as other initiatives have been promoted under the leadership of the Commissioner of FSA, Mr. Ito, who is going to give us the keynote presentation. We have seen major development, but we have to make this development as a reversible trend so that Japan can really be the leading asset management center with the flow of the saving into investment. And I have to say that we are still in the middle of the road, and as a major driver, we consider there are two main pillars. One of them is about emerging managers and how we can encourage the allocation of the liquidity into such emerging market managers. Anytime in the history, it was the ambitious players that led the development. Ever since the FinCity Tokyo establishment, we have been promoting emerging managers activities. The second is about the asset the management reform. The asset owners are there that would be the source of the funding with the clearly defined objectives and the initiative that will lead to improving the quality of the asset management. Today, we have invited major asset owners to discuss with us the challenges, issues, as well as the ideal development toward the future. We have two parts in this the program today. We first start FinCity Tokyo Forum, and the afternoon is the FinCity Global Forum. That's where we'll discuss the re-emergence of Tokyo with rising uncertainties, how Japan can and Tokyo can maintain the vitality and win the trust from a global community. In conclusion, I'd like to state that today's forum is useful in offering you inspiration as well as new opportunities for business development. I sincerely hope for such development, and with this, I'd like to conclude my opening remarks. Hope that you would enjoy today's program. Thank you.
ありがとうございました。
Thank you so much. Let's give him a big round of applause.
続きまして、
Next, we will have the keynote presentation by Mr. Yutaka Ito, Commissioner of the Financial Services Agency of Japan. It's titled Initiatives Toward Building a Nation of Advanced Asset Management. Please welcome him with a round of applause. Thank you for the introduction. I am Ito, Commissioner of the Financial Services Agency, and I thank you for your support in the financial administration. I want to take this opportunity to thank you for your ongoing support. So this is the Tokyo Asset Management Forum. On the occasion of opening this forum, I'm very honored to have the opportunity to address you. So I want to thank all of you at FinCity and FinCity Tokyo for this opportunity. So understand that in today's event, various discussions will be held on promoting emerging asset managers and advancing asset ownership reform. As an opening remark, I would like to speak about the government's initiatives toward realizing Japan as a leading asset management center. In December 2023, the government formulated the Asset Management Nation Realization Plan and has been pursuing policies to support sustainable economic growth and increases in household asset income through financial and capital market mechanisms. Specifically, we are looking to see households allocate more funds from savings to investment for stable asset formation. Distributors provide households with diverse asset building options, while asset managers invest funds to achieve the best interests of beneficiaries. Also, companies, we want to see them invest those funds for growth and enhance their corporate value. The benefits of that are then returned to households in the form of asset income, leading to further investment and consumption. So to create such a virtuous cycle of funds, we have implemented various initiatives targeting each participant in the investment chain, including households and corporations. For example, in January 2024, 2 years ago, the new NISA program was launched, and now 1 in 4 Japanese aged 18 and over holds a NISA account. Prime Minister Takaichi last year, shortly after taking office, clearly stated that to realize a strong economy, asset management nation initiatives will be further promoted and developed. So that clear message has been conveyed. Also, recognizing that the power of finance is indispensable for accelerating the growth strategy, a subcommittee headed by Minister Katayama in charge of financial affairs has been established under the newly created Council for Japan's Growth Strategies, and discussions have begun. This subcommittee aims to formulate by this summer a financial strategy that unlocks the potential of the Japanese economy through finance and enhances the well-being of the public. Accordingly, to further advance Japan as an asset management center, it will deliberate enhancing corporate earning power through corporate governance reforms, and to support this, expanding the supply of growth capital through public-private collaboration and strengthening asset owners' functions to ensure the best interests of beneficiaries. So these themes will be discussed at that subcommittee and in other fora. Also, strengthening regional financial capabilities and upgrading payment services that support economic activity are also very important issues. So the range of topics to be discussed is broad, and we intend for the public and private sectors to work closely together toward realizing a strong economy. We think that is important. So let me speak about this forum's themes of fostering emerging asset managers and asset ownership reform. First, initiatives to enhance asset management services aimed at promoting emerging asset managers. Asset managers play a vital role in channeling funds from households and asset owners, such as pension funds, into growth investments at home and abroad, and delivering the benefits back to households. Japan's asset management industry currently manages about 1,000 trillion yen, including investment trusts and pension and insurance assets. This is a threefold increase over the past decade, so a strong growth is continuing. For the asset management industry to continue growing and fulfilling its role in the investment chain, further enhancement of investment capabilities is necessary. To this end, the FSA has formulated the Japanese version of the EMP, the Emerging Asset Manager Program, and is working to encourage new entrants into asset management through regulatory easing and to urge financial institutions to actively utilize emerging managers. One deregulation measure relaxes requirements for organizational setup when emerging managers outsource the middle and back office solutions such as compliance and fund accounting, enabling them to focus on investment management. As a result, skilled asset managers can now enter the market with smaller teams than before. Following amendments to the Financial Instruments and Exchange Act in the 2024 Ordinary Diet Session, 3 firms have been registered as investment management-related service providers eligible to undertake middle and back office operations since the amended law took effect last May. I hear that there are additional firms preparing to apply for registration. This measure has been positively received by overseas asset managers considering entry into the Japanese market, and the FSA will continue to ensure smooth registration procedures.
Another part of deregulation now makes investment managers to outsource investment execution, except for the asset management concept as well as the defining the investment universe. In this relation, in May last year, the law was revised and implemented. As a result, emerging managers can now make use of the fund management companies. In other words, a fund establishment and the administration can be now delegated to the fund management company that are specialized in such an operation, so that the emerging managers can concentrate on the asset management activities, thereby resulting in creation of the new business model. In addition to such deregulation at FSA, for those asset owners as well as financial institutions that are interested in active use of the emerging managers, we are now preparing the list of those emerging managers that could be utilized under collaboration between public and private. And also to the financial institutions, including banks and insurance companies, we are urging them to consider the use of EMs and to encourage those initiatives by the financial institutions. We have been carrying the case studies on the website of FSA, and as of January this year, so far 26 cases have been carried on that website. At FinCity Tokyo, as we understand, they have been organizing EM Showcase since 2023 to focus on emerging managers that have unique management methodologies as well as investment philosophies for the audiences, including financial institutions both within Japan and outside of Japan. Through those efforts among financial institutions, we see some cases where financial institutions now outsourced the operations of the fund management to those EMs that were introduced in EM Showcase to encourage competition among asset managers to upgrade the level of the capacity of the industry. Such a case that I have just introduced would contribute to further utilization of emerging managers by financial institutions. Next, about the reform related to asset owners. There are those asset owners that are managing the asset from the household in the form of pensions as well as insurance. For them to pursue the best benefit for the beneficiaries, the governance as well as risk management have been properly in place. The common principles related to that were formulated in the name of Asset Owner Principles in August 2024. As of the end of January this year, so far 337 entities announced that they accepted those principles. According to this principle, the judgment is not just rely on the brand awareness or the scope, but rather the capacity and experience of the asset managers are expected to be focused on, so that even when the asset manager's track record may be rather short, they should also take into account the experience of those asset managers who have an experience in the previous experiences. And to the emerging managers, we hope that they would actively demonstrate that they are capable of asset management to cater to the need and benefit of the beneficiaries. With that will lead to healthy competition among financial institutions, thereby leading to sustainable growth of the invested the entities, the companies, resulting in virtuous cycle of the fund liquidity. In addition to those that I have shared with you today, there are various cases, initiatives for the realization of the leading center of the asset management. Their such initiatives have been positively evaluated by those stakeholders both within Japan and outside, and hope that they would make contribution to realizing strong economy by way of financial sector by promoting those initiatives related to leading asset management centers. And for that, we need to see further development of the financial sector, especially the asset managers. That means we need the players that are competitive both in terms of quality and quantity compared to their global peers, just like banking institutions and insurance companies, and so that they could become the main pillar of the financial sector. And we would promote such development of this industry in a healthy manner. Therefore, at Asset Managers Association that is going to be launched in April this year, we expect that they would become the organization that can promote healthy development of this industry. And on the part of FSA, we established newly the Asset Management Department July last year. This will be followed by reorganization in summer this year, where we will focus on asset management that is increasing its weight, as well as the strengthened supervision and promotion of activities at insurance companies that are major asset owners as well. For that purpose, the Asset Management and Insurance Supervision Bureau is going to be established. To those from the financial institutions, hope that you would continue to strive for improvement of your management capacity and develop new clients for the products to the customers, and that will lead to improved asset management service in utilizing by way of utilizing emerging managers, and hope that you would continue such endeavor. With the arrival of the numerous emerging managers that are engaged in versatile management methodologies, hope that will lead to increased competition, thereby upgrading the level of the entire industry's capacity. In conclusion, I sincerely hope that today's event is going to be productive to all of you who are here today. With this, I'd like to conclude my opening remarks or the keynote speech. Thank you very much.
伊藤様ありがとうございます。
Mr. Ito, thank you so much. Let's send him off with a big round of applause.
では続きま
Next, we will move on to the introduction of the EM Showcase. Mr. Hidekazu Ishida, Senior Advisor at FinCity Tokyo, please. Let's welcome him with a round of applause. Thank you for the introduction. I'm Senior Advisor at the FinCity Tokyo. My name is Ishida. So I'd like to talk about this year's EM Showcase. This is the third year that we're doing the EM Showcase. So I'm going to give you, to introduce you to the list of the emerging managers. So this EM Showcase, what is it? Let me explain how we select the EMs. So basically, we take the same approach as the previous years. So FSA publishes a list of managers, and also we look at the various databases. And the most important, we look at the websites of each of the managers. So we look at those public information, and we send email to the managers which we deem to have potential. So the EMP of FinCity Tokyo, we call it the EMP, but we don't have any funds to actually invest in them. So we're not an investment program. Investment manager promotion is what we do. So P of EMP stands for promotion. So these are funds that are just starting up. They're very busy. So we contact them with email, and it's not necessarily the case that they would respond with all that's going on. So if we just accept those who apply, that would be adverse selection. And so, I mean, the strong funds, they are working actively on their investment, and I can understand that they would not respond. But we have the independence and entrepreneurship school, and we have various programs to support these organizations. So from early stages of the companies, we are in communication with these entities, and we provide to them our resources and network. And if there are entities that have useful information, we connect them. So through all these activities, we are able to form relationships, and we're seeing more examples of the asset managers contacting us. In compiling this list, especially asset owners that invest in private assets, we receive cooperation from them to introduce many emerging managers to us. So large fund of funds, and we have a lot of information exchange amongst the players. And this year, we received support from the organization supporting SMEs. And for the first time, venture debt fund was introduced or included for the first time. Some people said it's too early, but the startup finance is becoming larger in scale, and they are set to play a more important role as an asset class. and so that's why we included them. So as a result, 20 funds were selected by the committee members, and then we narrowed that down to 16 funds. So this is the EM Showcase 2026 lineup. You see the logos of each of the companies pasted here on their websites, or actually on our website. We have more detailed information in the list of the funds or the managers. So please refer to that information. So to the far left, we have equity and hedge funds. So that's where we really started. That was our initial focus. But the asset management, that is more moving toward private assets. So when we started the EM Showcase, venture capital, buyout, and other new asset classes were also included. So we have these three categories: Japanese equity, venture capital, and buyout, and others. So far left, Japanese equity and hedge funds, we selected three companies. And Camphora, that is engagement funds, and the crossover fund, a small-sized emerging manager, that's a fund note, and then there's the Nezu engagement fund. So those are the three companies. You may be familiar with them. There's Nezu Capital. That's an entity with a long history, so we should not treat them as newcomers. That may be a little impolite, but what is made open to the public is only this engagement fund. So as a company with this Nezu engagement fund, they have embarked on a new beginning. So that is why we have selected them. So this field, 12 companies have been selected last year and 2 years, last year and the year before. So number not so big this year, but there's more interest in Japanese equity, and so there is a lot of new entities being formed, according to the reports. And here are those that have received licenses in Japan. So it's limited to them. So funds established overseas that invest in Japanese equity, how we should cover those funds is something that we like to consider for the future. So for venture capital, we've selected 7. I unfortunately don't have time to go through each one. So later, I hope that you read the profile of each. And there's this big trend: large venture funds, corporate ventures, and government entities. So in those places where they have experienced startup investment and has been successful, they are creating their own funds. We see many such examples. And what was impressive this year is there are people who did M&A in listed companies. So it's a generation of a new generation of management. And as venture capitalists, they have now shifted to become investors. We see such examples. So for domestic technology investment, it's not just for small IPO, so it is more evolved. And I think this is where we see examples of such developments. And finally, buyout and others, we have selected 6 managers as a buyout fund. 3, Renovia, Diaz, and Riva. These are the buyout funds. And there are funds that also invest in listed companies. Growth Partner is one example. And venture debt is a new asset class. And the 2 managers selected for that. And we will hear from some of these. Not all can be on the stage, but they are joining us for the networking. So I hope that there will be opportunities for investors to talk to each of these funds. So EM Showcase, it's not just about selecting each year and then that's it. Rather, we focus on the cumulative 3-year achievements. And this is what we've done in the past 3 years. Some of the funds have been closed. And there are those other funds that are not always open for new investment. So we see some examples of that, but a simple search will reveal that there are managers who have established follow-up funds. And there are many such examples, and I think that's very encouraging. And finally, a question that we get often. I'd like to address that and explain. So EM Showcase, most important, is not about recommending investment. FinCity Tokyo is not an asset manager. So the entities in this list does not reflect our opinions about investment. So in our research, we do not receive materials from the entities that would be available for due diligence. And so each of the investors need to make their own judgments about whether or not to invest in these managers. But you might say the one on the left or one on the top must be superior to others. I'm sure there are many ways to look at this. Actually, it's not so organized. There is no meaning in the order. So it's orderless. There's no meaning in the order in the list. So I talk about using the bird to catch fish. And so it's not the message that the bird is catching a lot of fish. And the asset managers are those who control the birds. And they are providing the funds. And so there's the asset owner principle, talking about fair trading. I think that is what's happening. And also to repeat, EM Showcase is not an exhaustive list. So asset owners, those of you who are here, I would call on you to receive disclosures and Japan Post Insurance. They refer to our activities. So I hope that you do similar things to revitalize the capital market in Japan and provide risk money. That is what I would like to request of you. So that concludes my explanation. Thank you very much.
大きな拍手でお送りください。
Thank you very much. I'd like to extend a big round of applause. Now we'd like to begin EM Showcase presentations by those companies chosen. Now I'd like to invite speakers to the stage. Let us welcome them by a big round of applause.
As
they are coming in, we expect to hear from them about their business in order And then at the end, we'd like to take a commemorative photo with them. Now let me introduce those who are here today. First, from Growth Partners, we have with us Noriatsu Furukawa, President and CEO.
皆様はじめまして、グロースパー
Good morning and how do you do? My name is Furukawa of Growth Partners. We are very much grateful for such a valuable opportunity that is granted to us. I'd like to begin by a brief self-introduction. I was specialized in science. I was interested in space, robotics. Those are the topics that I used to study. For instance, I was trying to develop a robot that will always win in the paper, scissors, and stone competition. And then I joined McKinsey, and I covered about 12 companies in offering consultation, and then joined Advantage Partners. That's an investment company that has a history of about 30 years. And I was there for 12, 13 years. And then, toward the end of my career there, I used to be engaged in hands-on support by investing into listed companies to increase revenue and profit by way of managing number 2 and number 3 funds. And I was also involved in some buyout cases as well. More than 2 years ago, I became independent and created the Growth Partners. And there, I started with a fund to investing into a listed company. And the number 1 fund that was closed with 9.5 billion yen, and we are now making an investment. And also, the second fund that has grown to about 6 billion yen, we are investing into several companies. And you see that our investment universe is quite diverse. We have about a dozen members, and thus the team has also grown as well. About the funds that I have been engaged in, the one at the top, these are the funds that I was involved in the previous the career at the company that I used to work for. The number 1 and number 2 funds that has grown to the size of 17 or 11 billion yen, and now, because I was with McKinsey, I was exposed to those entrepreneurs that were interested in starting their own companies, and therefore I became interested in becoming entrepreneurs as well, to start my own company. That's why I started Growth Partners, and the funds that we started, it has grown as well. And those companies on the top, those are the ones that I was involved in the company that I used to work for. 80 to 90% of them are listed companies. And in terms of the sectors that are quite diverse, including manufacturing, tech, healthcare, and the restaurants. And now, with Growth Partners, we have been also engaged in the investment into diverse sectors, including retail, restaurants, tech, manufacturing, and among others. Together with other funds, cold call or reference to banks as well for sourcing were performed. And in the case of the buyout, we received some references from the intermediary companies. And toward the end of such a phase, we had the one-on-one interviews trying to identify the challenges and issues that we can offer some suggestions or solutions. And in some cases, 3 to 4 projects were launched typically. But in the case of large companies, more than a dozen projects were initiated. So week 1 to week 3, we had the project meeting, and then the final week, we had the management interviews to support various critical decision-making process. That's a typical approach that we have adopted. Members include those from the consultancy as well as financial institutions, and 2-3 members are assigned to each companies, and 80% of the time are used for enhancing the value of the companies that we are focusing on. There are 2 funds. Growth Partners Buyout is one. Right now it is a size of 6 billion, but eventually we aim for 10 to 20 billion with LPs, and the 4th cases are going to be closed. And number 2 fund for listed companies, that's what we'd like to start next year. And we're interested in enhancing the growth net multiple 3 to 4 times. And 9.5 billion being the size of number 1 fund. That includes 6 companies. 3.5 billion yen have been already invested. And in some cases, exit has been already made. And those numbers inside the boxes, they represent the multiples. Well, recently it's about the 2 point some. That's a multiple, and we will continue to pursue exits. I'd like to share with you one case. That's Takakyu. This is a turnaround case. This was a listed company, and in fact we are engaged in supporting listed companies as well as turnaround other cases. We make an investment of 1 to 1.5 billion to companies of various sizes, including 1 to 10 billion. And this is such a case. This is an apparel chain that has a long history, but they were hit hard by COVID pandemic, and that they needed recapitalization, and that's why we decided on investment. On the top right, you see that they are now making a profit, and the share price is now in the process of recovery. So far, the process has been quite smooth. And for the exit, at least the amount close to the principal has been already collected. And in some cases, we asked for the debt waiver amount by the banks, and recapitalization was pursued. This is a gentleman by name of Mr. Icho, who used to be the designer, and he used to serve as the vice president of the apparel companies before joining this Takakyu. So between us and Mr. Ito and his staff, we have been working on these initiatives to make profit, and from now on, they are now coming into the phase of growth. Another case is about the buyout fund. 3 companies are already included, and this month there will be the 4th company. Equity basis that will be 800 to 600 or 200 million, and EV basis the leverage of 40 to 70, therefore 4 billion to 7 billion, and EBITDA the size, a typical size would be like 4 or 5 billion, and the repayment of debt, EBITDA growth, among others, with the entry with a multiple of 3 to 5 have been achieved, and hope that we can make an exit by 8 times, so that we can realize a 3 times the return. And next year, while collecting the results of the exit, we'd like to move on to the next fund. This is another case. This is called Noveyu, centered around Nagoya. That's the company located in the middle of Japan, and they have about 200 salespeople. They are engaged in sales of fiber optics cables to connect households with a fee of 2,000 to 3,000 yen per month. And the fees from the carriers that will be about 100,000 yen per household, so that about 30% EBITDA margin has been achieved. In this case, the improvement of the sales operation, DX support, among others, are the areas that we are looking at. They are also making an investment into solar panel business, the solar power generation. We also give support to them in that function as well. This is a reinvestment by the owners, 80% by us and 20% by owners, and owners still stay as CEO. 70 to 80% of the cases are pursued in such a case, and we want to achieve a larger size exit in the second round. So together with them, we are trying to grow the company with this buyout investment. This case, we started investment about 18 months ago. Though we are making the return, and EBITDA has been growing gradually. And we are interested in exit to a large size companies with us. Lastly, listed companies as well as pipes. Those are the new major investment strategies. And therefore, members engaged in both types of the strategies. And that would offer exciting opportunities for the members as well. Hope that we can make sure that number one fund would make a return, so that will lead to further development of number two and the following funds. Thank you for your attention.
ありがとうございました。拍手でお送りください。
Thank you very much, Furukawa-san. Next, from Deers Capital, we have partner Ms. Eriko Suzuki. Ms. Suzuki, please. Let's greet her with a big round of applause. Hello, this is Eriko Suzuki from Deers Capital. I'm very happy to have this great opportunity, and also thank you for selecting us for the EMP at the FinCity Tokyo. We are a PE buyout fund. I'd like to briefly introduce our fund. As you see on this first page, we are a PE buyout fund focusing on small and mid-cap, and we started last year, and we're working toward closing Fund 1. So small, mid-cap in Japan, we're going to be investing in them. And so we think that there are very attractive factors already. And also we're going to have some unique value up in addition to what the ordinary PE funds do. So really focus on the people, the human resources. That's where we like to strengthen our investee companies. And myself included, we have experts who usually would not be available in buyout funds. These would be human resource professionals that are members of our fund. And so it's briefly mentioned on the left-hand side. I'll go into more detail later. So we have partnerships with two companies, and we have internalized a team based on that. The two companies are quite unique companies. First company is Deers Brain. It provides weddings and HR consulting. And the other company is 3S Capital. That's a consulting firm. And large PEs, or they support the due diligence and PMI to large foreign PEs. And their consultants have joined our team. And the main members, I will go into more detail later, but in addition to myself, Kuramasu was the representative partner, inaugural partner, and he was with CLCSA, now called Sunrise. So he was in a PE buyout for more than 10 years. So there is that track record of his. And at Sunrise, he has been experiencing mid-cap investment. And so he understands the absolute return system, and so we utilize that playbook, and that is incorporated in our approach of human resource focused fund. And this is a simple self-introduction. In the past 10 years or so, I have been engaged in more VC-related investment. Before that, I was in more traditional finance, and the representative partner, Mr. Kuramasu, at the Foreign Investment Bank, I was engaged in M&A and capital market transactions with him. And in the past 10 years, I've been in VC, more impact and sustainability and ESG focused funds. And innovation and the startups, I really continue to support them. But as a minority VC, to work on the value app and the impact and the entity value enhancement, to balance all that, I felt was difficult. So I took this opportunity to work with my former colleague to actually buy the whole company to introduce various reforms, and that's why we started this new fund last year. And this is a brief explanation. So I'd like to go from the right-hand side. It's a very simple thing. Target fund size is 15 billion or so. And the small and mid-cap SMEs in Japan are targets. And we really focus on human resources. So myself and Kuramasu, we have investment track record, and we have experience in retail and service industries. Also, we have strengths in the retail industry, so we're doing Fund 1. And the first investment is service consumer-related business, and we have a strong pipeline. So that is where we'll be focusing. And the target size, well, entity value, several billion yen. We're not a turnaround fund, so we'll be looking for those companies, and we will try to vitalize HR policy. And in looking at the investment sustainability, or does it contribute to women empowerment, in judging our investment, we do not look at those things. So we focus on whether we'll be able to contribute to business growth and whether it's a good company. And then based on that, we provide the HR consulting, and we try to enhance the corporate value. That's our strategy. And so I'd like to move on to the left-hand side. So the core investment members are shown here, the 3 people there. So in addition to Kuramasu, we have Ayako Suzuki, also from Sunrise CLSA, member from that background, and then myself. And of course, for due diligence and for investment execution, there are other members. So from these 2 companies, Deer's Brain and 3S, we summon people on a need basis. And also, we focus on vitalizing HR people to enhance corporate value. So we are looking and focusing on our own people as well, and we want a diverse team. Private equity buyout teams, female investors are quite rare, and so we want to take various measures to make sure. I mean, we have actually many members who have children, and so we have a flexibility, and it's merit-based to enable that. So that is what we are doing. And so these are the 2 companies, very simple explanations. I don't have time, so I'll be very brief. Deer's Brain, Kuramasu invested in that company when he was at the CLSA, so more than 5 years relationship with this company. And Kuramasu invested in various SMEs over 10 years. And he felt that this was the strongest. And so HR vitalization, if other SMEs should focus on that, he was convinced that they would grow much more. And so by collaborating with Deer's Brain, we want to achieve that kind of target. So Deer's Brain is a wedding company, more than 30 wedding venues around Japan. And they have planners who have very strong sales capability. They have the human skills, communication skills, very strong people. And they sell high unit price product, which is weddings, which would be like 4 or 5 million yen. So there are a lot of strong people there, and we're able to provide HR consulting based on that. And 3S, it's really consulting focused on PE funds, so we're able to mobilize the people. It's rather than holding more than a dozen people, internally, we tap on the human resources available at these two companies. And so this is the HR consulting. So they support hiring, like they need a few dozen people. So then they would help to get applications of thousands of people. And also they do training and education for HR. So that's what they've been doing. And I've already talked about this. So just to repeat briefly, we're a PE buyout fund. And so we are in a unique positioning, we think. And so there are many investment themes that are referred to us. And when you talk about funds, I mean, the environment has changed, but selling to a fund, people still consider about that. But we are an entity that focuses on human resources, and we commit to a value up. And with that, we get many referrals and inquiries. And we have the Deer's Brain operating company, and Konishi is a very powerful manager there. So we can learn from senior managers who have done tens of billions. And so SMEs, they are looking to want to form relationships with these companies. So they are coming to us. So we have this unique program to vitalize the people and empower women. And before investment, we don't look at the women empowerment. We focus on return because we're aiming for a triple gross return. But we do due diligence of the organization and the HR. I think you do management interviews, but we focus on whether and how much HR vitalization we can do before we make the final decision. I think that's unique about us. So this is the first investment that we have done. So it's in retail or in service industry. So want to support these companies to hire more people and expand their shops. And so this is a company that we have been investing since last year. It's going well, and we're moving toward the exit in a smooth manner. And finally, some casual photos. So we're a PE fund that's really focused on human resource vitalization. So together with the Deer's Brain, annually we have these big parties. Thousands of people come together and commit to working together toward various missions. So it's not that for all the SMEs we're going to apply the same approach of vitalizing the people. So we're going to apply approaches that's appropriate for each company, each investee, and to help them grow. So thank you very much for this opportunity.
様ありがとうございました。
Thank you, Ms. Suzuki. Next, from D3 LLC, we have a managing partner, Mr. Tomoyo Nagata. Now, let us welcome Mr. Nagata by a big round of applause. Thank you for the introduction. I'm a managing partner of D3 LLC. Tomoya Nagata, thank you for selecting us one of the speakers for giving a sales speech here as emerging managers. And we are very much honored that we were chosen as such a reliable emerging managers. And at the same time, we feel some pressure. Today, besides the introduction of the fund, I'd like to also explain about the background, including the concepts and philosophy. We have 12 minutes, but including my self-introduction, I'd like to start my presentation. We are venture capital. In a nutshell, we want to contribute to the global medical and health originating from Japan. The reason why we are named as D3, there are 3 Ds in innovation, discovery, development, and deployment. What we are focusing on most is about the deployment. And this is the venture capital specialized in healthcare industry. What does it mean? That is to contribute to the health and safety of the funds all over the world. And as a result, that would produce a major financial return, resulting in the major social impact. And now about myself, I wanted to be the specialist in drug discovery. So I love physics, chemistry, and mathematics, but biology is something that I was not quite good at. But that's where I'm currently involved in. And looking back, I think it worked as I was studying the oncology, Alzheimer's disease, and CNS diseases. But during the researchers' the career, I had the concern as I was involved in development of the pharmacology, the simple drug to come up to be produced as a solution to oncology and CNS diseases that are so complicated. Back then, there was an idea behind. Nowadays, that it's different. Also, I was expecting that the healthcare business imperative should drastically change, including the healthcare expenses. We can't afford to produce the new drugs in a limitless manner. And also back then, for researchers and scientists, the more new technologies are developed, the more new options would be there. So at some point of time, the government has to decide which technology would best suit the population, but the government can no longer do that. So it is up to the population to make a choice. In other words, that means the healthcare as a business imperative. And also healthcare as a data science, you might take it for granted. But back then, it was called IT or ITC. With utilization of IT, we expected that the healthcare would eventually change as a result of data science, and therefore I was sure that what I was doing could also change drastically. And that is why I was motivated in working for the consultancy company. And there, I tried to move one step back, trying to think about what is a priority in the world of consulting. In fact, a consulting firm is engaged in a variety of activities. In my case, it was about the growth strategy. And as I said earlier, rather than healthcare per se, I was also looking at the drivers surrounding it, so that telecommunication, retail, among others, are the clients that I used to work for. And then those sectors outside of healthcare were interested in coming into healthcare. That could be by way of M&A, but the valuation is quite high, and therefore the what to do with the CVC and how the investment could be made, those questions were there. And now with the progress of technologies, for leading companies to make use of technology to consider future vision, the working together with the startups was essential. And then The cross-border M&A didn't work back then, and for the new ventures to grow and the growth strategy, that is startups that has a strength in Japan, that was the essential condition. But back then in healthcare, those venture capitals that were performing well didn't exist. Mainly in the US, I would say that the way they were competing with against their peers in the US, that was quite different. Because of that, what if healthcare venture capitals are in short supply? Why not establishing one by myself? Based upon my career, working as a consultant with the background of the researcher, I thought that I lack experience to start at the venture capital. Then the mentors suggested me to once work for the funds in the United States to study. And there were a lot of lessons that I learned, the good news as well as bad news. Starting from bad news, I have to say, the Japanese ventures were not evaluated when we introduced them in Boston. On the other hand, the scientists of the ventures, when they were introduced to the U.S. investment community, they were amazed by the level of technology, meaning that if they are developed well, then they could be competitive in the world. And because of the conviction, I started the company D3. Well, I ended up with a master course, but other members, they have received doctor's degrees, and they were engaged in the postdoctor course, or one of them is the medical doctor. And the Novartis in Europe, he used to be working actively in Novartis. It is rare that such a person comes back to Japan. And originally, I was interested in consultancy, not the fund. And then I came up with those the questions that are written on the left. First is about the market reality. In biohealthcare, go-to-market, that is quite time-consuming as well as costly. So it was not realistic for the startups to be engaged in such a operation. So, as in the U.S., the exit could be the M&A in the case of the startups in the United States. Therefore, I thought we need to nurture the environment to promote M&A in Japan. But then there is the Japan corporate gap. That is, M&A of the startups is rather difficult to achieve due to the less interest by the leading company's top management. In the case of the small-sized startups, the top management would not be interested in. So even when the deal was offered, it didn't work. In fact, I was engaged in such operations since I was with a consultancy firm, and this is what I continued. And then, in 2017, I started consulting for the top management. What kind of startups are the ones that the top management should be interested in? And also, there are other buyout funds like PE and VCs. They don't have state-of-the-art technology or knowledge. In the case of healthcare, that's where we can give a support and also incubation. As I said, I was not interested in starting the fund, but eventually we had to do that. The major reason being our clients, the large company executives requested us to start the fund. Because we are consultancy at the same time researchers, so that would be quite helpful for them if we start the fund. So because of that, we started our own fund, but right after that, we were hit by the pandemic. But so far, the fund that was launched at the same time as the pandemic, actually, it is performing well. First, the solid performance has been achieved. They are growing. In fact, all of them, the 10 companies in a portfolio. And then innovative investment. That's the reason behind the growth. That's because of the deal structure. In some cases, we took a lead in creating a new scheme. The company creation, turnaround, as well as management buyout as well. For instance, there was a case of the affiliated companies of the municipalities. That's what we were engaged in. And also, the biotechnology, that's a global. Therefore, nowadays, those companies that are invested in, with the size of the tens of billions of yen, they tend to be located in overseas, and with the support with the ventures capital from the United States, for instance, we are expanding activities globally. And the fund 2, this was launched last year. Fortunately, it is supported by leading institutional investors. I'm sure that some of them are here today with us. And with such a precious investment, of course, we also have to work on those 3 imperatives. One of them is that, first of all, Japan can contribute to global health. Number 2, healthcare investment. There's financial return and social impact should be compatible, and I'm sure they should be compatible. And in the case of the emerging manager fund, I'm sure that those that made an investment in Fund 1, they were quite ambitious and courageous. And I would like to appreciate their ambition and motivation. Therefore, we want to continue to produce the return, even in the case of the fund that has been sustained for a long time. And I'd like to conclude by saying that we are quite grateful for the opportunity and hope that you would continue to support us. Thank you very much.
では続き
Next presentation is by Mr. Yuki Takenaka, Representative Director, CEO and CIO of Camphora Capital. Let's greet him with a round of applause. Thank you very much for this precious opportunity, and thank you for the introduction. I'm Takenaka from Camphora Capital. So first, I'd like to take this opportunity to thank FinCity Tokyo for providing various forms of support in our operations. In my previous job, when I was thinking of going independent, 2 years ago, I participated in this forum, and I heard from senior industry professionals, and that was very encouraging. And so today I'd like to talk about the investment strategy and why we wanted to start this organization, this firm. So Camphora Capital was established in June 2024 in Tokyo. So we spent about 12 months to get the license for registration for the investment advisor, and also on November 7th last year, we launched our fund, and we received support from institutional investor from North America, and we invest mainly in listed equity in Japan. My personal history is during university, I started I joined the investment circle that was analyzing and investing in a small and medium capped stock, and so I came to really be interested in equity investment. So I joined JP Morgan in the equity research division. I was at the sell side analyst, and then I went to Misaki Capital, very famous for engagement investment. It's an independent investment firm in Japan. So I was there, and then after that I joined Janker Partners, which was based in Hong Kong. So I was in investment research. Janker Partners invested mainly in Asia, but also globally. It was a long-term investor, and so it had very detailed research across various industries. So how much cost and resource do you need to put in to find these hidden insight? And how much return would that generate? That is something that I learned very strongly at that firm. So these are the team members in the photo. The other day, we were able to launch the fund successfully, and we had our first sales or revenue in December. So we had a professional photographer take a picture of us looking more dandy than we usually look. So I opted to post it here. So former JP Morgan, we have COO Sano-san, and also former JP Morgan Yoshida, former Nomura Asset Management, Shima, and myself. It's a very small team of 4 people. So some were seniors in the investment circle at university, and also seniors in my JP Morgan days. So these are people I know well, and I'm very happy that I was able to start our firm together with these people. Before talking about the investment strategy, let me explain why I chose to become independent. Well, I was at Junker Partners. That was a place where I learned so much from investment strategy and also team atmosphere, how to do work, how to do research. In all aspects, I still love that entity. I still respect them as a great investor even today. But I was a hired analyst, so I was calculating the value of companies and having dialogue with the corporate management. And so I felt that why am I talking with managers when I do not have corporate management experience myself? And how can I judge the value of a company, or how can I provide advice to the companies without such experience? So I had this thing that was hanging over my head. So I wanted to be able to take the same perspective as corporate managers in order to discuss at an equal footing. I felt that I needed to establish a team myself, have a product, and look at cash flow, and then I will be able to understand in real terms what it means to be a corporate manager. So I wanted to have that experience, and so I became independent. So currently it's still a very small team of 4 people. It's a very small firm, but in the last 2 short years, we have gone through trial and error, and I was able to learn about corporate management. I think I was able to deepen my understanding about stock companies and the management of them. So let me explain about our strategy. So we focus mainly on listed equities. We don't call ourselves small mid-cap fund, but we mainly focus on them. $10 billion or less in market cap. Those are the companies that we invest in mainly. Our unique characteristic for ourselves is deep research and deep engagement. That's what we say. So based on knowledge of various industries, we do thorough investment research. And based on that, we have constructive dialogue with them. So deep research and deep engagement create a virtuous cycle between that. That is at the core of our investment strategy. In terms of portfolio, it's long bias and a low turnover. So we do concentrated investment on high conviction investment opportunities to generate absolute returns. So before talking more about our strategy, I'd like to explain about the issues that is inherent in Japanese equity investing or market. In the equity market, research of individual companies not receiving too much cost and resources. I think that's an issue in this market, especially in small and mid caps. This is apparent because of liquidity and language issues. Global investors hesitate to do research on them. In the company I used to work with, to understand one industry, they would pay and invite experts to listen to their talk, or we would design consumer surveys ourselves. We would go visit various exhibitions overseas. So that was cost and resources that were being spent, but it's difficult to do that because of liquidity to small and medium-sized companies. And so it's a market where volatility is large, so you need to diversify, and that means you cannot focus too much resource in one company. And I think that holds true for Japanese companies. The operating companies, they don't have a clear understanding of what is the nature of their business, who is the customers, who are the competitors, where is the inventory building up. I think in small-sized companies, the managers rarely have that kind of deep knowledge. And also capital allocation is not done appropriately. There's no CFO, or CFO doesn't have authority, and that leads to cash being accumulated in the balance sheet and goes to excessive investment. So we want to take a strategy that can overcome these issues. So for that, we have deep research and deep engagement. That is what we do. So we do research and understand each industry through thorough research. And if we were to use that just for our investment decision, that would be too costly. So we actively provide the result of our research to the managers. So we monetize our insight, and that helps to win confidence of the managers, and that leads to constructive engagement in the future. So we focus on capital allocation when we do engagement. So that is our big policy. Let me explain where our company name comes from. Camphora Capital. Camphora is the name of a tree, and so they say learning over long term in a steady manner is what the camphor tree is. And also camphor is to sort of vitalize, and so want to take our insight and support the companies, want to be the camphor to support these companies to grow our clients' assets over the long term, like a camphor tree. So that's why we chose this name. So looking at the Japanese equity market, what's the current situation? Let me explain that. Past several years, investments have been done, and there's been initiatives by the government and activists coming in, and I think that there's been great improvement in the Japanese equity market. But compared to other advanced markets in the Western nations, Japanese equity market still has low valuation. I think that is the reality. Especially for the small and medium-sized equity market, in terms of market cap, 2 billion or less. In that area, still 40% of the companies have PB ratio of 1 or lower. And if you look at the companies, it's not that they have poor operation. The main issue is a poor capital allocation leading to accumulated cash on the balance sheet, and that's not appreciated by the market. That's what happens often. So with our deep research and deep engagement, there is a huge investment opportunity. And when we have dialogue with managers, we really focus on the capital allocation. So we share information with the company, and then we discuss what should be the appropriate capex, and how much cash they should hold, how much they should return to the shareholders. So we provide capital allocation advice from a multifaceted perspective. So we're still a new manager, but through deep research and deep engagement, We want to assist and contribute to the investors, the operating companies, and the Japanese economy as a whole. We're going to do our best with our team members. So I ask for your continued support. I thank you very much for listening to my presentation. Takenaka-san, thank you so much. Let's give him a big round of applause.
では続きまして
Next, we have with us Nobuhiro Maekawa, the CEO of Funds Startups. Good morning. Thank you for the great opportunity that is granted to us. I'm Maekawa of Funds Startups. I'm the last speaker. I'm sure that by now you are rather tired of listening to the presentations about myself as well as the fund. I would say that it has some unique characteristics, and therefore, including what we're doing as well as financial products that we are dealing in. Hope that you would raise your awareness about that, and hope that you would be interested in working with us. First, introduction of the fund, and then the history as well as the philosophy. So there will be two parts. About myself. I said earlier that I have somewhat unique characteristics. I don't have a background as a financial sector. In fact, I dropped out from the university, and then I joined the startups. And then within the startups, I acted as a CFO to bring that company close to the level of the listing. And then the fintech company that I joined didn't have a sales at all, and right now I act as a CFO there. And that's how I have been engaged in financing. Therefore, my background grew out of the working for the startups, and I was always faced with the question of what we could do, how we can overcome issues as a startups. And as I wanted to explore the potential of the startups and also the economic value of the startups in Japan is something that I wanted to prove and demonstrate. So besides the CFO activities, I have been engaged in various the conferences from the planning stage, as well as some government-sponsored committees related to startups. So anyway, the one I have been focusing on is about startups through those activities. And with that as a background, when we consider financing in startups, I would say that environment is not the ideal for startups yet. And there may be the cases where if we had some means or tools, then we kind of made a major improvement. So starting from thinking about the role of the financing, eventually I wanted to develop the new financial products as well. First, the venture debt fund is what we are managing. Then so far, what we have heard about is about the equity fund. In that case, it is about the debt financing. In March 2024, it was established, and 3.8 billion yen, that was at the time of their final close. It was a #1 fund. And the venture debt fund, there is already the track record overseas, but in Japan, the market has just launched recently. Therefore, to those investors that joined us in this fund, we wish to express appreciation, especially the financial institutions. Offering risk money to startups is one of the important part of their business, and therefore we are working with them, trying to expand the funding sources that could be available. Sorry, this is somewhat a busy slide. Those three on the top, on the left, they are partners, and then they are engaged in investment, and then advisory board on the right. We started #1 fund but we are interested in the background. We have wide variety of people, CFOs, VCs, buyout funds, turnaround funds. Those are the experiences, as well as those that were engaged in banks, as well as the due diligence, among others, accountants as well, the equity investors that used to invest in listed shares. So that represents a wide variety of background of the people that are in our team. So the first we have to have the expertise on debt, and at the same time have to have a knowledge about equity so that we can improve alpha. That's how we started our team. In the investment consideration process, we have a history of about 18 months. 350 companies were included in the candidate. And right now we are investing into 15 of them. Whether it is high or low may be a question, but as a debt fund, I would say that we are quite selective in deciding on the companies that we invest for. What we are focusing on the right, that's reproducibility and efficiency. In other words, we are close to mezzanine with a debt fund and a venture debt fund, and what we should look at. And what about the equities? We have to look at both sides, and therefore we have to have a high origination skill. If it is to be decided by subjective judgment made by the members, that would not be sufficient. And that is why we mobilize those people with a professional expertise. We see that AI is currently introduced in those investment activities. In a way, I would say that our approach is somewhat closer to that. We have a scoring model comprising 35 items, and the debt-related scores to measure the risk, and then the equity-related scores to represent upside potential, and how we can visualize the risks that are there. And then we also utilize AI as well in considering the companies that we invest for with reproducibility and efficiency. This is the portfolio of number one fund, the deep tech. That's one area that we're interested in. And we came to full investment with 4 billion yen, and we are now moving on to the next phase. As I said earlier, besides investment activities, within Japan especially, the venture debt market is what we'd like to create together with the financial institutions. And therefore, we are working together with the Banking Association to realize sustainable venture debt market. Now moving on to the history as well as the background, the philosophy. When we started this company, the mission that I identified as such, the startup to create a social impact which can achieve the most ideal growth, and I wanted to create such a scheme to realize as such. It was since around 2013 that such the activities started in this sector, with a track record that has been quite the rich. On the other hand, we are faced with a changing environment, and uncertainties about the future of startups are currently under discussion. On the other hand, if you take a look at each individual startups, some of them are splendid, wonderful, as we heard from other speakers. In fact, they have technologies that Japan can offer for contributing to the world. At the same time, whether there is a financial infrastructure or not for them to be launched into the global market, this is the area that we can further make an improvement, further refine it, and create a new financial environment to encourage the startups. The one keyword is that as a venture debt player, what we consider as most important is that eventually we want to be the startup specialized investment bank. The refined, sophisticated financial professionals expertise should be there to support startups. And recent the market development indicates the areas that we should focus on. I'm sure you are familiar with them. Compared to the United States, labor market in Japan is yet to grow in terms of changing development. The listing criteria at TSE was revised. And deep tech, recently, together with the risk management, deep tech is increasing its weight in risk management, and yet that is yet to be fully developed. And therefore, I have to say that we have limitless number of risks that we are faced with, and that's where we want to offer solutions to. You might have heard about the venture debt, but some of you may not be familiar with that, and therefore, I'd like to share with you what it is. The venture debt, that's a kind of the financial the instrument. The return has a kind of equity nature, even when we make an investment in debt. What does it represent? In the case of the startup financing market, it was mainly by way of the equity, and once they grow, then they could receive a loan from the banks or financial institutions. So it was well established, but on the other hand, there was a kind of the single approach. But in some cases, the undesirable exit, undesirable the financing sourcing are faced with by those startups, and therefore we want to be acting in the mezzanine, so to speak, to bridge those two, so that the startups that failed to proceed or advance further could overcome those issues and move forward. And it could be the equity or share assignment, the attached CBs and others, so that the equity return could be secured and the risk could be lower in the case of the interest rate to be secured. Those are the ways to ensure the return. The debt represents about 30% of the equity market. In fact, that's what we see in Japan as well. Since 2021, the market has grown sharply. And looking at the U.S. market, venture debt has a major growth potential in 2025. It was the year with the highest venture debt the financing made available in the past 15 years. And we are seeing increasing number of players joining. And yet, only a handful of players are there and the venture debt funds. Therefore, I would say we are one of the first penguins. And through this market, we want to ensure the return and offer a variety of solutions to startups. Lastly, with the venture debt, especially for those startups in the middle to later stage, we want to offer new options for financing. And this could be the very important the financing solutions. It has established a track record in overseas, but I would say that this is a market that was just started. The venture debt has to be sustainable, and therefore we engaged in the development of the models that are reproducible, trying to create a track record. Starting this year, there will be the launch of the fund, number 2 fund, and hope that my presentation helped you becoming interested in venture debt fund. Thank you for your time. Thank you very much, Maekawa-san. Now, I'd like to invite all the speakers of this EM showcase to take a commemorative photo. And from here on, Hiroshi Nakaso, the chairman of FinCity Tokyo rather, would join us on the stage.
では皆様ステージ中央へお願いいたします。 はい、それではお並びいただきましたらカメラへ。
So please look at the camera.
皆様笑顔でお願いいたします。
Please smile.
ありがとうございました。記念撮影以上になり。
Thank you. So you've taken the group photo. Let's give them another big round of applause. Thank you so much.
はい、皆様もご参加いただきました。
And thank you all for joining us for this session. We're going to take a break now. Coffee is available in the foyer. Please enjoy them. We will resume at 10:55. Please be back in your seats by that time. Thank you. We will start shortly. Please return to your seat. Thank you for waiting. It's time. Let us resume the session. We're going to start panel discussion 1. Let's have the panelists come up onto the stage. Let's welcome them with a big round of applause.
So
please be seated. I'm going to hand the mic over to the moderator, consultant at Visual Alpha, Ms. Scarlett Lee.
Thank you. Good morning, everyone, and welcome to the Global Asset Owner Panel. I'm Scarlett Lee, a project consultant on the Tokyo Emerging Manager Program. From our conversations with allocators across different regions and structures, one thing comes up again and again. Family offices tend to be some of the most natural and well-aligned partners for Japanese emerging managers. Family offices are not simply smaller versions of institutional investors. They operate with different incentives, more flexibility around ticket size, different risk appetites and time horizon, and often different governance frameworks. All of that shapes how allocation decisions are made, especially when it comes to emerging managers. We're very pleased today to be joined by a group of allocators with quite distinct perspectives. We have 3 family offices, Chartwell from Hong Kong, Qatar Holdings from Singapore, Lupop Stevens from New York, alongside TIFF, a $10 billion US OCIO serving endowment clients under strict fiduciary duty. That allows us to take a look at both sides of the allocator landscape and see where views align and where they genuinely differ. I'll start by asking each of them to take a minute to introduce themselves and their mandates for Japan. Then we'll move into why Japan, why emerging managers, and how these allocation decisions are made in practice. Our hope is that today's discussion gives you a clearer view of how sophisticated, global-minded allocators think about decision-making, partnerships, and capital allocation. And with that, Daniel, please.
Hi, I'm Daniel Jim. I represent Chartwell Family Partners from Hong Kong. So we are a cluster of 6 rather old families in Hong Kong. We mostly promote advocacy, and then we're trying to make an impact with the investment that we do.
Hi, it's a pleasure to be here. I'm Leo. I represent a single family office based in Singapore. We run a multi-asset strategy across both public and private markets. The principal actually made his wealth from investing, so we approach all our investments through those lens. A lot of our exposure is in the US and India, and in recent times, because of what's happening in the US, we are looking to diversify away from it.
Good afternoon, everybody. My name is Kei Mikishi, and I represent a New York City-based single-family office started by a former hedge fund manager, Peter Lupoff. My mandate is in impact investing, and I specifically diligence our early-stage venture deals. Our portfolio strategy is pretty split between equities, and we're also in fixed income, bonds, but we're also LPs in various hedge funds. And I diligence our venture deals mainly as passive LP investors into third-party fund managers and opportunistically into directs. My principal is also a partner at a multifamily office that has invested in a Japanese hedge fund that has done well. And likewise, for diversification purposes, we're always looking at different opportunities.
Hello, everyone. I'm Julia Zhen from TIF Investment Management. We are a outsourced chief investment officer, OCIO business, based in the United States. We have an excellent board with CIOs from Harvard University, University of Virginia, University of Washington, Gates Foundation, MacArthur Foundation. We serve primarily US-based endowments and foundations. We also have family office clients. I am from the public equities team, but we invest across public equities, hedge funds, and private markets.
Thank you all. That's very helpful context. So let me start with a broader question. Why are emerging managers important to your portfolio, and how do they align with your broader investment objectives? So Daniel, during last year's panel discussion, you mentioned for Chartwell, it's about capital perseverance, diversification, and making that social impact. Kei and Leo, does that ring true with you? Okay, perhaps we start with you.
Sure. Yes, like I mentioned, my mandate is impact investing for early stage venture. And so emerging managers is part of our strategy because we feel like we can make that impact the more upstream we go. That said, we're also LPs in established hedge funds, quite large ones that everybody in this room would know. But again, the mandate of the family that I represent, and each family is very different amongst the family office community, cares about making that social impact, which is defined loosely as anything positively impacting people and planet. So if a fund manager or founder is self-proclaiming that their company or fund is doing something that is positively impacting people and planet, we'll take a look at that. And so for those reasons, for example, we did a EM, we invested in 2 EMs in early stage venture last year. One was in ag tech and food, and then another was more general. And so we're using that, again, we believe in the managers and also to diversify how we're making that impact. We believe food and ag is a good nexus of people and planet. We're helping to innovate in the food supply chain system. At the same time, food and agriculture is a big impact on climate. And so we feel like that for those reasons, it kind of hits at the nexus of impact. And then another generalist impact, which is an early stage emerging manager that invests in the top Ivy League school entrepreneurs across the US. And so that's another way we find to diversify how the family wants to make impact.
Leo, how about you?
Yeah, so we are, so the family is very returns focused. So we care a lot about returns. And in our experience, and also the data has shown that emerging managers actually do outperform. In private markets, I think it's very obvious. A lot of fund ones do a lot better than fund 2s and 3s. So we actually do have a habit of backing a lot of fund ones, managers who have never done this before, or managers who have actually struck out from a larger institution. In public markets, we like smaller funds because they can concentrate on very niche strategies, very high conviction, smaller position, smaller portfolio, but very high conviction in all these positions. And this is the kind of things that resonate with us because we run our own public book too, and we run a very high conviction book, right? We have a very long-term perspective, but our book is very concentrated in US and India. So for us, the mandate is to look for managers who invest outside of these regions, and we try to look for managers which are smaller and have more niche strategies.
And Julia, I might bring you in here as well. So how does emerging manager allocation look different for smaller endowments compared with larger institutions?
Well, similar to Leo, for my portfolio, we look for the highest risk-adjusted returns. And I was at Dr. Ishida's presentation this morning, and he mentioned for FinCity to select managers, you look for novelty or innovation. Similar for us, we think emerging managers, they could be more innovative, and with innovation that comes with a competitive advantage that they bring to our portfolio. And for our portfolio, we run fund of funds, and so every client gets the same allocation to emerging managers, and they are a very significant part of our public equities book.
Got it. And then the next question is something we get asked quite often by Japanese emerging managers. When you are evaluating opportunities, do you apply minimum return or liquidity requirements? And do you approach managers with little or no track record differently? Julia, from an OCIO perspective, how do return and liquidity thresholds come into play in the context of emerging manager investments?
Right, we do not have hard requirements on track record or years of history, so on and so forth. However, we run several different kinds of fund of funds. One is a daily liquid mutual fund, 40 Act compliant in the United States, and for that we look for daily liquidity in managers. And so if any emerging manager, they are flexible in terms of negotiating terms with us and they would offer daily liquidity, that would be an advantage for them to work with us. But otherwise, we also are flexible on liquidity terms for our flagship funds. So annual liquidity or with a 3-year lock, it could work for us as well.
And I suspect this may be one area where family offices and institutional investors take slightly different views. So Daniel, how do you think about this at Chartwell from a portfolio construction standpoint? Is there more room for judgments from a family office perspective?
You're talking about liquidity and then the other requirements.
The minimum requirements or track record.
I think in line with what Leo is saying, right? By definition, if you're going into an emerging manager, you are actually looking for them being very niche. So by definition, the liquidity requirement, and then also even the size, has to be more flexible. Sometimes I think it is not necessarily you have to do a totally different strategy. Because honestly, it is not easy to innovate, especially if you're doing the public markets. But then don't underestimate the edge that you can get by doing actually a very liquid strategy, but being small and nimble. Especially nowadays in the hedge fund space, as we all know, is very much dominated by the multi-manager platforms. But we also know, basically, they only operate in a certain space, especially if you're looking into the equity markets. You know very well there are names that they won't touch because it won't move a needle for any one of them. And that's your edge, that's your niche, right? So I think sometimes don't force yourself too hard to say, oh, I have to come up with something very different. It is just sometimes going back to the space that everybody is in. It may look crowded, but just exactly because you can make a difference. And then that you can actually, I will even say, take advantage of the big boys when they are probably on the other side of the trade.
What about ticket size? Do you have a minimum ticket size for these managers? Because when we talk to some of the larger platforms, they usually say, oh, our minimum ticket size is 10 million US, for example, or even 50 if it's public equities, because their platform is so big and they have to justify the time and the work and the resources being put into studying one manager before making that investment. So is that where family office can be a bit more flexible?
Oh, certainly. I think it's related to, if you're running a niche strategy, by definition, your capacity is quite limited, right? So in the sense that I won't expect you to ask for a very high minimum ticket. Typical families that we worked with, we go with whatever minimum you ask for, and then we build it up from there. Because you need some time to gain the confidence, and then you need also some time to get to know each other. Because we look at them as a business partner of ours. If I make an allocation, I would like to stay there forever, right? If not, then, I will be very busy every year trying to recycle my portfolio. So that's probably the way how we look at it.
And Kay, you're the VC guru in the room. So from a private market standpoint, how do you think about return and liquidity trade-offs at that stage?
Sure. Well, that's very kind of you to say I'm a guru. I wouldn't consider myself a guru. So as you all know, VC is a long-term game, right? And so we're not expecting the lockups, the time horizon. We're mixing that in our overall portfolio mix. And so VC allocation is a small percentage of our total allocation. And so the way we look at it is that we're LPs, as I mentioned before, in various hedge funds, which we see as offering us the ballast and the liquidity to be more intentional with some of our longer term horizon investments like VC or various individual companies that we're investing in. And so with that, right, we are still looking for the return target profile for that asset class. Because we're locking up our capital for a longer term horizon, we are looking for the relative returns for the time that our capital is locked up. And then, we're also in various private equity funds. We have investments in private credit. And so the way we look at it is not just a specific asset class like VC in itself, but a total balance of our portfolio and ensuring, I think Daniel mentioned it before too, not just preservation, but, we're not super aggressive in growth. And so we can, still looking for target returns, but be a little bit more flexible in our expectations if the allocation is being invested into impact-driven causes as well. That's not to say that we're foregoing returns. Obviously, the family office was run by an individual that made wealth through hedge funds, through investments and smart investments. And so we are still looking for returns. But our philosophy is that we can make impact investments into good managers doing good things in the world and make a return as well. That's sort of how we look at venture and returns and liquidity, more so holistically as a portfolio and sort of the blended return versus just that pure asset class.
Got it. What about you, Leo? How do you think about that themes at your family office?
So venture is interesting for us because we actually invest a lot in venture, and we do a lot of early stage. We invest from early stage all the way to growth, to secondaries. The principal, because he started, he got his wealth from investing, and a lot of it is through investing in early stage venture. So until today, we still have a very long history. And then the culture is to do a lot of directs, both through managers and investing in managers and doing co-investments with managers. So I'd say that for emerging managers who are in the venture space, it's very, very different because for first-time funds, where if you're in early stage venture versus a first-time fund in growth ventures, the skill set is extremely different. Like the deal flow is super important for you if you're trying to start the fund in the growth stage. And for the early stage investors, we actually do look out for managers who have a very non-consensus type of investing mind, because we think that's extremely important for early stage venture. Someone who can really look at businesses outside of the box. In terms of liquidity constraints, we actually do like capacity constrained managers because, like Daniel said, these are the kind of managers who can execute on very niche strategies. Right? Once you get to a certain size, you tend to lose that ability to deliver the alpha from these kind of strategies. So for a lot of our managers, we do not encourage them to increase their size too quickly. We encourage them to grow into it through performance.
It's very encouraging to hear that our allocators don't really only just look at the track records. So perhaps we can build on that by talking about convictions. So when you first meet an emerging managers, what makes you think this is someone that we want to grow with over the next 3 to 5 years? And what are some of the more common mistakes that emerging managers make when pitching to asset owners? So Leo, you meet with hundreds of managers around the world every year. What's your take on this question?
So we think about it in terms of if you're an emerging manager, not only are you a fund manager, you're also a founder, right? So this is your startup, and you need to have that hustle. You need to be very focused on what you're trying to achieve. So we've met some first-time managers who care a lot about their strategy, care a lot about how they're going to invest, but they don't give enough thought about the processes. And for us, it's very important to have that institutional intent from day one, right? You need to have that transparency, you need to have compliance. All of this needs to be settled, okay? We care about that as much as we care about your strategy. And I think one of the most common mistakes I've seen from emerging managers is trying to oversell themselves and trying to grow the AUM too quickly, targeting institutions from day one. I mean, you are a first-time fund. I do not know how institutions operate that well, but I think if they're going to write a 20 million check, there are some checks that they need to pass before you get there. So be focused on the process, care a lot about your company, which is the management company that you're starting. You are a founder, right? And treat it that way.
So show your drive and have all the infrastructure in place. Daniel, how does that compare from a multifamily office perspective?
Actually, I echo what Leo had said. I think, one thing which is always a challenge I can understand for an emerging manager is that, just like what Leo is saying, you're actually running a startup, right? And so from what used to be that you are the star portfolio manager wherever you were before starting it, now you're suddenly sitting here, investing is actually become the second priority. Your first priority is to keep this business going. The challenge a lot of the times is that not that many of these managers like to run the business. But it's very early, you can't afford to have somebody that are very good at running a business to come in as a partner. And even if there's such a person, they may not want to join. So I think that's really a challenge I see for most emerging managers, is that it's getting to a point that you probably really need quite a good war chest to keep you there for a few years for you to sell through. I mean, like what Leo is saying, for most of the people, it's very difficult for them to write you a ticket, the first time they met you. They're just going to track you, they're just going to see you delivering what you're actually telling them to build up the trust. But by the time that they're ready to write a ticket, you may not be in business anymore because you're running out of cash flows. So I think that's always the challenge. I don't really have an answer to that, to be very honest with you, and I think that's why you see a lot of people now rather just join the platform, because if you just want to run money, a platform is probably an easier place for you to, number one, satisfy, what you'd really like to do, and number two, obviously, you still make a good living out of it.
So have that grit and just keep the communication channel open with the allocator. What about the mistakes that you've seen from these emerging managers who pitch to you, other than just have that initial meeting and then lose contact? What are other mistakes that you've seen? Can you give us some more examples, Daniel?
A little bit related to what I was just saying, I think, remember, you are there trying to look for a partner. But then also you are there to deliver, what you're promising them, meaning some sort of return guidance and a certain risk level. they don't have any obligation to make sure that you are successful. So, you have to find the right balance and not being too keen. Sometimes manager comes in is as if, well, I've been talking to you already for the third time, why don't you write me a ticket? And sometimes, unfortunately, that the track record is just not there again, or maybe you are just doing things slightly different from what you were telling me before. I think one example I can quote, it's especially for the last 2 years, you see a lot of managers doing very well. So imagine a fund just launched a year ago or 2 years ago, and then suddenly they make like 40%, 50%, 60% a year. And then, so they're very keen. They say, oh, Daniel, do you think now that you guys can write me a ticket? But then I was asking the question, but when you started, you were telling me you're guiding me 10 to 15 a year. So what happened in the last 2 years? How do you explain the big difference of your return? I mean, a lot of people thought that losing money is a bad thing. But I can also tell you, if you make too much money, or it is like so different from what you were guiding me, I can't just doubt, whether you were taking the same risk level that you were actually telling me. So I think that has to be quite careful when you communicate that. Just don't try to be too eager. The more eager you are, they say, oh, when can we meet again? Let me tell you how we make all this money. The more you're doing it, that actually you're pushing away somebody. Let the numbers do the talking. And then just be very consistent, deliver what it says on the tin. And then every now and then, just make sure that they're aware of the performances. And then one day, they will come back and knock at your door. Yeah, it's a long wait sometimes. I've seen people tracking a manager for 10 years before they allocate. But imagine if the manager is still there after 10 years, chances are that when they want to allocate, the manager probably closed already, as in not taking new money, right? So that's always, and allocators are very aware of that. So that's always the balance that one has to strive.
Thank you. Okay, when you meet VC funds, what makes you click, and what's a red flag immediately there? Can you share a bit more about when you meet VC funds, what do you look at?
Sure. I guess to add something a little bit different perspective, I'm a former operator. And so similarly, in terms of, is this somebody that I want to partner with as an LP investor, but also as a founder and operator, is this a manager that I would want to partner with 5, 10 years to the duration of the company, right? So looking at it from that perspective as well, I think is really important. And really, how VCs can add value to early stage companies is by helping with sales and business development, right? I mean, the startup should be coming with the product, that's the IP that has basically birthed the startup to begin with, so that the team should have that, right, as the core and not outsource that. But what they can outsource, or what they can ask for help with, is commercialization and business development. And so when I look at VC managers, I'm looking at their network, I'm looking at how proactive they are. Are they reaching out? Are they the type of person that a founder and operator would want on their team to sell their company, right? So they're not just selling me on their fund, but they're also going to be selling their portfolio companies to other VC managers, to other potential customers as well. So I'm looking at, can they be a good representation of their portfolio company and truly add value? I think, it's not so much a red flag, but I get the same picture all the time, right? So we actually add value, we have a great network, okay, great. But digging into that is, can you show me tangible results or case studies where you actually added value to your portfolio company? Were you out there as the sales force, as a true partner to your founders? Were you able to get clients? What does your network look like? How active are you as a manager? Not just going around raising money, but actually kind of being part of the team to your portfolio companies. So those are all things that I personally look at, not just from the LP side, but looking at it from the perspective as a former operator myself, right? Is this somebody that I would want representing my startup and being able to really be a true partner and help my startup grow, especially in the early days, because you just have an idea, right? It's a very nascent stage. And so you need as much help in the beginning as possible to get the early customers, to get early conviction from the public, from your industry. to be able to kind of help get it to the next stage. And also, too, again, do you have a VC network as well to sell? And you know, VC is kind of like a markup game, right? You need to constantly, once you start raising money, there's a couple of different paths that you want to take, but in terms of higher valuations, right, can you sell it to other fund managers as well? So I think those are key things that I personally look at.
And Julia, given that many of the managers in your portfolio began as emerging managers, you've seen this play out over time. And where do emerging managers still tend to outperform our larger platforms, and where do more established firms still hold a clear advantage?
I think Daniel and Leo both mentioned they like niche strategies. I think when an emerging manager is in a niche market, a newer part of the market where they have a differentiated process, it tends to be capacity constrained. Or, for instance, we know in Japan these days in the equity markets, activism is a very popular theme. And many activist funds focus on microcap or small cap, mid-cap companies, where if you run a $10 billion fund, it will be hard to deploy. And here is where perhaps some lower AUM emergent managers would have an advantage. On the other hand, I also work with a lot of systematic or quantitative investment managers, and we know that machine learning and AI, artificial intelligence, are emerging tools for many systematic managers. Here, you need a huge infrastructure and big investments in CapEx in order to build the systems you need to run the strategy. And perhaps here is where existing large incumbents may still have an advantage versus smaller emerging managers.
I think that nicely captures the balance between scale, conviction, and discipline. So I want to end with one final question for all of you. Could you each share an example of an emerging manager investment that started small but went to become genuinely transformational to your portfolio, and perhaps why it worked? Okay, maybe we can start with you.
Sure. Again, early stage VC is a long-term game, and we recently made our allocation, so it's still too early to say whether it's a financial success or not. But a couple of the key factors: yes, this was an emerging manager. Yes, it was Fund 1. At the same time, this manager, she had a strong track record at a Tier 1 financial institution. So that was a green flag for us. Second green flag for us was that she was a subsidiary fund of a larger institution that had over $1 billion AUM and had over a 10-year track record. And so she was able to outsource a lot of the back office type of legality and fund structure set up, and really focus on really fundraising and investing in the managers and adding value. So we saw that as her time was more allocated, we were giving her the dollars, not back office staff dollars, right? A lot of that was sort of outsourced. And the success there, I think, was she was able to close her fund, and now she's raising a fund 2, and her portfolio seems to be doing well. So again, still too early to tell whether in generally it's a success or not, but again, we're looking at that as being a partner, and you know, I think there's some wins there already.
Daniel.
Yeah, for me, the one manager that I made, you know, during my career, the biggest allocation was made over a time of 15 years. When I first met the person, you know, what he strikes me is that he's really passionate about what he's doing, and there was no mentioning at all of raising money. And then we kept in touch. He was based in London, and then every year, you know, either he's in town or when I was traveling over there, we always meet up, and again, always talking about markets, stocks, never about fundraising. And over the years, I started to make allocation, and then again, never about, oh, when will you top up and things, but then, you know what? It's just becoming very natural for me to allocate over the years. So yeah, that's my little story.
And how transformational has it been to your portfolio? Did it change the way you think about allocating to emerging managers?
Oh, certainly. I mean, obviously, this occurred at the beginning of my career as an allocator as well. Then, of course, I learned a lot, with this manager, and then, it's just natural that I will always use that as sort of a sample when I'm meeting similar manager. But unfortunately, it's that talents like that are difficult to find. It's just, unfortunately, I never managed to repeat anything like that after. And then it was just basically luck in a certain way when I first met him. But again, I think going back to the point that I was trying to make earlier, you have to be in this game for the long haul, right? This is not a quick fix. This is not like, oh, I strike gold, good years, and then I get the money and I run. Nowadays, allocators can see through you. It's not as easy as before. It's like, oh, some cheap beta to get, and let's do the trade.
So consistency is the key. What about you, Leo?
Okay, so
a success story, why it's transformational to your portfolio?
Okay, transformational is a huge word. So let's just say it was very beneficial to our bottom line.
Sure.
So there is a very small VC, first-time VC that we backed. It was really small because they only raised, I think, around 16 million. One of the reasons why is I think they did not check a lot of boxes for a lot of investors because they were investing in Southeast Asia and they were investing in the US, right? Which I think a lot of investors were like, what are you? Are you a Southeast Asian fund? Are you a US VC fund? Get out my door. But for us, we did diligence on them and we really liked their network. And we believe that their deal sourcing funnel was really strong, so we backed them. One interesting thing that emerged from that was that in early 2023, they were doing diligence on another company in the AI space. And when they flew into town, we had a meeting with them. And one of the good things about emerging managers of this size is that they can spend a lot of time with LPs, talking to us about what they've done, talking to us about the kind of meetings they've had. They can spend like 3 hours with us and it's not a problem. So we like that. So they actually highlighted to us that in the US, there was a huge shortage of GPUs. So this kind of connected with us because we were doing a lot of diligence on a public book on NVIDIA at that time. And it really helped us triangulate and that, we started a big position in NVIDIA and, obviously that has done really well. I wouldn't say entirely due to this manager, but he really fed us information that was not publicly available information. In fact, I think we spoke to him in like March or April, and only in August or September was there news in the public that there was a GPU shortage, which caused like the stock price to go up. So this is an example of how these small niche managers with insights and with good deal flow can provide value.
Thank you. And Julia?
Right. So at TIFF, we like specialists. So I'll give an example of a sector specialist that I think helped transform our portfolio. It's called Strategy Capital. It's a public equities investor in global technology sector based in San Francisco. The CIO of the firm, Dr. Hamilton Helmer, he used to be a Stanford University Graduate School of Business professor, and he has written a book called 7 Powers that explains his investment philosophy. One of my colleagues read the book and then discovered, oh, this professor actually runs an investment management company as well, and that's how we discovered this manager and invested. And we like it because it has a proprietary investment philosophy and process. And Professor Hamilton Helmer also has connections in Silicon Valley and introduced us to many founders in Silicon Valley and CEOs of big publicly listed companies. So we think he also has a network advantage. And bringing it back to Japan, we also like country specialists. So we think it's very difficult for, say, a 40-year-old hedge fund manager sitting in the office in New York or London to invest well in Japan, who doesn't even speak Japanese. How can this person get a meeting with a 65-year-old CEO of a Japanese company and tell the CEO what to do, right? And so we are looking for country specialists in Japan, and I want to give a shout out to the CIO of Confora, who was presenting earlier this morning, Takinaka-san. I think managers, emerging managers like him, who understands the unique culture of a country like Japan and the corporate culture, the product and service differentiation, so on and so forth. That's very important for any allocator. And I think it's emerging managers like him who will be transformative to global allocators' portfolios in the future.
Thank you. I think that's a very encouraging note to all the Japanese emerging managers in the room today, and the most fitting point on which to conclude the panel today. Thank you to all our panelists for open and thoughtful discussion. Please join me in giving them a round of applause.
モデレーター
So our panelists will be joining the lunch networking session at 12:25, and I encourage you to continue the conversation there. On behalf of Visual Alpha, FinCity Tokyo, and the Tokyo Metropolitan Government, thank you for joining us today.
モデレーター登壇者の皆様
To the moderator and all the panelists, thank you very much for your contribution. We'd like to express appreciation in the usual way. Thank you. Now we have another panel discussion. I'd like to take some time in rearranging the stage, so please be patient.
We will now start panel discussion 2. I'd like to ask the panelists to come up onto the stage. Let's greet them with a big round of applause.
So
now you're all on stage. So I would like to ask Mr. Shinya Tsujimoto, Representative Director of Kashiwa Research Institute, to moderate the session. Mr. Tsujimoto, please. Thank you very much. I'm Tsujimoto from Kashiwa Research Institute. I will serve as the moderator. Today's theme is about EMP. So we have EMs and asset owners, and we'd like to have a discussion. EMP starting to take root and spread, but I think the situation is that not much investment has actually been made. So let's look at the current status and the future outlook. So first, I'd like to ask each of the panelists to do a self-introduction and also talk about their involvement in EMP. So Une-san, please. Thank you. I'm with Investment Lab. I am the head of that company. My name is Une. So I think I represent the EMs. I think that's why I've been invited today. Amongst the EMs, I'm not outstanding, but so I don't know why I was invited, but 2 years ago I was chosen for the showcase as an EM, so I probably want to hear what has happened since. So that's what I'd like to talk about. So as a self-introduction, I used to be a proprietary trader for about 15 years at a securities company. And then after that, I worked for Japan Post Bank market investment department. So I worked as an asset owner. So I was working with passion as an asset owner, and asset management industry I wanted to promote, and I wanted to do it myself. So I established the Investment Lab, an independent company. So I want to make the whole of Japan better at investing. So alternative fund investment I am doing for listed Japanese equity. I also do venture capital. So we have those, I wear those two hats. So we have those two businesses. And thanks to your support, we're gradually growing. And so AUM of 100 billion is coming closer, approaching. So it's been a tough journey starting from scratch, but here we are. And I'd like to explain that journey to you as well. So from asset owner side, we have two speakers. Haruna-san, please. I'm Haruna from Japan Post Insurance. I don't have a self-introduction slide. I graduated university in '91, and for some time I was with Norin Chuking till around 2005 doing asset management, and from then I was in the Sumitomo Mitsui Group asset management, and in 2016 I went to the Japan Post Group, and I've been in charge of investment management since then. And I also have the honor of serving as a FinCity Tokyo board member, and also I am a member of the selection committee for the showcase. So I'm in the discussions, and so I think maybe that's why I was invited to speak. Une-san, I have a long relationship since Japan Post days. So looking at the emerging managers, how they become independent from another organization, and they create their own world. So I've been watching him do that for many years, and I've been supporting him. So maybe it's difficult to talk broadly about the EM, but I can talk about what we're doing at the Japan Post Insurance. Thank you for this opportunity. Thank you. Finally, Hata-san, please. Greetings. I'm with JIC, Japan Investment Corporation. My name is Hata. So this is a session about the EMP. So we're here to talk about that. So we really wasn't focused on EMP, but it turns out that we have formed various relationships with emerging managers. I'd like to talk about that experience, where we look at in selecting them. Myself, I have been in the private equity, private asset world more than 20 years. And in terms of LP investment, I've been doing that for more than 20 years. That's how and where I built my career. So previously, I was at the Nisei Asset doing PE investment, co-head of the PE investment there. And then before that, I was at the Nomura Asset. So for about 9 years, I was doing emerging market like China, India, rapidly growing markets. So I was the emerging market manager. So I wanted to bring that knowledge and expertise to Japan. And so I lead the effort at the JIC. So JIC, let me briefly explain the entity. Currently, we have 53 funds, private funds that we invest in. So in 2020 July, I got on board and started investment. And so that includes 50 funds for VCs and 3 PEs and others. So our investment is focused on VCs. And right-hand side, JIC also conducts direct investment. So we have JIC Capital that does a buyout, and then we have the VGI, Venture Growth Stage Subsidiary. So in my line, I support the subsidiaries and also support the private fund investment as well. So I'm happy to be here. Thank you very much. So let's talk about the first topic, which is the current situation. So Une-san, what has been the difficulties that you have experienced? So focus on that and talk about what you've been doing. A lot of difficulties I have experienced. So I was with the Japan Post Group, and I worked together with Haruna-san in those days. And in the Japan Post Group, I was engaged in the market investment department reform. And the final agenda was, as asset owner, you want to grow the investment industry, and that will benefit the whole of Japanese economy. So 8-9 years ago, I volunteered to be an emerging manager, and that was almost successful, but it wasn't. And the Tokyo Metropolitan Government, I was trying to work with them, and they were quite upset. I still feel sorry for that failure. But compared to then, the thinking about emerging managers, understanding about emerging managers has been much improved. And so I think that the environment has developed much better. I'm not saying we're very successful, but we have been able to earn enough to go on. And so this environment where new managers are emerging I think it's wonderful. So this experience we wanted to share to vitalize the entire market. So when emerging managers, well, we're emerging managers ourselves, but the newer managers, they come to us asking for information, and we're very happy to oblige, and we talk to them what has been difficult, what has been challenging. And what's challenging is how to build up the organization, how to get the people, how to get the licensing. But the most difficult is, of course, fundraising. So when you fundraise, what is your strengths? So you have to face yourself, and you have to think, what is your competitive advantage? And you have to question yourself, can you actually establish a fund? You have to go through that thought process. So when I was in the asset owner side, so Une and Haruna, so as asset manager and owner, there was a conference we discussed how should managers be, and the I think the conclusion was that the problem is that the asset owners don't provide the funding. But now I feel that it's the asset managers. It's their fault. They have to have more literacy. Haruna-san and Hada-san, they're actually putting in the investment. And so we have to be able to respond to that and deliver. And we have to set up the organization. We have to make clear what our competitiveness is. That is the difficult part, but we have to do that so that we heighten each other.
And I said earlier that we are performing rather well, but I have to say that I could not live up to the expectation of Une-san or others, and still we are trying to improve ourselves with the support from those from both within and outside. And fundraising, that's the most challenging, and we had the fund made available from overseas, but now the situation is improving with the asset owners offering their asset to us as well. So through collaboration, we'd like to further promote the business. Sorry for talking too long, but that's the most difficult part that I experienced in my career. Next, on the part of the asset owners, what is your understanding about the current situation, reality, especially in the case of JP Insurance? I think you are engaged in a very unique initiative. So, Haruna-san, please.
Yes.
I think the Une-san was accusing me about I don't mean that I gave a low score to the evaluation of the Une-san. We have 60 trillion yen as a total asset since around 2016. We have engaged in investment, and through that, alternative assets are the ones that we also started to place some focus on. In fact, that will be on the order of trillion yen in the investment. And also for traditional assets, active managers have been used as well. Traditionally, talking about EM, in fact, they tend to produce a very good performance in early stage. And if we look at the capacity, then I would say that it is not the bad decision to make an investment into EM. However, in reality, how can we allocate the fund out of JP? We can't afford to make an investment on the order of tens of billions of yen, and therefore, given the asset volume that we can make an invest and the preparation that would be required, then I would say that there are some hurdles that we have to overcome in making a decision for investment. But since several years ago, to make Japan as a leading investment center has been advocated, and the FinCity Tokyo has been promoting various activities, and therefore the manager database or list, to be exact, has been developed in the process. And then we started to wonder how we can make use of that as a part of the investment. And it so happened that we thought we finally came to such an opportunity, that is on the part of the government. They made such an initiative, and we thought it was significant to work with them. So in 2024, we decided the policy to work with EMP. The 300 billion by 2028, that's the amount that we commit. Doesn't mean that we would use all of that, but and also about year 2028, whether that's a fixed year, it may not be. The point that I'd like to make is that we are prepared to make that much allocation, demonstrating our interest in promoting EMs, and maybe that that would facilitate the flow of the fund from the JP Insurance, and that is how we started such initiatives, then exactly what kind of actions, activities? I would say that the relationship with EMs, including the database availability, that was a major bottleneck. And furthermore, how we can monitor or follow up the monitoring, that's going to be a long term because exit will be sometime in the distant future, and therefore, as a part of that, the FinCity Tokyo sponsors EM Showcase. I'm not here to advertise that, but it is under certain conditions, FinCity Tokyo or Tokyo Metropolitan Government conducted a screening of emerging managers and then present the showcase. And we thought that's one universe that we can make an investment in. For now, the size of the investment would be about 10 billion, or on the order of 10 billion. And as I said earlier, the supervision that's required, and therefore, about the same time, together with Daiwa Securities, we came into agreement to make an investment into Daiwa Asset Management. And within Daiwa Securities Group, including due diligence of the funds, they have accumulated the expertise at Daiwa Fund Consulting, mainly centering around long-only traditional type of assets. And together with them, we created a scheme where Daiwa Asset Management acts as a gatekeeper, and we offer some funding. Of course, it doesn't mean that we will leave everything to Daiwa Fund Consulting and Daiwa Asset Management. As an asset owner, we make a certain level of commitment, including the dialogue, communication, in making a decision investment right now. Within this program, the three companies are the ones that we are making an investment in, and we are willing to expand this program. And we expect that there will be more and more managers to be put into FinCity Tokyo list, and therefore, we believe there is a room for further growth. On the other hand, talking about Une-san, as I said earlier, this is mainly the long-only managers program, but aside from that, PE, hedge fund, and other alternative asset-related program is going to be launched sometime later this year, so that with those two vehicles, we'd like to make such an investment scheme through collaboration with Daiwa Asset Management. Rather than the significance of such the initiative, as an asset owner in making an investment, efficiency, as well as the deep the monitoring to be performed. With that in mind, through collaboration with Daiwa Asset Management and Daiwa Fund Consulting, we're trying to complement factors that we are lacking. So that's how we are currently engaged in such an action. As EM, this is quite promising. We hold much expectation towards such a program. Now, Hata-san, in your case, I would say that that's one ideal form of EMP. So if you can refer to that, thank you. Can I have a slide? Haruna-san mentioned like 300 billion yen. In our case, it's 283.6 billion yen over 5 years because it was VCs, and therefore the shot size was rather small, and therefore it took rather long time to come up to this level. Une-san mentioned the GPs and emerging managers are faced with difficulties, but so are the LPs. That's our impression based upon 5-year experience. With this slide, I'd like to explain about how the allocation has been made so far. In our case, based upon the industrial competitive enhancement law, as a part of the mission, we are making an investment, and therefore, rather than running EMPs, I would say we are interested in creating startup ecosystem in Japan so that the industries of next generation are developed originating from Japan, and as a result, we made an allocation on the such emerging fund. Not only VCs but also engagement funds are now receiving our allocation. So there's broader scope of point of view rather than just the VCs. We are making a selection of managers and also selecting strategies. And the 1/4 of the fund, the fund it turned out to be the number 4 fund. In fact, by the time of Fund 4, it could be no longer called as emerging managers, but I would say that the ecosystem is yet to be fully developed. And at the time of the number 3, the number 1 track record was not available.
In VC, it becomes more long-term capital investment. So then as an LP investment, how do we look at the track record of emerging managers, or any alternative way to assess the potential of the managers? That's a big headache for us. As institutional investors, we have been making allocation based on the track record. So managers who have a long track record, we can crunch the numbers and we can do the attribution analysis, but those things are unknown. So we have to look at the individuals of the GPs, the background, the experience. Maybe they come from consulting, maybe they're entrepreneurs, maybe they have experience in asset management. So how do we make a comprehensive evaluation, and how do we assess the strategy of the GPs? And we have to qualitatively evaluate the managers to see whether they can make a contribution. So that was a difficult part. It wasn't really hard, it was just difficult. And GIC has done this for 5 years. We have been accumulating know-how. And we're hiring young people. They're mostly from institutional investors. So they have only had the experience of communicating with established managers and an analysis of the established players. So don't rely too much on your experience, we say. We're creating a manual to help them to assess the potential of the emerging managers so that they may communicate better with them. And one more thing that we have had the difficulty with, that is post-investment. So there's a pitch, and then we listen to the presentation, we do the evaluation, and both sides are painting a rosy picture of how well the strategy will work. I mean, you have to have that rosy picture to bet on that and to actually put in the funds, but actually things don't necessarily go as planned. It's not just about performance. In the world of evaluating asset managers, what I always say to GPs is, you each have individual track records, and that would be like, as a capitalist, IPO or exit, and for a buyout, as a investment professional, what is that track record? So there is that track record, but if you become an emerging manager, if you create a new firm, you become top management of a new company, and that's where they lack experience. So for the first time, they're doing something other than investment management. They have to do the operation of the company. They have to communicate with investors. They have to build teams. So that's the work of the management. And the fund managers that we communicate with, they in many cases lack that experience and that viewpoint. So as a risk, that's something that we have to swallow. I mean, if there's a manager who have all that experience, they will not be emerging managers. So we have to have the assumption that they are still immature. And of course, we're investors, but we have to have engagement as a partner. We have to support these GPs as LPs. That's what we have to do as part of engagement. But in our daily work, we're facing situations that we had not expected or we had not heard about. So there are those issues that emerge, and then we work closely together with the GPs so that we resolve them so that they can move on to Fund 2 and 3. So that's how we need to run the program. That's what I feel after doing this 3 to 5 years. Thank you. Let's move on to the next topic about the future of EMP. So from EM perspective, Une-san, can you comment on that? And also talk about your expectations for LPs, asset owners. Thank you. So the future of EMP. I mean, I think things are becoming very active, so it's still tough to do fundraising. But listening to Haruna-san and Hata-san's talk, I really feel that we have been nurtured by these people. I mean, I did that kind of work myself when I was an asset owner, but now I'm an asset manager, and I feel that I am being supported and nurtured by these people. So it's very encouraging what they are doing. In my case, I'm lucky that we got fund from overseas sovereign wealth funds, and also from global fund of funds. We received quite a sum, and we're able to grow. And also we have regional banks and securities companies domestically who invest in us as well. So talking with these LPs, I mean, in many cases it's the overseas investors that we interact with. And they look at us as independent managers. They treat us as business partners. And once every 3 or 4 months, they come to meet us, come to see us. And during that time, we have 3 or 4 hour meetings each time. They ask, how's your family? They ask about my mental state. And they ask, why did you think this talk was good? How did you get to know about this? So they ask all these questions. They don't talk too much about performance. Our way of thinking, our logic is what they try to explore. And through the back and forth, I think they're helping us to grow. So this EMP program, manager and asset owners have to have the relationship of trust. And I really feel this after becoming a manager myself. We must not be overconfident. We must be humble. But also, you have to clearly state what you are doing. There's so many things. And I hope that asset owners will understand all the things we are doing. So manager side, of course, have to make great effort for further development of the EMP. So I want to support other funds as well. Of course, to be careful about conflict of interest. So recently, I work with other funds. I support other funds in different fields, mostly for free. And sometimes they're saying they want to raise funds. So I refer them to asset owners. I bring them to interviews with them. And I felt in the world of VCs, when you talk to asset owner, then they would say, you don't have a track record, so you should have built experience. Now, if in a contents field, we have this edgy operator who has experience in that field, and we're helping because they don't have the financial experience. So I refer these investors to them. They say, we're on board right now. And so I think that in my work, I have not accumulated enough in my work as a venture capitalist. Asset owners, they would be interested and come on board if they think it's good. So asset managers, they have to have the skill, they have to be able to verbalize, and if they feel it's not a good match, they should withdraw. So emerging managers, it's not enough just to have new ones. There should be integration, like future Blackstone. Those things have to emerge from Japan. So we should not just have a large number of small ones. And there should be mergers and collaborations. so that resources in Japan can come together. So sometimes, or in many cases, I'm supporting the other funds. So the second, third chapters, there should be more effort by the managers, and there should be consolidation amongst them. And I hope that will invigorate the market in Japan. That was very interesting. So consolidation and helping each other, I think those are new perspectives, new ideas. So now let's hear from the asset owners. So I want to ask Haruna-san, talk about the future of EMP, please.
Thank you. That's a very difficult question to answer, but I'd like to share with you my thoughts. First, for EM to be vitalized, the asset management business itself has to be attractive. Personally, aside from EM, asset management business in Japan is associated with such a low fee, so that unless it is the alternative, if it is a traditional asset, and then the fee level is at such so that it is hard for new emerging managers to come in, because that will require extra energy. As Hata-san stated, in the case of the hedge fund startups in overseas, even with the very qualified managers, they have to spend a lot of time for collecting the resources, the capital, and therefore I would say that the asset management business fee itself has to be revised, and asset management business has to be profitable to begin with. That has to be the very basic assumption. Then on top of that, from asset owners' point of view, there are various issues that have to be addressed. For instance, in the case of EMP, they cannot work within the existing investment framework. We have investment guideline for outsourcing. For instance, a 3-year or longer track record. So with that condition, EMs cannot join. But if we look into that more in depth, what are we looking at? The business due diligence will be performed in the case of the equity, and if it is the fixed income, then that will be coupon. And then what is the source of the return for the fund? That's actually the challenge. The human resources, which are hard to be visualized, and as a way to visualize that, track record is included as a requirement. Therefore, for the in decision-making process of the institutional investors, it is not bad that the track record is included, but if it results in a barrier for the EM to join, and then we have to remove that condition, then what can we do? Eventually, it ends up with that particular manager's the entire personality, including the track record in the previous careers, because I believe asset manager is the holistic the view that will be required for that the manager. And in Japan, the reference to check the past track record is rather difficult to perform compared to overseas. So ideally, as in overseas, the spin-off from major investment banks and others are there, or asset management companies. Suppose that the top portfolio manager spin off from the asset management company, and if he starts up a new company, and then he should be supported duly, so that the alpha that could be visualized could be presented, so that the financial institutional investors would be presented with those numbers thanks to the support by the asset management company that he or she used to work for. And with that, that may put extra help and supporting them. And there are various other issues as well, but for now, that would be of the primary importance. Thank you. From asset owner's point of view, I didn't expect that he would refer to a fee, and therefore, I'm sure many asset owners are encouraged to hear that. And there may be those that want to spin off out of the major asset management companies. Those people might have been also encouraged. Now, Hata-san, if you can talk about the future outlook. Yes, thank you. The Haruna-san referred to a spin-off, and in fact, this morning I received one email that's about the spin-off. I believe such an interest is rising. Especially younger people than my generation are the ones that are interested in becoming independent. Want to start fund management business. I believe there are increasing number of young people who are interested in starting the fund management business. Back in time when I was involved in the alternative investment, back then it was just the part of the entire project, and therefore it was not much highlighted. But nowadays, alternative investment is the universe that many young people hold a great expectation to, and therefore we see more young people who are willing to join there. And also, though gradually we are seeing female founders as well to start up their own businesses, which is quite encouraging. And as Haruna-san mentioned earlier, the LPs, those making an investment like us are there, have to consider long-term support, and then at the same time, together with the EMs, the new strategies or the new management style are the ones that we are expected to create and develop. And I have a great expectation to that. I mentioned earlier about the email that I received this morning. The LP is looking at the market from bird's eye view. In fact, in general, LPs are interested in global market as well. For instance, there is such a new development in US and in Europe. Why is that such new strategy approach is yet to be developed in Japan, for instance? But for us, what we expect from the EMs is that, of course, when you spin off, then a track record that will be associated with you, and therefore such past practice may be always there, but I want them to be out of box in their ideas and the fund management. AI, for instance, that's a keyword. As I am looking at the Japanese market and the nexus or connectivity between Japan and the international market, that's where I expect. And is it just the Japanese managers only? In fact, we hear about the impact of the China decoupling, and as a result, more and more Chinese people are coming into Japan, together with European people who find that Japan is a country the good country to live, and therefore they are interested in making an investment. Therefore, the cross-border, this is going to be the key point for Japanese local managers. If they can compete with their global peers, then within the one same asset class, not only Japanese managers, but also the managers with a global perspective could be involved. That's a kind of expectation that I have, and looking forward to the new development. Thank you. We are running short of time, and therefore, from three of you, I'd like to ask you for the key message from EM to EM or LP, or from LP to EM or to the LPs. If you have any message, hope that you can limit that to 2 minutes per person. So starting from Une-san, please. Yes, I will be brief. First, to the peers, colleagues of the fund, let's work together to promote this market. And the expertise, experience that I can share with you, I'm willing to share that with you. And to LPs, we are still immature, especially the venture capital business is yet to make a major success. We need to learn a lot and have to improve ourselves. The hedge fund business in 2023, as a reference, every month, well, we made a win, but then in 2024, we could no longer win. So looking at that, about 18 months ago, I thought maybe we should give up. Maybe TOB, the management buyout, such events took place during that year, and therefore there were many TOBs that were encouraged, and therefore then we could not cope up with such a new development in the market. Therefore, we increased the number of factors from 8 to 80, and then tried to turn the PDCA. I had a coaching session, one-on-one meeting with each manager that helped improving the performance, or at least stabilize that. For the manager, the initial year, well, if you can make a big the achievement, like in the case of Shohei Ohtani, that would be wonderful. But we're not the case, and therefore, finally, a performance has been stabilized, and therefore, to LPs, you might be impressed with particular outstanding performance, but there are those that are trying to steadily improving their capability. So there could be different types, and hope that you will look at those different types of the managers as well.
Thank you. Haruna-san, please. Second slide of my deck. As I said, we're working with Daiwa Asset Management and Daiwa Fund Consulting. We have a program together with them, and we're investing in 3 managers. They're all long only. They're coming out of the showcase of FinCity Tokyo. And more than we thought, the candidate for long only was limited to the extent that we know. And so we would appreciate if there would be more emerging managers that will be started, so that we can diversify within our portfolio. That is our wish. And there will be several hurdles and administrative part as well. How to resolve that is a different perspective. Maybe there are some tax issues. But one thing I can say is we on the asset owner side, we have some hurdles about investment. Some established thinking that we need to remove, and if possible, myself included, maybe in the network of investors, to vitalize capital market, how to share our knowledge, I think is a major issue, and I hope that I can do that together with you. So on the left-hand side, alternative program will be established. One more thing, so that there's no misunderstanding. So EM, those who are thinking of starting a new investment manager. So asset owners, maybe they lower, or you may think that they would lower the hurdle for decision making or investment. That's the reverse is true. Established firms with track record, they give more confidence. I mean, that's natural. So as institutional investor, that's how they think. So EMPs, we try to escort them, but there are things that we demand. And so if you get on this program, then you'll be funded. That's not how it works. You have to create a quality in terms of your organization, your execution, and we can work together to achieve that. And that is the direction we want to take you. Thank you. Hata-san, please. JIC has a strategy, and the strategy itself is evolving daily. So in the past, there were funds that came for funding, asking for funds, but we did not form a relationship. And those who were reluctant to come to us, because you might think that we have a very harsh view, but please come visit us, and also please read our website. So strategies and where we invest in them and the reasons for why invest in a particular manager, we disclose all that information. I think that can be very good clues or pointers to you. And what I want to convey to you is that the Japanese people are very diligent, so they prepare a deck, they have this PPM memorandum, and so now they're ready to visit the JIC. But you don't have to do all that preparation. That's not necessary in our communication with emerging managers. And in terms of how to start up funds, we have know-how about that. So come to us when you have a rough sketch, not when everything has been polished. Come to us, and then we can give you some advice. With this kind of organization, it's not stable. So after the fund has been launched, you should hire this kind of people. We can provide that kind of advice. We have experience of supporting the launch of Fund 1. And so top management vision and a strong commitment from the top management. Of course, we require that. But it's not possible to run a fund by just one person. So you have to have the team building capabilities, operation capabilities to run the fund. So objectively, we tell them what skills you are lacking. So you need this kind of number 2 person. So JIC can provide those suggestions to you, and we can go through the CVs together, and sometimes we provide that kind of hiring support as well. So JIC really stands with you to try, and look at us as a partner to start up an EMP program. So please feel free to come to us for consultation. So listening to the 3 people, collaborating amongst EMs is necessary, and also amongst LPs. That should be helpful. And the JIC said that they're providing consulting to the EMs, so that's also available. So the industry as a whole, we hope that we can enhance the level of communication amongst the various parties. Maybe in 10 years' time, Japanese EMs, I really hope that they will become world-class managers. So thank you very much for listening. I want to ask you to give a big round of applause to the 3 speakers. Thank you so much. Tsujimoto-san, moderator, and all the speakers, thank you so much for your contributions. Let's send them off with a big round of applause. Thank you very much. Tokyo Asset Management Forum 2026 is approaching its conclusion. I'd like to ask your help about the survey. Those who are here, there's a QR code on the screen. And also for those joining us online, you will see that on the screen. So we ask that you read the QR code and submit the questionnaire response. Also, we'll send the information by email. We sincerely look forward to receiving your feedback and comments. And we apologize that this applies only to some participants, but for those who were invited in advance, you will be asked to move to another venue for lunch networking session. So please go to the first floor and move to the other venue. When joining the lunch networking, please show the QR code which you have registered. With that, we'd like to conclude the Tokyo Asset Management Forum 2026. Thank you so much for joining us despite your busy schedules. We very much appreciate this large attendance. Thank you so much. FinCity Global Forum 2026 will be held from 2 p.m. this afternoon. There'll be some time in between. So if you are leaving your seats, please make sure to take your belongings with you. Don't leave your bags. Take them with you.
東京都内で資産運用業の開業を目指す皆さん、東京独立開業道場であなたのキャリアを次のステージへ。起業家 EM、アセットマネージャー、アセットオーナーが一堂に集結し、これからの EM 像をリアルに語り合う特別セミナーを開催します。第一線で活躍する専門家による講演、パネルディスカッションを通じて、今すぐ実践できるヒントが満載。登壇者や参加者と直接つながれるネットワーキングの時間もご用意しています。独立を考え始めたばかりの方も、すでに準備を進めている方も、そして EM というキャリアに興味があるという方にも、必ず新たな気づきと出会いがあるはずです。お申し込みはこちらの QR コードまたは URL から。皆様のご参加を心よりお待ちしています。東京独立開業道場ホームページでは、開業経験者の体験談やレギュレーションに関するレクチャーなど動画コンテンツも多数公開しています。こちらもぜひご覧ください。東京都内で資産運用業の開業を目指す皆さん、東京独立開業道場であなたのキャリアを次のステージへ。起業家 EM、アセットマネージャー、アセットオーナーが一堂に集結し、これからの EM 像をリアルに語り合う 特別セミナーを開催します。第一線で活躍する専門家による講演、パネルディスカッションを通じて今すぐ実践できるヒントが満載。登壇者や参加者と直接つながれるネットワーキングの時間もご用意しています。独立を考え始めたばかりの方も、すでに準備を進めている方も、そして EM というキャリアに興味があるという方にも必ず新たな気づきと出会いがあるはずです。お申し込みはこちらの QR コードまたは URL から。皆様のご参加を心よりお待ちしています。東京独立開業道場ホームページでは、開業経験者の体験談やレギュレーションに関するレクチャーなど動画コンテンツも多数公開しています。こちらもぜひご覧ください。
Thank you very much for coming to this forum. This is some housekeeping announcements.
これだけそもそも東京都内で資産運用業の開業を目指す皆さん、東京独立開業道場であなたのキャリアを次のステージへ。起業家 EM、アセットマネージャー、アセットオーナーが一堂に集結し、これからの EM 像をリアルに語り合う特別セミナーを開催します。第一線で活躍する専門家による講演、パネルディスカッションを通じて今すぐ実践できるヒントが満載。登壇者や参加者と直接つながれるネットワーキングの時間もご用意しています。独立を考え始めたばかりの方も、すでに準備を進めている方も、そして EM というキャリアに興味があるという方にも、必ず新たな気づきと出会いがあるはずです。お申し込みはこちらの QR コードまたは URL から。皆様のご参加を心よりお待ちしています。東京独立開業道場ホームページでは、開業経験者の体験談やレギュレーションに関するレクチャーなど動画コンテンツも多数公開しています。こちらもぜひご覧ください。
本日はフィンシティグローバルフォーラム2
Ladies and gentlemen, thank you very much for coming to this Global FinCity Forum. I am Tomomi Suzuki. I will be the master of ceremony of this event. Thank you. I need your cooperation. In starting the event, I'd like to make some housekeeping announcements. You are requested to refrain from making a video recording or sound recording. The translation receiver is distributed at the entrance. Channel 1 is Japanese, channel 2 is English. Today, the simultaneous translation is available. So in the guidance page, you have an URL. From the URL, you can change the language. If you have any inconveniences, please contact the Secretariat by sending an email. Secretariat will deal with that. This is the schedule of this event. Following this schedule, So this year's theme is, overarching theme is touching the breadth of financial innovation. This year's theme is the resilience of global financial city Tokyo amidst the geopolitical risks and shaking international financial order. We will explore how Tokyo can demonstrate resilience and secure global trust. Discussions will cover a broad spectrum of Tokyo's future vision, from digital currency to infrastructure investment. We will go to the opening remarks by Governor of Tokyo, Yuriko Koike. Due to official duty scheduling, she sent us a video message, so please watch the screen. This is the video message by the Governor of Tokyo.
Hello everyone, I'm Koike Yuriko, Governor of Tokyo. And thank you very much for participating in today's FinCity Global Forum. The Japanese economy is now entering an era of dynamic growth. Amid steady improvements in corporate governance and ongoing reforms of market institutions, global interest is focusing on the value of Japanese companies. We will reinforce this momentum to carry Japan's dynamism into the future. The power of finance is crucial here. Finance is a lifeline that supports corporate growth, nurtures new industries, and connects Japan to the world, and it is centered here in Tokyo. The Tokyo Metropolitan Government is working with FinCity Tokyo to build an environment that encourages people to work, start businesses, and invest in Tokyo. We will support the technological development of companies in Tokyo by establishing a fund to promote the development of data centers essential for generative AI and other technologies. We will also promote the real-world adoption of domestically issued stable coins and open new possibilities for digital finance. Through these initiatives, we will make Tokyo a city that continues to evolve at the forefront of global finance and technology. I anticipate that this forum will be a valuable platform for diverse financial players from around the world to share their vision for the future of finance and weave new value together. Thank you very much. ありがとうございます。
ありがとうございました。それではこれより基調対談に移らせ。
Thank you very much. We will proceed to the keynote dialogue or the fireside chat. The panelists will come up on the stage. Please welcome them with a big round of applause.
よろしくお願いいたします。
Thank you. Now the proceeding will be done by Ms. Tracy Wingate. She will be the moderator of this session. So, Ms. Wingate, please take the floor.
Testing. Perfect. Thank you all for joining us today for this panel. I have sitting next to me two very illustrious panelists that I will introduce but do not need any introduction. Let me tell you just briefly a little bit about our panel, Collaboration Among International Financial Centers in an Era of Global Upheaval. So our theme today is to talk about how Tokyo and Frankfurt, as key international financial centers, will make a huge difference in 2026 and beyond. They are very well primed to actually become critical international financial centers. So I will ask my panelists some questions, driving at their thoughts about how we're going to make this so. So let me first start off with someone, again, who needs no introduction. Nakaso-san is obviously the chair of FinCity Tokyo, and has been since it was first established in 2019. He has had quite a distinguished career in both the public and private sector, including over 3 decades at the Bank of Japan, where in fact he was deputy governor. He is also currently the chair of Daiwa Institute of Research, and he serves as Japan's representative to the APAC Business Advisory Council. He also chairs the Policy Evaluation Committee at FSA and the Monitoring Committee for Japan's over 10 trillion yen University Endowment Fund. So thank you for being with us today, Nakasan-san. Next, we have, yes, round of applause. And next we have Oliver Beren, who has also had quite a distinguished career, over 40 years in the private sector. As you all may be aware, he is the current president of Frankfurt Main Finance and has been since October of 2024. He is also the CEO of FlatX Desjardins, which is a European online financial brokerage firm, as well as the bank. He is also the chair of the supervisory board of DS Group. He previously led at Morgan Stanley their operations in Germany and served on the board of directors at Morgan Stanley International Limited. And he began his career at Deutsche Bank, as well as DECA Bank, where he held several senior positions, including chair of the board. Thank you so much for being with us today, Mr. Beren. So let's start here. Last night, a historical memorandum of understanding was signed between FinCity and Frankfurt Main Finance. This MOU will connect 2 financial centers to strengthen coordination between Europe and Asia and find joint opportunities to promote capital market development between these 2 key cities, Frankfurt and Tokyo. While both centers will continue to play a role in shaping the future of international finance, finding ways for greater growth and collaboration will propel both of them to deeper capital market development. So let's dig into the discussion. My first question I will ask to Nakasa-san. Looking back at 2025, what are the trends, the mega trends that you think have posed challenges, but also opportunities? This is relevant from where you sit, both with respect to your current role here at FinCity, but also the decades of experience that you've had on the regulatory side. And then second to that is, how do you feel about 2026? Are you pessimistic or optimistic about 2026?
Thank you, Tracy. Let me try to answer. Since the beginning of 2025, almost every morning, we were awoken by the news, surprising news, that took place overnight in the US or elsewhere. And this January, in Davos, Mark Carney, the Canadian Prime Minister, talked about rupture in the world order, the end of the night story. Now, I think his message proved a wake-up call for many of us who were getting more and more used to this kind of routine of life, and the sober reality, which we became more inclined to turn a blind eye to. You mentioned megatrends. I think there are several. These include the rise of America First, widening inequality, heightened geopolitical risks, AI, accelerating climate change, and the expansion of fiscal deficits in many countries. I think these megatrends interact one another. The interplay generates changes to the global and financial order that we were accustomed to or took almost granted. One change as I see is the role of the US dollar as the key currency. After World War II, the dollar became the key currency, replacing the sterling that had performed as the key currency under gold standard. Now, even after the breakdown of the Bretton Woods, when the dollar gold standard was abandoned, US dollar continued to perform as the most important reserve currency. I think the US dollar supremacy as a key currency was a kind of exorbitant privilege. But I think that it also accompanied costs. The US had to conduct its macroeconomic policy, taking into consideration its implication for the rest of the world. And likewise, the Fed had to perform the lender of last resort in dollar in times of market stress. But I think these fundamental factors that underpin the US dollar supremacy is starting to erode. First, the US stepped down from its former role as the guardian of global order and ceased to be the standard bearer of free trade. And as a result, its economic policies, typically the tariff policy, very erratic, have become highly unpredictable. And secondly, the widening US fiscal deficit, I think, casts some doubt about the sustainability of the soundness of the US Treasury market. And third, President intervention, the persistent intervention by President in the Fed is feared to undermine the independence of the central bank and ultimately jeopardize macroeconomic stability. So for these reasons, I think cracks appearing in the almighty dollar. As a matter of fact, in early April last year, immediately after the Liberation Day, we witnessed a brief period where the value of the dollar assets across the board plunged, as if Minsky moment had arrived. We saw a simultaneous plunge in the US securities, equities, and the dollar exchange rate. Now, interesting thing is that during this corresponding period, Japan saw a record high level of capital inflow, amounting 8.2 trillion yen into equities and bonds combined. So what does this imply? I think although I don't think the US dollar supremacy is going to be overtaken anytime soon, given the likelihood that the US economy remains the largest economy, at least for a while, and because of the network externality, which means everyone uses the dollar, I think it will remain the key currency. But I expect global investors, for the reasons I mentioned, will start to diversify at least a part of their portfolio away from US dollar into other currencies, including the yen, and other value storage instruments like gold. Therefore, under this situation, other key reserve currencies, including the yen, the euro, the sterling, may have to collectively, I think, function to fill the gap thus far performed by the US dollar to underpin global economic and financial activities. So what this suggests is that financial centers like Tokyo and Frankfurt, built on the foundations of democracy and rule of law, are well positioned, I think, to grasp new responsibilities and bear new opportunities in the shifting global financial landscape. So there are responsibilities and opportunities. That is why I think, I'm cautiously optimistic about the year 2026 and maybe beyond.
Thank you for that, Nakasa-san, for your thoughtful perspective. You have indeed highlighted some cracks in the armor in the existing order, but have also spoken about the opportunities for growth for what I would call a more plural financial landscape. in which other major currencies and financial centers will play a greater role. I will now turn to Mr. Behrens to hear his thoughts and reflections on this question, and I'm particularly interested in your view about how pessimistic or optimistic you are for 2026.
Thank you very much, Tracy. First of all, it's a great honor to share the stage with Nakaso-san today. I would also like to express my sincere appreciation to Governor Koike for her thoughtful video message and her continued support of Tokyo as a financial center. And finally, my warm thanks to all of you joining today. Only recently, Prime Minister Sane Takaishi announced a snap election. We saw Japan financial markets had some short-term volatility, but overall remain calm and well-functioning. The government and the Bank of Japan communicated clearly and acted in a coordinated way, which helped in reassuring investors. I also want to congratulate on how Prime Minister Takaishi handled this. Now, coming back to your question, Tracy, I would look back at 2025 and would describe the global economy as going through a real reshuffle, almost like a big game of shogi, Japanese chess. Suddenly, the rules on the board changed. As already said, as Canadian Prime Minister Mark Carney stated in Davos, we visited a definitive rupture in the world order, making the end of a pleasant fiction, that economic integration would automatically guarantee security. After the US rolled out sweeping tariffs, many countries realized overnight the old playbook no longer works. As German Chancellor Friedrich Merz warned, we have entered an era of great power politics, where economic dependencies can be weaponized. Security, resilience, and strategic autonomy are not just as important. At the same time, AI became a central pillar of this new competition, driving productivity and industrial policy. Looking ahead, I'm cautiously optimistic. Major economies begin to and have to face the world as it is. Growth may remain modest, but countries are learning how to operate under these new, harsher rules. Against this backdrop, three big megatrends define today, and they matter especially for Germany and Japan. Germany and Japan have a lot in common: export-driven, highly industrialized, democratic, and facing rapid aging population. We will lost most of a world of fortress, but have the greatest capacity to champion a new, resilient framework. Megatrend number one, fragmentation and protectionism from free trade to safe trade. Our both economies heavily rely on China for markets and critical raw materials, while at the same time depending on the US for security. That creates a costly dilemma, choosing between efficiency and security. Germany, for example, we face US tariffs on one side and intense competition from Chinese electric vehicles on the other. And when dependencies become political weapons, think rare earth or battery components, even the most advanced manufacturers are becoming vulnerable. But this also lies in an opportunity. The cracks in the global system are pushing Germany and Japan closer together. Our transformation partnership on supply chain and economic security are good examples. Both countries are redrawing supply chains towards Southeast Asia, Eastern Europe, or parts of the global South. Megatrend number 2, AI, productivity, and the new age of electricity. AI crossed this threshold. It stopped being a pilot project and became part of everyday workflows. This triggered a new age of electricity. Data centers, EVs, and digital infrastructure are now driving power demand much faster than overall energy demand. But energy is expensive. Germany is still struggling with high electricity prices after losing cheap Russian gas. We face grid constraints and a political debate about restarting nuclear power, where Germany could take off leaf from Japan's book. There's also the innovation gap. While the US and China are pushing frontier large language models, think on how quickly players like DeepSeek emerged, Germany and Japan are mostly adopters, not creators. If AI isn't deeply embedded into manufacturing, core competitiveness could slowly erode. Megatrend number 3, aging societies and the rise of the silver economy. Demographics are a relentless force. While global population growth is slowing, Germany and Japan are already deep into a demographic decline. This puts pressure on growth, public finances, and innovation. Pension and healthcare costs are rising, squeezing budgets that are also needed for defense, green infrastructure, and innovation. Fewer workers means less potential growth, and aging societies can become more risk-averse. That's not ideal for innovation. But here again, there is a flip side. Recent data shows something remarkable. People are staying healthier and mentally sharper for longer. 70 is the new 50. And it's no longer just a slogan. By better integrating older workers and extending effective working lives, both countries can soften their democratic blow. And the silver economy itself is a growth engine. From medical technology and care robotics, where Japan is already a global leader, to tourism and high-quality services. So, what does it mean for today? We need to balance. We need to balance a tight budget against the necessity of self-defense. We balance the drive for competition against the resilience of our supply chain. And finally, we must balance the demand for high yield against our growing need for sustainability. Germany and Japan are willing to tackle the challenge head-on. We are upgrading technology, reforming institutions, and attracting talent and diversifying risks. In other words, we are not trying to restore the old version of globalization. Together, we are building on a framework of economic security that prioritizes resilience, stability, over headline GDP growth. Success should not only be measured by speed alone, but also by endurance. This is very much in line with Japanese thinking, which emphasizes lifelong learning, continuous improvement, kaizen and shukunin, the professional pride, dedication, and relentless pursuit of excellence. Thank you.
Thank you, Oliver. I think one thing that's very clear in listening to both Nakasa-san and Mr. Behrens is that there is definite alignment in terms of how they view the challenges in 2025, but also the opportunities for 2026. So Oliver, if I could turn it back to you. We've discussed these challenges, we've discussed the cracks. Now let's talk about what you think the reforms need to be. So we've identified the issues, perhaps we talk a little bit about what the solutions could be.
Thank you again, Tracy, putting me on the spot again. Regarding to the mega trend, geoeconomic fragmentation and protectionism, for both Germany and Japan, the first priority is de-risking, not cutting ties, but avoiding over-dependence on a single supplier, especially for critical raw materials and key technologies. The strategy is often called friendshoring, moving parts of supply chains to trusted partners. Beyond friendshoring is friend financing. We must ensure that knowledge, capital and technology transfers remain in friendly hands. Germany, for example, launched a raw material fund in 2024, supporting projects that extract, process and recycle critical minerals. The idea is simple: secure long-term inputs for digital industries and defense, rather than being exposed to sudden geopolitical shocks and overnight extreme price hikes. Security, however, is not only about supply chains, it is also about hard power. Germany and Japan are both increasing defense capabilities, but in different ways. Germany has committed in meeting the NATO 2% target. After Russia's invasion of Ukraine, it created a €100 billion special defense fund and even carved defense spending out of its constitutional debt break, something that would have been unthinkable a few years ago. Japan, meanwhile, is broadening its security partnerships beyond the US, reshaping its post-war security posture. Despite all diversification efforts, Germany is still deeply dependent on China for green tech inputs like lithium batteries, and as an export-heavy economy, German industry continues to feel the pain of global trade fragmentation. Fewer open markets, higher costs and more uncertainty. Regarding to the mega trend AI-driven productivity and the age of electricity, AI is not only about innovation, but even more about application. Germany and Japan don't need to become the next Silicon Valley. What they need is to move from being AI users to AI integrators. We must invest in digital infrastructure, gigabit networks, data centers, and cloud capacity to revive productivity growth. In addition, the age of electricity, driven by EVs, heat pumps, and AI data centers, requires a massive upgrade in power grids and storage systems. As Microsoft CEO Satya Nadella said at this year's Davos Forum, energy cost and infrastructure availability are now key determinants of which countries will lead in the AI race. Germany has started to move faster. In 2024, the construction of the new extra high voltage lines, roughly 1,700 kilometers, increased fivefold to 2021. But still, electricity prices remain structurally higher than in the US or China. For energy-intensive sectors, this is like trying to win a marathon while carrying a heavier backpack. Regarding the megatrend, the silver economy and demographics, demographics is a slow-moving trend, but also the most decisive. like long winters in the north, you don't fight them, you prepare for them. Our both countries need to mobilize labor more effectively. That means higher participation of women and older workers and narrowing the gap between the official retirement age when people actually stop working. Germany has taken some steps into this direction. Under recent tax reform, people who continue working beyond the statutory retirement age can earn up to 2,000 euros per month tax-free. At the same time, skilled immigration is no longer optional. Germany's recent reforms, including the Opportunity Card, lowered entry barriers for qualified foreign workers and led to an 11% increase in visa applications. Japan is moving into the same direction, especially in healthcare, engineering, and technology. The goal is not to burden younger generation, but to rebalance the system in a fair and sustainable way. This is less about radical cuts and more about smart incentives, encouraging longer participation, healthier aging, and flexible life course models. Sorry for my long response. Thank you.
That was excellent. Thank you so much for that, Oliver. I'm now going to turn to you, Nakasa-san, to hear your thoughts about how we move from these challenges, opportunities, how we actually create solutions.
Okay, thank you very much. I will focus on basically on the financial area, and there are 3 points I want to make in this regard. First, enhancement of the Japanese yen as one of the key currencies. Now, according to the BIS statistics, Japanese banks have been the largest provider of cross-border credit since after the global financial crisis. But the yen portion of the cross-border loans thus far has been rather modest. And I think this can be expanded. And that will pave the way for a wider role of the yen to be, the wider role to be performed by the yen in the global financial markets and the capital markets. In the same vein, the government's policy plan for promoting Japan as a leading asset management center must be steadily promoted. The plan, originally launched by Prime Minister Kishida, remains high on the policy agenda set forth by Prime Minister Takaichi, and now with a broader objective of supporting Japan's economic growth. And inward investment into Japan by global investors will, I think, result in a wider, higher portion of money allocated to yen-denominated assets, which I think would in turn enhance the role of the yen as the international currency. That's the first point. Second point, I think we need to upgrade the functioning of Japan's financial center. Our financial center should so function as to serve not only the domestic clients, but also those firms operating in the Asia-Pacific economies that constitute important supply chains for Japan. I think this effort must be pursued with a view to supporting sustained growth of our partner economies, as well as addressing the common challenges, most typically climate change. And in this regard, I think developing an efficient transition finance market in Japan would provide firms and banks in the region with better access to issuing yen transition bonds or to trading carbon credits. And thirdly, most fundamentally, confidence in the yen must be maintained. Now, the value of the yen measured in terms of, for example, a real exchange rate has been in a secular decline since the bubble burst in the early 90s. But more recently, the yen's exchange rate has deteriorated, declined against major currencies recently. I think to a substantial degree, I think this is caused by, for example, the expected further deterioration in Japan's fiscal position, as the Takaichi administration promotes the so-called responsible expansionary fiscal policy. This results in higher bond yields and weaker currency. I think the weak yen also has to do, the current weak yen, I think also has to do with the monetary policy. Japan's CPI inflation rates have been overshooting the price stability target of 2% for now 45 months in a row. They're concerned in the market that the BOJ might fall behind the curve against persistent inflation pressure. This is also driving, in my view, yen weaker and long rates higher than otherwise. I think this argues in favor of fiscal policy measures that aim at restoring a sustainable fiscal structure with a view to ensuring credibility in the fiscal management is so important. For monetary policy, I think the BOJ should proceed with rate normalization without delay, in line with the macroeconomic and inflation trajectory. And in the meantime, growth strategy remains a key policy agenda, as improvement in macroeconomic fundamentals will underpin the value of the yen. So by addressing these three challenges, Japan should be able to perform a better role in the shifting global economic and financial landscape, filling the gap, if you like, created by US receding from international arena and America First proposition. I think Japan should collaborate with other providers of reserve currencies, including the euro, sterling, Swiss franc, Canadian dollar, as well as financial centers like Frankfurt that share common goals. We will be able to contribute to the international community in a more efficient, effective way if we endeavor collectively. And lastly, just a point reacting to Oliver's point on the labor shortage. This is absolutely a big issue for us. You mentioned the labor participation rate, but we have done so much in this area. For example, our labor participation rate for the young female has now reached 80%. That's higher than the US, UK, and the elder generation works longer than any peers in the advanced economy. So I think this leads us to the conclusion that how we should deal with the immigration policy going forward, meaning importing labor force from abroad. And this, incidentally, is one of the big topic in the current election campaign.
Thank you so much for that, Naka-san. You mentioned some very interesting areas, quite a breadth of discussion about both fiscal and monetary policy, and perhaps the next time that I'm in front of Deputy Governor Himino-san, I might mention that to him. Okay, so let's move to our final question that I think is incredibly relevant for this panel, which is the collaboration point. Looking ahead, I'd like to ask both of you what you see as some of the most promising areas of future collaboration between Tokyo and Frankfurt as financial centers. I'm going to start with you, Nakaso-san. Yes.
Thank you. I think the phrase that best describes the long-standing relationship between Germany and Japan is ferne Gefährten, which means distant companions. This is because we have many things in common, although our countries are distant geographically. The diligence of our population has overcome limitation of natural resources, transforming our economies into economic powers, if not superpowers. Today, the labels made in Japan or made in Germany are a guarantee of quality and excellence. And both economies rely on the industry base that comprises layers of Mittelstand companies. We have same issues, constraints like labor force, like you mentioned. we also have, challenges in common that argue in favor of collaboration between financial centers of Tokyo and Frankfurt. I want to mention three areas for possible collaboration that I can think of. First, since both economies are bank-centric, we need to develop an alternative investment chain that channels growth capital to potentially promising industries and firms. That can be done by leveraging the capabilities of asset managers, but banks can do more. Banks in particular, those banks in the region possess rich information on local, small, and medium-sized companies or even startups, and some of which, of course, may one day become a unicorn in the future. However, banks can only extend loans, and they're constrained in providing equity capital. And meanwhile, a financial center is best positioned to collect information on investment demand of both domestic and global investors, willing to provide promising local firms with equity capital. So financial centers can therefore perform, I think, as an intermediary connecting regional banks and global investors. And this is probably an area for future collaboration. Secondly, collaboration could be made in the climate to address the climate change, given the huge amount of capital needed to achieve net zero goals. Public funds cannot cover. So private capital must be mobilized in order to fill the gap. And in doing so, we have, at least in Japan, focused on so-called transition financing, which is to incentivize not just green projects, but amber projects that can enable companies to realistically achieve net zero goals. And the third area is AI. We heard in the panel discussion yesterday that AI has a tremendous transformational impact on improving productivity and effectiveness of financial services industry. So maybe this is an area where Tokyo and Frankfurt could work together to stay ahead of the curve, to reap the harvest.
Thank you so much. Oliver, could you close us out in about a minute and a half?
I do my very best. So looking ahead, the most promising area of collaboration between Tokyo and Frankfurt, in my eyes, is a platform type of partnership, aligning energy transition, trusted technology, especially AI and RegTech, and long-term asset management. Areas where financial centers can actively shape outcomes and not just observe markets. I can cut it here to give you a minute back if you want to.
Thank you, Oliver. Let me just wrap up the panel right now by saying thank you to both panelists. I think this was an incredibly interesting, reflective conversation talking about some difficult issues, but that is the reality that we're in, and I think it bodes very well for both Frankfurt and Tokyo to become critical international financial centers in 2026 and beyond. Thank you. Thank you so much.
ありがとうございました。モデレーター。
Thank you very much. Thank you to the moderator and the speakers. Once again, let us express our gratitude with a round of applause. Please leave the stage.
ありがとうございました。
Thank you very much. We will rearrange the stage for the following panel discussion. So please stay seated and wait for a few more moments. Thank you. We would like to now begin panel discussion 1. The theme is the global macro environment and Tokyo's strategy as international financial center. Let me introduce to you the panelists, and let's welcome the panelists as they come up on the stage with a round of applause. Thank you for coming. We're grateful for your presence. Please take your seats. I humbly would like to introduce the panelists one by one. When your name is called, could you bow first? Mr. Robert Kahn, Managing Director, Global Macro, Eurasia Group. His research features on the impact of the geopolitical risk on macro and monetary and financial markets. He was the senior advisor of Financial Policy Department at the World Bank and has served various other important positions. He will speak from the perspective of international macro environment. Mr. Kahn, thank you very much for coming. Next, Mr. Shindo Toru, Chief Investment Officer, Office of Investment Management, United Nations Joint Staff Pension Fund. He's been with the headquarters of UN in New York for 22 years, and he was the main contributor in enlarging the AUM to 16 trillion yen. Today, he will speak from the perspective of a global institutional investor. Thank you for coming, Mr. Shindo. Next, Professor Honda Keiko, Professor, Waseda Business School. She is member of the UN Investment Management Committee, serves on the boards of Mitsubishi UFJ Financial Group, Recruit Holdings, and AGC Incorporated, and is the chair of the board of the University of Tokyo. Today, she will speak from the perspective of international institution and corporate governance. Professor Honda, thank you for coming. Thank you very much. Next, Mr. Doi Masami, Managing Director of GRAB, Senior Vice President of GRAB Worldwide. He was the head of global communications at Toyota Motor Corporation, and currently he offers consulting services on external communications to companies and public offices. Today, he will speak from the perspective of the strength of the Japanese manufacturing sector and need for global communications. Thank you for coming. This session will be moderated by Mr. Tamura Alberto, Chief Executive Officer of Morgan Stanley Japan Holdings. Mr. Tamura serves as the chairman of the Executive Committee of the International Bankers Association of Japan and is a board member of FinCity Tokyo. Now I give the microphone to Mr. Tamura. Thank you very much.
For joining us today. I want to thank our panelists for making time. They are all experts in their field, so I think their perspectives today will enlighten us this afternoon. And for today's session, I think we would like to focus on three main topics. First would be the macro environment in Japan. Second would be Japan's status as a financial and asset management center. And then the third topic would be how can we invest in Japan's future. So these will be the three topics that we will be covering today. Let me start with the macro environment, and I think it's been covered extensively, but we have essentially come out of 3 decades of deflation, and we can see a resurgence in the Japanese economy. One metric that we follow closely would be the nominal GDP here in Japan, and as it stands right now, it's at around 665 trillion yen. And over the course of the 3 decades of deflation, that nominal GDP was basically stuck in a range of between 500 and 580 trillion yen. But things have improved significantly. We're seeing corporate profits are growing. We're seeing the CapEx numbers are going up, i.e. corporates are investing in their own infrastructure and plants. The compensation for employees is also growing. And of course, I mean, equally important and perhaps a topic right now, tax revenues are also growing for the government. So let me start by asking the panelists some perspectives around the macro environment. And let me start with Robert. You are very well versed in macroeconomics. Can the government declare victory over deflation, and what are the implications for Japan going forward?
Thank you for allowing me to join you all today. I never like to declare a mission accomplished, particularly against the backdrop of high debt, demographic shifts, and a very volatile geopolitical environment. So we should never say never, but we also shouldn't be consumed by fighting the last battle. And so I'm cautiously optimistic that deflation is a diminishing concern for the government. Of course, at the core of that is a really significant transitional moment for the Bank of Japan, moving away from yield curve control to embracing an inflation targeting framework. And I think the central bank's made some important steps to that. And I am hopeful and optimistic that they have both the economic and the political space to continue a gradual transition in that regard. And that would be consistent with a central bank that has the power to maintain price stability at low but positive rates of inflation. And I think that would be a pro-growth and stabilizing element, a constructive element of the Japan outlook going forward.
Thank you, Robert. Let me turn it to Honda-san. You have an impressive career dealing with corporates here in Japan. Should we be excited about the Japanese economy and corporate Japan?
Well, first of all, Alberto, thank you very much for having me here. It's an honor to join this panel. To answer to your question, Robert, I have to repeat what you said. I am cautiously optimistic, particularly about corporate Japan's strategic shift, rather than macro growth. For example, TOPIX, which is the major Japanese equity index, rose 22% in yen terms in 2025. Yet, the economy remains vulnerable to the external shocks and also Bank of Japan normalization risks. But the real story is governance-driven value creation. That's what I'm optimistic about. Japanese firms' capital productivity has lagged for decades. For example, the average return on equity of Japanese company on the TOPIX, the index, between 2000 and 2025 was only 5.4%. This is significantly lower than that of the US counterparties. But stewardship and corporate governance code, combined with Tokyo Stock Exchange's cost of capital and stock price conscious management, that push, comparing low ROE companies to tackle underperformance through the portfolio reshaping and beyond. So ROE and PBR improvements are underway across many firms, but the progress is incomplete. Cross-shareholdings are still unwinding, yet cash piles up average 20% of the assets for Tokyo Stock Exchange prime section company, according to the Bloomberg intelligence. So, but I think, two ways to look at it. I would look at it, there is a clear room to unlock value. If management teams seize these opportunities, Japanese firms have a stronger potential to sustainably enhance the corporate value. So that's why I'm optimistic.
Thank you, Honda-san. You touched upon, I think, a very critical topic for Japan over the past few years, and that is reform. the introduction of the stewardship code, and then the corporate governance code, followed by a reform of the capital markets through the Tokyo Stock Exchange, and then we also saw reform in the asset management industry, and then the asset owner community dating back to August of last summer. So it's a full set of reforms here in Japan, and I think these reform program has been critical for a lot of the success that we're seeing right now in Japan. So let me ask some questions around that, and let me turn it to Shindo-san. You are an experienced global investor, and how would you score what's happening here in Japan, and how is the international investing community rating the recent changes in Japan?
Okay. Thank you, Tamura-san, for your question. And first of all, it is my great honor to be here, and I really want to thank FinCity Global for these opportunities. Over the past several years, the Japanese equity has been remarkably strength. The TOPIX index has been almost doubled in the last 3 years, and this momentum has started in 2023. Let me start with sharing my personal experience as a witness of the Japanese market evolution. In 2023, the former Prime Minister Kishida convened a round table by gathering asset owners from world, and to discuss about the Japanese market future. Fortunately, I was a part of it, and in that meeting, Prime Minister Kishida advocated a new form of capitalism in which public and private sector work together and transform social challenges into engines of growth. The goal was very clear: to make structural changes happen that would strengthen and modernize the Japanese market. Corporate governance reforms are driving real behavioral change of corporates. The return on equity has improved from below 5%. This is before the corporate governance reform has started, and it's now around 9%. It is remarkable that the plans becomes reality, and the turnaround of the lost decades seems to be happening. I would give probably 90 points for the scorecard, probably with my hope that this trend will be sustained. With regard to the rating of the international investment community, I would say it's definitely improving. In the past, before the corporate governance reform started, almost nobody paid attention to the Japanese market. Some people describe this situation as Japan passing, or maybe Japan nothing, right? International investors are clearly interested in Japan in the perspective of growth opportunities, further improvement in capital efficiencies, the lower variation, and the geographical diversification. Thank you.
Thank you, Shindo-san. Maybe I turn it to Doi-san. You are in a very unique position because you interact with both the private sector, but also the government. In your opinion, how effective have these reforms been, and should we and the government be thinking of other reforms?
Okay, so thank you very much. And also, I'm very honored to be here again. Thank you very much. Overall, I think the current reform, the corporate governance reform, very, very successful. And I could see many improvement of the Japanese company for such corporate governance. And also, the recently Japan government suggested in action program, corporate governance action program 2025, that was issued last June, suggested that the Japanese corporation have to have a more strong the capability to cope with global risk. Because the global risk now is increasing after the Ukraine and Russia, Russia invaded Ukraine, and also the other turmoil in the world. So that is very important. I think the companies have to have a more strong capability and robustness to respond to such crisis. But on the other hand, I think there are many the opportunities from such global risk. Firstly, from the U.S.-China tension. Actually, that is a tension, that is a risk. We could see. But the Trump, they imposed the tariff to the China, 145% last year, and 2 weeks later, immediately he decreased the tariff 110%. It means the American society or American people understood they could not live without the China product. So almost everything like clothes and solar panel batteries are coming from China, and also ingredients of the medicine are coming from China. So the American people understand now they need the production, they need manufacturing. I think Japan has a lot of chance to respond to such kind of the Americans the demand. Japan can provide the manufacturing technology to the U.S. For example, rare earths, Japan has a lot of that technology, motor technology without rare earths. And also, I was in the Toyota Motor Corporation 30 years, and when I was in Toyota, Toyota decided to transplant the Toyota technology, like a Toyota production system or just-in-time system to the U.S. From 1990, almost the 30 years ago, and now still working on that. So it's time, about time. Japan have to transfer the Japanese production to the U.S. again. Secondly, as for Europe, Europe, as you know, decided to increase their defense budget by 5%. It seems like the result of the push of the Trump. Everybody says so, but the European countries, don't think so. They want to be independent from America. They want to build up their, military industry, the defense industry and manufacturing inside of the Europe countries. After a Greenland issue started, that direction is becoming more clear and clear. They want to have their, production, the manufacturing inside of the European countries. Again, Japan can provide such kind of the manufacturing, technology to Europe. Europe said, mega. Make Europe great again, not the mega, So they want to do the great, the power for production, manufacturing. So Japan also, can do, especially the dual-use technology. Dual-use means military and civilian, the technology. Japan is very strong on that. The core, the technology for that is the camera, sensor, and the motors. This is a robotics technology, actually. Japan produces 45% of all of the industrial robots in the world produced in Japan. So Japan is very strong on that, the dual-use technology also. So Japan can provide that. And I think, we have a lot of chance from such kind of the global risk. So not only the risk, but also the opportunities also should be communicated to the investors also. So the corporate governance should have opportunity and risk from global turmoil. That this is the new, the understanding for global, the geopolitics again. And so the government and the companies have to work together to take advantage of this, Japanese strong point. Yeah, I will stop here. Thank you.
Thank you, Doi-san. Let me turn it to another point that I think is important, which is the government has been very well coordinated in a lot of the reform programs here in Japan. For example, if you look at the different ministries and agencies, and I'll name a few of them, the Bank of Japan, the Ministry of Finance, the Ministry of Economy, Trade and Industry, the Japan Financial Services Agency, the Tokyo Stock Exchange, and even the Ministry of Health, Labor and Welfare have been part of this journey recently. And I would argue that one of the ingredients for some of the success that we're seeing here in Japan. Robert, maybe if you can give us a little bit of the perspective from the outside world on this matter. Have you seen this type of commitment by any central government, and what are the ramifications for further coordination amongst these multiple agencies?
I think there is. I think we do have an element of best practice that we can see forming on the global experience, particularly during a period of reform, where there's greater uncertainty about the structure of the financial market, the risks in transition and in the longer term. I think it's very risky to depend on just one agency to oversee, to coordinate and to communicate about those risks. So I think we are learning that an effective coordination process across agencies has huge benefits potentially. We're also, I would emphasize, an environment where a more complex financial system, a better developed financial system also means more risks are outside the banks. And indeed, that means that the bank regulator alone can't see the whole picture. So as I put that all together and I look across the world, I'm actually a strong supporter of what the US had been doing, which was the development of a coordinating committee, the FSOC in the US case, that explicitly worked to link across these agencies. That had the advantage both of ensuring good information sharing within the government, very important as a start, but also a communication strategy for talking to the public, which I think can be really important at times of stress. Now, the current Trump administration is, to some extent, reassessing how it wants to think about FSOC and use it. I hope it comes back to a real belief in it. I sometimes think to myself that sometimes it takes a crisis for governments to realize that some of the old structures still work. In this case, I'm committed to it. Let me just also add, you've asked the question in terms of the coordination within the government and how critical that is. There's also an issue about coordinating internationally. And there's a lot of politics now swirling internationally about the whole issue of multilateralism versus unilateralism. And of course, a lot of that speaks to what's happening in Washington right now. However you feel about that debate, I think in this space, multilateralism is essential, right? That you need to have a fire department that takes the call when there is, a problem. And, and that means in this case, international coordination on financial stability issues. It means that there has to be that explicit capacity to pick up the phone and reach your counterparts. And that there's muscle memory, that there are relationships and trust that has been built up. And that takes some time. So I think particularly with the Japanese government embracing reform, creating new structures and the like, it's all the more important that they're able to have these relationships internationally as well, that they're having conversations at the Bank for International Settlements, at the OECD and other places. They may need a little help in making those connections to the extent that right now it is difficult to know who the counterparts are in the US and what the philosophies are. But I think it is worth the effort to try and continue to pursue that on an international basis. So both domestically and internationally, I think best practice is to have that kind of coordinating structure.
Thank you, Robert. We'll hear from you later on, and our other panelists, I think we will talk about geopolitics and some other risks a little bit later, but maybe going back to you, Doi-san, do you think, you mentioned some very specific examples of things that are happening here in Japan, but going back to what the government can do and how it can coordinate with the private sector, and there's one agency or ministry that I didn't list before, but listening to your comments, I mean, other agencies like the Ministry of Defense, for example, could be part of some of the, development programs here in Japan. What are your thoughts on overall reform and what the government can do?
Okay, so thank you very much. And also, I a little bit make comment on the cons and the remarks about multilateral, the collaboration. I think this is very important, especially the global risk means the supply chain risk. So now, the supply chain is disrupted, I think, by the many, turmoil in the world. So there's such the multilateral, the understanding the situation and also multilateral support for the, such a supply chain. We want to call it friend financing. Such friend financing is important for the robust supply chain in the world, to keep the current prosperity in the world, business and economy also. So on top of that, I'd like to talk about small and mid-sized companies in Japan. That has a lot of the chance, I think, that they can be globalized more. They need money. Actually, the Toyota Motor Corporation, has 30 or 40,000 suppliers in Japan, and they are very, very strong. And the Toyota product is just, the combination of these the small and mid-sized companies' effort. That is the Toyota's car. Still, it's very strong in the world. I think these, the SME, we call it SMEs, the small and mid-sized companies. They are very capable to meet with Toyota's very severe requirement, and Toyota required them about the price, quality, technology, and everything. Every 4 years, Toyota, they launch the new product. They are invested a lot for that, and they are very capable. They are very strong, but they don't have money enough to be globalized so much, and they don't want to be listed. I think it is the role of the private equity fund. So if they have a private equity fund and support them to be globalized, I think it's a big chance to be successful for such SMEs in Japan. There are many, many good SMEs in Japan. And this is also the good opportunity, profitable opportunity for for the private equity fund from the other country. So I want to have more money from other country for PE, private equity, for supporting the Japanese SMEs. That will be a very, very important. And currently, government and also Tokyo Metropolitan government are supporting such a SME to have a more transparency or the corporate governance and also global communication skill. We are also in our company also supporting that the global communication scale for SMEs. So that is a very important point. Again, thank you.
Thank you, Doi-san. Doi-san just mentioned the Tokyo Metropolitan Government. We've been talking about a lot of efforts within the central government, but it is important to know the contribution from the local governments, especially the Tokyo Metropolitan government. FinCity Tokyo is a primary example of that effort, and under the leadership of Chairman Hiroshi Nakaso, whom you just heard from recently, there have been a lot of initiatives that have been put forward just accelerate the interests of the country and ensuring that the status of Japan as an asset management center and financial center are elevated. On this particular note, let me go back to Honda-san. What are the implications of making Japan a stronger financial and asset management center?
Alberto, thank you very much for the good questions. If I may, to answer the little bit of twisted questions, such as why we have to make Tokyo as the financial and asset management center. May I just going to start from there?
Yes, go ahead.
Of course, financial activities as well as wealth is concentrated in North America, where I spent last 12 years. I just came back about a year ago here. You know, it is true. Half of the professionally managed money reside in North America. 25% is in Europe, only 5 to 6% in Japan. But don't you think it's too much concentration going on? Then Robert talked about, I don't know what the good word to say, to be politely, but unpredictability of the United States government. So, you know, look at Japan. Japan has very wide, diversified industries with 3,900 public held companies and deep liquidity in equity, fixed income, and forex. And also rule-based regulatory environment. Central governments as well as regional governments are very well coordinated. On top of it, Japan is the world's only second largest city. Only after Jakarta, recently Jakarta surpassed us. This, I would say, offers unmatched scale of diversification opportunity. That's why I think it makes sense, Tokyo to aspire to be financial and asset management center.
Thank you, Honda-san. Let me turn it to Shindo-san. And as Japan improves its status as a financial and asset management center, what are the opportunities for global investors?
Okay. Yes, I see clearly opportunities for asset management companies globally. The asset management company can provide, innovation and resilience and greater depth to the market. Their growth is essential for Japan as it works to build a truly robust and globally competitive asset management center. Right? The saving is still dominant in the individual financial assets. It is essential that the asset management industry provides more options for investment vehicles, create more opportunities in generating higher returns. This can accelerate the establishment of the new forms of capitalism. This is sort of a chicken and egg problem, but clearly I see a lot of opportunities. For example, when the market plunged, people are scared, and they tend to be selling on weakness. They are adding volatility and create a negative spiral. If there is a group of people or group of investors who see value when market plunged, they would buy on weakness. They function as a stabilizer of the market. This will provide the resilience of the market, at the same time, the robustness of financial center, which may attract more capital. Thank you.
Thank you, Shindo-san. So we will maybe shift gears a little bit here and talk about geopolitics and how some of the pressures from the outside can affect the strong domestic policy agenda that we have here in Japan. And obviously, geopolitics have become more volatile. Honda-san used the word unpredictability, which I think might be an understatement. But I do think there's a need to diversify risk, and that would probably apply to, not only financial institutions, but also corporates and even individuals. So, Robert, given all of these uncertain geopolitical conditions across the entire world, what are the key challenges for Japan, and what should the priorities be for the government as it revises the country's economic security agenda, which is actively doing right now?
Honda-san was very polite. I'll be maybe slightly less. But we'll start with the notion that this is a time where geopolitics matter to all of you more than perhaps ever before. Not just that geopolitics is everywhere all at once, but that these are the shocks that are material for markets, right? And part of it is, and I love to use phrases from old movies, but there's a Hitchcock movie phrase where the terror comes when you realize the call is coming from inside the house. And in this case, the house is Washington, D.C., right? I'm here the past 10 days, I've been talking to our friends and our clients about our top risks for the year. And of our 10 risks, 4 are fully U.S. risks. And if you think about that in the broader swath, not the Middle East, although there's a lot of danger there, right? Not Russia and Ukraine even, or even things like AI, which are, worrisome issues. The United States as the source of global volatility. That is critical. It means that it reflects that the U.S., that President Trump is engaged in an effort to rewire global trade and investment. And that will have powerful and lasting effects, not all bad, some positive as well, but a lot of them scary and disruptive. And countries like Japan are very much caught in the middle, given their importance in the global economy and their traditional relationships with the U.S., all of which in some way are up for renegotiation. It means a world of a lot of volatility where deals can be renegotiated and the rules of the game still very much in flux. I've talked about President Trump, but I think I want to make one more point before we talk about Japan, which is I view the president as both symptom and cause in this current moment. Cause in the sense that he is a unique historical figure, he is chaotic, and he has policy issues and interests that are challenging, particularly in a rules-based and norm-driven society. But he is also a symptom of broader shifts in the U.S. and elsewhere, populism, polarization, a retreat from commitment to free and open trade, which I think we need to engage with and fight back on, but it's challenging. Canadian Prime Minister Carney in Davos gave a very powerful speech in which he said, we have to fight back on this. But he also said that what he called middle countries, which I would say not the 2 major powers, but other countries, have a unique kind of situation and responsibility to help write the new rules of the game. And so it is challenging. I think, for example, the Prime Minister, in her March visit to the White House, daunting task of re-engaging President Trump in this alliance and economic, political defense. I think it will be a very important moment for her, although I think the election results this weekend could play very powerfully into that, setting the stage for that, so you can be optimistic. But I spend most of my time talking about everything that can go wrong, and that's the easy part. But let me also then mention something constructive. Because one of the things I firmly believe in here is that in a world where the U.S. is stepping back from leadership, we call it the G0 world. My boss, Ian Bremmer, has written about this for a decade. He says this is the year where you get the G0, where the U.S. steps back and we confront that void. I firmly believe that that's an environment where you create new opportunities for middle powers, what Carney called middle powers, for coalitions of states to step into the void. And I think that's no more true than in the financial sector. I anticipate we will see the growth of regional centers. There will be new opportunities. Some of that fragmentation of trade and finance that we're seeing will also create new opportunities for regional alliances to fill that void, to be sources of innovation. And I think what we're talking about now, I realize it's being driven in many ways by Japan's specific demands and opportunities, but I think it is also beginning to fill that international void. So I think now is the time, and I believe that it can be seen as a positive development to a new world order. It doesn't preclude the U.S. re-engaging. It doesn't preclude that the next president may come back in part, although, as I say, some of these are longer-term trends that will outlive Trump. But I do think it is an opportunity for finance, and I do think that Japan then can fill that role in the way that the other speakers on this panel have highlighted.
Thank you, Robert. Honda-san, you know, it has been a very challenging environment for boards across corporates and also management teams. I mean, we've gone through a pandemic. We've seen military conflicts around the world. We've seen supply chain shocks. We have seen tariff regimes. And then, of course, I mean, increasing geopolitical risks. How do you think corporate Japan is doing in terms of balancing all of these risk factors and in general doing with risk management?
Alberto, thank you very much for a very tough question. I think corporate Japan has handled the pandemic, supply chain shocks, by leveraging the diversified manufacturing, reshoring, also China plus one strategy, etc. But we are facing, the largest challenge we are facing right now is the US policy unpredictability. And also we face the Bank of Japan normalization. Those are the two challenges that I think have to be careful. So therefore boards, I cannot talk about the management right now, but I can talk about boards must prioritize multi-scenario planning and capital disciplines. But I think cautious optimism endures if governance reform continue, which I think central governments coordinating with even stock exchange they are pushing right now.
Thank you, Honda-san. Doi-san, for you know, thinking about the Japanese bureaucracy and how it's dealing with all of these risk factors, what are some initiatives that the public and private sector can undertake to ensure overall stability and resilience for Japan?
Yeah, okay, so thank you. As the concept, Robert said, you know, the Japan is one of the middle power. And Japan also have to contribute to have a stability and prosperity in the world, which is now destroying or disrupted, I think. How can Japan, you know, how can Japan could contribute to such a new order, the new world? I think maybe, again, you know, supply chain, the robustness. So now, you know, the many countries depend on China or Taiwan semiconductor. Most advanced semiconductor, you know, in the world will be starting in Japan. You know, Rapidus. Rapidus is one of the, I think, the best example of the collaboration between government and also the corporate sectors. They are going to produce the most advanced semiconductor from the next year. Already test the production was successful in the last year, July. And that is so much supported by the government. The METI and the Ministry of the Finance also, you know, supported that, and many Japanese companies, including Toyota, also, you know, supporting that project. And that could make the very stable, you know, the sustainable, you know, supply chain for semiconductor. Now, you know, the 80% of the advanced semiconductor are coming from Taiwan. And so if a Taiwan risk happened, you know, it's disrupted. So these kind of, you know, the supply chain robustness is very, very important considering the current geopolitical risk. But as I said, sometimes geopolitical risk could turn to the chance to Japan. You know, Rapidus is the one example. You know, actually, IBM, you know, developed the technology, and IBM didn't went to Taiwan this time. They came to Japan because of the Taiwan risk. So the sum, you know, the risk could turn to the chance for us also. And also, Tokyo Metropolitan Government supporting perovskite, the new type of the solar power technology. I think this is also very important because 80% of the solar power are coming from China now to the world. So if I know the EV is increasing in the world, more, you know, dependence on China is increased. So they want to avoid, we have to avoid such kind of too much dependence on China or certain country. I'm not talking about China only. If we're dependent on the certain country only, it will be a risk for the supply chain. So we have to diversify the supply chain and not depend on one country. So there's such a support by the Tokyo Metro government for the perovskite. They call it air solar. I think this is also very important. And also the finance, the system should support this kind of activity in order to have a robust supply chain in the world in a global turmoil period. Thank you.
Thank you, Doi-san. Shindo-san, I mean, we're discussing many risk factors here, and I would imagine that you as an investor dispose a lot of problems for you. What are some of the key messages that you relate to your clients in this very risky environment that we are going through right now?
Yeah, thank you, Tamura-san, for reminding me my headaches, right? As you know, market is volatile. This is nothing new, right? That everybody knows that, and this is why asset management company has to put the footmark saying that the historical performance is not indicative for the future's results, right? However, the market environment today is more complex, and I would say unpredictable than ever due to tightly interconnected geopolitical and geoeconomic situations. The recent market development, particularly very strong US equity, technology, tech sector, and also US dollar in the long term. Honda-san described this situation from a different angle, but these kind of trends created over-concentration issue. We have a big exposure in US equity, big exposure in tech, and big exposure in US dollar. This is our situation, but I think this is a similar situation for a lot of pension funds, and also sovereign wealth funds. For long-term investors like us, the pension funds, a disciplined approach and long-term orientation are essential. Diversification is the most important risk mitigation approach. So multiple trusted and transparent financial center, maybe norm-based, rule-based financial centers are highly welcomed. Japan is one of those trusted centers representing one of the world's largest economies. Thank you.
Thank you. I think we're heading into the last 5 minutes of the session. I'm just going to ask a question to our 4 distinguished panelists. If you were to make a pitch to either friends or colleagues on why they should consider setting up business here in Japan, what would that pitch be? Let me start with Doi-san.
Yeah, so very shortly, when I was at Toyota Motor Corporation, I was a manager for new factory, the plant decision making. So when I was there, the most important factor for the new factory in the world is human being or human resources and the supply chain. And Japan has a lot of the good supply chain for any the industries, and also the many good people, many good engineers all over the country. That is a strong point, and please come to Japan. Thank you.
Thank you. Honda-san?
Okay, if I were asked the questions from asset owners living outside of Japan, my answer would be Japan provide diversification opportunity with rule-based regulatory environment, diversified industry, deep liquidity in equity, fixed income, and forex, and sizable personal financial assets, which started to taking more risk right now.
Thank you. Shindo-san?
Yes. I see Japan a lot of upside potential because after lost 3 decades, a lot of things to catch up. The trend has just started. The 9% ROE is not sufficient. I'm hearing that there is still a lot of room for improvement. And yesterday I had an opportunity to meet with several asset management companies, and the common words I heard is under management. They're still seeing that there's a lot of assets under managed. That will bring the profitability down for the corporates, right? And also there's a big opportunity for the asset management company to make a profit, right? So there's still a lot of opportunities. And I'd like to see the much higher profitability, and that will be appealing to foreign investors. But I think it is possible to achieve those kind of trends. So yeah, this is a long-term journey, but I think this is a very good entry point, because if we know everything is certain, that's the end of the cycle, right? Peak of the cycle. So come to Japan. Thank you.
Thank you. Robert?
I think it's been said really well. I think what you're hearing here, certainly it's fundamentals. So it's rule of law, important time to say that. Human and physical capital, obviously critically important. Economic dynamism, essential. All of that's there. And to the supply chain discussion, I would say optionality in a complex, uncertain world. I think those are all very important factors, because you're making investments here for the long run, right? And that's, I think that's been reinforced in the last year. For a lot of our clients, what has been extraordinary is the overpowering degree of uncertainty, right? Given about what the rules of the game were, political alliances, just simply economic outcomes. What level of tariffs will we be dealing with? It's so hard to ask people to make long-term, irreversible capital investments in that environment. Now, I am hopeful that we will be heading to a period over time where there is greater clarity about the rules of the game. But I still think we're going to see a lot of industrial policy. We're going to continue to see tariffs play an important role and the like. So in that environment, I think anything can give that long-term predictability. So in investment, you can have the confidence about your returns. And the supply chain element is very important in that regard.
This is not planned, but I'm gonna do a pitch myself on why is it that Japan is a great location to do business, and I'll probably mention 4, and I'll start with the government. The government, like I said before, is very well coordinated, but it's very, very interested in the welfare of the Japanese citizens. And I think that as simple as that sounds, I think that's very important. Human capital. There's a lot of well-educated, dedicated workforce here in Japan willing to work the long hours, including the Prime Minister. So I think that's equally important. Then 2 more, which would be manufacturing capabilities and technology. And this combination of manufacturing and technology is important in a world in which we're trying to figure out resiliency plans for each country. The economic security agenda is very important. And I do think that being able to manufacture, advanced technology is very important. So by all means, for anyone that is thinking about coming to Japan, do come to Japan. And if you need help, FinCity Tokyo can make introductions. So I want to thank the panelists. It's been great hearing from you, and I look forward to future interactions. Thank you.
ありがとうございました。
Thank you very much. Big round of applause to the moderator and the panelists.
この後なんですが、
After this, we will have a pitch session. We will have to rearrange the table. We need some time. So please wait for a while before the pitch session.
それではお待たせいたしました。ピッチセッションへと移ります。このセッションのテーマはアトラクション U 金融系
This is the pitch session, and the theme is Attraction U, Foreign Financial Firm Discovery and Investment Attraction Program, new entrance to Tokyo. Let me brief you very briefly about this project. Attraction U is a project inviting, discovering the startups in the whole world. From world over, the business models are held by promising companies, and it will activate the Tokyo as the financial center. So the purpose is to enhance the position of Tokyo as the financial center. So at this Attraction U, we have selected companies after a very rigorous screening. So they will talk about their activities as well as their thoughts and ambition about the Tokyo market. So this is going to be the pitch presentation. So we will begin the pitch session. So select the Equity Japan representative, Lynch-san, Jake Lynch. Good day, ladies and gentlemen. Thank you very much for giving me the time. I appreciate it from the bottom of my heart. Thank you very much for this opportunity. Tokyo Metropolitan Government and the TMF and the TFM, I thank them. I am Jake Lynch, a representative of FinCity, and I will turn to English.
By our chairman and CEO, George Learning, when he was 23 years old with $80,000. In the early days, we were a research shop, and we published equity research on small and mid-cap companies and sold that to the institutional investors. Today, we manage approximately $30 billion US across a number of strategies, with about half the capital deployed in the United States and half the capital ex-US, including about $1 billion here in Japan. We offer both long-short and long-only strategies. We have a team of about 200, mostly based in New York City, of which 74 are investment professionals. We are 100% employee-owned, and we have over $1 billion in employee capital invested alongside our strategies. And George continues to act as the PM for our flagship long-short strategy. Well, we've been investing in Japan for over 15 years. In 2025, we started the process of establishing a permanent presence in this important market. We've lodged our application for a license with the JFSA and look forward to receiving that license sometime this year. Now, when asset allocators review our holdings, they often remark that our portfolios are highly differentiated from the typical growth-oriented funds. And I'll give you 5 reasons why that is. Firstly, our focus on quality. For over 30 years, the team has had a very clear mission: identify the highest quality companies available on the public markets and build a deep understanding of those value chains. We're looking for companies that can compound their cash earnings at over a 10% rate with a high degree of predictability over the next 5 or 10 years. We look for deep moats, secular tailwinds, and high-quality management, high ROICs, strong balance sheets. We really think of ourselves as owners of businesses rather than as traders of stocks. We typically avoid highly regulated sectors such as banks and telecoms. We keep clear of commoditized industries, as well as industries where the ability to predict is low, such as consumer tech. That means that 70% of listed equities we won't buy at any price. Give you a couple of examples. We have heavy exposure in the semiconductor supply chain, but little in consumer tech. Of the Magnificent Seven, 4 meet our quality criteria, but 3 do not. Second, we have deep expertise in mid-caps. We do have large-cap strategies that have performed well, but we started as a mid-cap research house, and mid-cap specialization remains deeply embedded in our culture. Third, we are fiercely independent. We don't use sell-side research. We don't attend idea dinners. We don't broadcast our holdings in the press. For 35 years, our headquarters in New York has been in the same building in the East Village, far from other managers. We are going to make mistakes, but they are going to be our own mistakes. Fourth, we have a team of 17 former forensic investigative journalists. And this team performs deep dives on value chains that we care about. And this gives us differentiated insights that the standard expert networks cannot. Fifth, we are patient and disciplined. We'll typically study a company for 2 years before we initiate a position, or longer if we have to wait for a valuation opportunity to emerge. In our flagship long-short strategy, we are long biased. The strategy typically runs about 200 to 220% gross, and net exposure is typically in the mid-70s. As a result, since inception, we've tended to capture roughly 2/3 of up markets and only 1/3 of down markets, with a beta to the S&P 500 of around 0.4. What do we short? We need a variant view, different from the market, along with catalysts. We do have a dedicated short team, and our research process regularly turns up companies with aggressive accounting, deteriorating pricing power, value chain disruption, etc. Now, before I finish, I do want to touch briefly on where we see markets today. The slide behind me shows the relative performance of quality stocks versus the S&P 500. As you can see, 2025 was an exceptionally poor year for quality. To give you a sense here on valuations, over the past 10 years, our flagship long-short strategy, in our long portfolio, high-quality stocks had an average valuation premium to the S&P 500 of 21%. We're paying 21% more than the S&P 500. Today, if you look at our portfolio, it's at a 6% discount. If you look at mid-caps, the Russell Mid-Cap Index over the last 10 years averaged a 3% discount to the S&P 500. Today, that's a 22% discount. The market is not positioned in quality, and it is not positioned in mid-caps, and that's really our sweet spot. And if you can read the chart, to find another parallel period, you have to go back to the late 90s in the internet bubble. Now, we do not claim any knowledge as to the timing of when a cycle may turn, but I would direct your attention to the last comparable period after the internet bubble and then the subsequent multi-year outperformance of quality starting in 2000. We think we're in an excellent position to capture the upside from the segment of the market that's consistently delivered the best long-term returns, quality growth. Thank you very much for your attention. ありがとうございます。
リンチ様、ありがとうございました。どうぞ拍手でお送りください。では2人目です。2人目はアルファスクエアグループディレクターブランドン・グー様です。どうぞ拍手でお迎えいただきたいと思います。
Good afternoon, everyone. It's great to be here, and thank you so much for having me. My name is Brandon, and I'm with Alpha Square Group, or ASG. So before I dive deeper into my presentation, I'd like to show you a brief introductory video for our company. Thank you so much. Yeah, that's just a brief introductory of all the companies that we've invested in for the past few years. So I'd like to show the presentation deck. Thank you. ASG is a New York-based investment firm founded in 2015 with strong family office DNA. Today, we manage about $1.5 billion in assets and are SEC registered in the US. With the tremendous help from FinCity, we've successfully opened our Marunouchi office last year. We invest globally across both public and private sectors with a strong focus on innovation-driven sectors. But more than just capital, ASG was built around one simple idea, that great outcomes come from being good company. That philosophy shapes everything we do. At a high level, ASG operates as a multi-asset, multi-strategy platform. On the private side, we're deeply focused on cloud and AI infrastructure, enterprise software and SaaS, cybersecurity, robotics, and applied AI. We've invested in over 50 venture capital and private equity funds around the world. On the public side, we invest across equities and hedge fund strategies, including equity long-short, event-driven, macro, relative value, and fund of funds, drawing on insights from 20+ hedge fund investment and our own internal portfolio management experience. In parallel, we also have long-standing strategies in first, real estate, spanning both equity and credit across public and private markets. Second, art and culture assets, where we work closely with leading collectors, institutions, and artists globally. This diversification is very intentional. It allows us to stay resilient across cycles while remaining highly selective where we believe innovation is compounding the fastest. So one of ASG's most important strengths is our global network. We work closely with over 700 family offices worldwide, alongside institutional investors, funders, and corporate leaders across the US, Canada, Japan, Hong Kong, Singapore, and beyond. So in the US alone, we're connected to over 8,000 AI, SaaS, and robotic companies, which give us a unique vantage point on where technology is heading, not just from an investment perspective, but from a real operating and adoption standpoint. So because of this position, ASG often serves as a trusted nexus, connecting capital, technology, and strategic partners across regions. So what makes ASG a bit different is that we don't view ourselves as just an allocator or investor. We're very hands-on in value creation. For founders, that means helping with strategic partners, supporting international expansion, connecting them to the right long-term capital and corporate partners. For family offices and investors, that means curated access to high-quality private opportunities, thoughtful asset allocation across generations, a long-term trust-based approach rather than transactional deal flow. This mindset extends beyond investment. ASG also places a strong emphasis on community and social impact. Each year, we host flagship events across Asia and the US, bringing together family offices, funders, C-level executives, and thought leaders. These gatherings aren't about pitching. They're about sharing perspectives on technology, capital, legacy, and responsibility. We believe that capital, when deployed thoughtfully, can support not just financial returns, but also culture development, human connection, and long-term impact. So that's why ASG has remained active at the intersection of technology, art, and human capital. So to summarize, Alpha Square Group is built on 3 core pillars. First, sharp edge, deep insight into innovation and market transitions. Second, deep resources, capital, networks, and long-standing partnerships. The third, but not the least, trusted nexus, connecting people who should be working together. We are long-term in mindset, global in perspective, and relationship at our core. So thank you again for the opportunity to be here. I'm looking forward to the conversations ahead. Thank you so much.
グー様ありがとうございました。 どうぞ拍手でお送りいただきたいと思います。
Mr. Gu, thank you very much, Mr. Gu. A round of applause for the speaker, please. The third is a speaker from Rise Technology, Client Success Director, Mr. Jackie Jia, Client Success Director of Rise Technologies. So over to you, sir.
Very good afternoon, everyone. 皆さん、こんにちは。
Good afternoon, everyone.
Jackie Jia, not Jackie Chan from Hong Kong, unfortunately. So I'm the director responsible for client success at Ninnovate, together with our technology platform, RACE. So it's truly a pleasure to be here today with everyone. So now some of you may ask by wondering, what is really Ninnovate and the RACE? I will explain it. Promise in a local way. So we are here at Tokyo. We love sushi and sashimi, like many of you. Whenever we eat sushi and sashimi, there's one thing, always naturally come out: wasabi. Not the main dish, but absolutely essential. That's who we are. We are not asset managers. We are not fund managers. We are the partner behind them, freeing their hands so that they can focus on what really matters: value creation. So at Ninnovate, everything we do comes to these two ideas. We empower assets, and we enable growth through people, process, and technology. Ninnovate is a leading asset servicing provider focused on transforming alternative investment industry through innovation and technology. We support the entire fund life cycle, from launch to operation to compliance, reporting, and the investor engagements. But we go beyond traditional fund administration. Our services are powered by RACE, our proprietary cloud-based multi-platform ecosystem. RACE unifies fundraising, fund operation, compliance, accounting, reporting, and the insights into one seamless network. So this means better connectivity, real-time data, and scalable operations across the entire investment cycle. So today, we serve clients globally across APAC, Europe, Asia Pacific, combining global standard with local expertise. Our vision is simple but ambitious: to build the world's most connected, intelligent, and trusted ecosystem for asset servicing. And our mission is to simplify the complexity, enhance transparency, and help our clients to scale with confidence. So we truly believe in thinking global, acting local. Today we support over $140 billion in asset under administration, more than 800 funds with 400 plus in-house experts across 13 global offices, include Tokyo. Our focus is firmly in the private assets, private equity, venture capital, real estate, private debt, fund of fund, and of course, their respected investors. So simply, wherever our client operates, we are at the ground, speaking the same language, understanding local regulations, and delivering with global consistency. So what we really do, from the fund services point of view, we provide end-to-end fund administration, professional investor relations, independent portfolio monitoring, regulatory and ESG reporting, also regulatory compliance support, corporate services around all the different jurisdictions. And also we offer technology consulting to enable scalable operation to help our clients. With expert people supported by powerful technology, we strengthen governance, improve data clarity, and allow fund managers to focus on performance, not the day-to-day tedious operations. And the second, let me briefly introduce our technology RACE. The full name of RACE is Robust Alternative Investment System Exchange. I call it RACE, too long, even I can't remember. So RACE is not just a system, it's an integrated ecosystem. It connects fundraising, operations, compliance, and reporting into one automated workflow, powering faster decision and better outcomes. From investor communication, fund accounting, portfolio monitoring, compliance automation, HR management, to service desk, everything operated in one secure, cloud-based platform. So the benefit to fund managers and also service providers is clear. It's one all-in-one platform, higher efficiency, greater transparency, better investor communication, global scalability, and enterprise-grade security. In short, it's less friction, more insights, better control. So for our past 10 years servicing our clients, we are grateful that our commitment to premium services and the quality deliveries has been recognized by the markets. All those awards belongs not just to our own team, also our respectful clients who trust us as a long-time partners. Clients choose us, Ninoway and RACE, just for 5 key reasons. Our technology advantage, our integrated ecosystems, our global presence and the local expertise, and our award-winning solutions, and most importantly, our client-centric partnership mindsets. We don't just deliver services or selling technology solutions. We build relationships. So finally, I want to speak directly to Japan private market participants. Out of deep respect for these markets, we already opened our Tokyo office and are actively building a local team. We are committed to learning the local markets, local regulations, local expectations. By combining Japanese market understanding with our global expertise and technology, we aim to deliver exceptional services to fund managers and investors here in Japan. Thank you very much. Moro, arigatou gozaimasu.
Thank you very much.
Jia-sama, ありがとうございます。
Thank you very much, Mr. Jia. Big round of applause, please. And then we go to the fourth speaker, and that is Mr. Hayata Tokizawa, Managing Director of FinCapital. Please welcome him with a big round of applause. Thank you very much for giving me the time. I'm Tokizawa of FinCapital. Today, I would like to talk about where we invest and also why we are selected as a partner by many institutional investors. Finance and technology are merging. It's not only the capital allocation. The structural change is very important in order to partner with institutional investors. So we are the platform for that. In 2018, our company was made, and it is a life cycle type investment company specializing in enterprise software. We have asset under management of $1.5 billion, and then we have received a $300 million commitment. So next year we will have AUM of $2 billion. 120 companies we invest, and VC and growth equity. Both are managed, so this is the full life cycle type of investment. So growth stage until IPO, we have a consistency of all processes included. Why come we are selected as LPs? I think there are three reasons. The first reason is that we have a thorough specialization into the domain, into fintech and finance domain, and also former operators make the investment judgment. Former operators have the mindset of the founders or the business side owners' mindset. The third one is Lighthouse. This is the management platform for AI-based, and we have the consistent management from discovering the project until the monitoring after the investment. As a result, we are in the upper 15% of Cambridge benchmark. Many LPs look into the diversified investment, but not only that, they regard this as us as the strategic investment object. Now, what is the domain of our investment? Software is the area where we concentrate, especially three sectors: AI, cyber risk technology, deep tech, that's the first sector, and the bank tech, wealth assets, and insurance tech, that is vertical software, and then the third sector will be the payment sector. So $25 trillion is the market that we look into. So we are investing in the center of a structural change in this huge market. This is the introduction of the team members. Founding Logan Allen, founder and managing partner. He was a former operator of the organization, also including Japanese members. We have the team. So for the Japanese investors, we can provide local services being here in Japan. FinCapital. Symbolizing it, it is the strategic partner framework which characterizes our company. 60% are strategic LPs. Many financial institutions have come into our group. So LP is not only the capital provider. We regard them as the people who will create values with us, a strategic partner. So to the strategic partners, LPs, Lighthouse is the platform through which we provide the market intelligence access. And also we provide co-investment opportunities to LPs. So due diligence is supported by us. Portfolio companies, commercial linkage is something that we provide. Up until now, we have introduced more than 700 business opportunities, and it's not only the introductions, we follow them until the actual commercialization. So it is not the financial return, but we provide a strategic return too. So it is not only to where you invest, but with whom you collaborate. So inside network, we are providing opportunities of various kinds. Thank you very much for giving us the precious time of yours. Thank you.
Tokizawa-san, thank you. Let's thank him with a round of applause. The fifth speaker is with KBRA. Ms. Miki Monroe-Sheridan, Head of Business Development, APAC, KBRA. Thank you for the kind introduction. My name is Monroe of KBRA. I'm honored to be given this great opportunity, and thank you for being here. Let me introduce you to KBRA very briefly. We are the fourth global credit rating agency. Our headquarters exist in the United States, and we have offices in Europe, UK, and Japan. When it comes to credit rating, financial institutes are well aware of what we do. AAA, AA, BBB, these are the ratings that are given. And from an independent perspective, we look at companies and the credit worthiness of companies. Our track record, about 7,000 issuers, the total amount $4.1 trillion, and the number of credit ratings 87,000. We have a wide sector coverage: sovereign, operating companies, financial institutions, as well as asset-backed securities, structured finance, fund finance, private credits. These are included in our wide coverage. ABS, fund finance. In market ranking, we are ranked as one of the top players. In 2010, at the time of the global financial crisis, we were founded. From such backdrop, we have strength in transparency and deep analysis. And as the first Asian office, last year in January, we established our Tokyo office. And therein after, we have been speaking at major conferences in Japan and Asia. Last year, during the Japan Week, KBRA Japan hosted the first ever KBRA Japan hosted seminar. We have operations on global basis: US, Europe, Canada, UK, and Taiwan. We have registered at regulatory authorities of these countries and regions. And regarding Japan, currently there are 5 registered credit rating agencies, and we have been the first applicant to apply to the Japan Financial Services Agency to be certified as a new credit rating agency. In our wide coverage, we focus on private credit and structured finance. These are areas of our competitiveness. Private credit is a word that's positively taken but negatively taken in recent weeks and months. But as the word private describes, information is limited. So how can information be collected, and how should analysis be done? These are some of the questions asked by many players. And the excellence of products and flexibility of product offers a wide opportunity, so amount of investment is increasing, and that kind of global trend has made inflows into the Japanese market as well. And direct lending is the main means in private credit, but the means have diversified: fund finance, fund investment vehicle, private ABF. These are some of the new channels where investment is coming in through diversification of channels. If I may supplement, in the area of direct lending, after the global financial crisis, regulations were tightened and bank lending became limited, so direct lending emerged in the private capital market. This is taking root as a main means of financing, and investors who are seeking high yield is being funneled into direct lending. And in the midst of such flow, KBRA is engaged in fund finance, rated VD note, CFO, ABF. We are engaged and granting credit ratings to wide-ranging sectors. And rating of fund transactions is growing. 770 deals have been granted credit rating by KBRA. We're not engaged only in private credits. We are offering new perspective in credit rating for the Japanese market at large. Recently, hybrid business model is increasing, such as fusion of technology and finance. There are issuers that are not limited to one particular sector, so the conventional method of evaluation is no longer fit, and therefore using our sector intersector analysis framework, we are offering appropriate analysis and evaluation and assessment. And existing credit analysis is being supplemented by our independent perspective in order to contribute to the decision-making of Japanese investors. As we see new products and instruments coming out day by day, we want to contribute to the decision-making of Japanese investors and also contribute to the expansion of the investment universe. Lastly, at our website, we offer many research papers downloadable, and we also offer credit research data as well. Our website is rich of information, so those of you who are interested, please access our website and give us inquiries. Thank you once again for your kind attention.
Thank you very much. Big round of applause to her presentation. With this, we will complete the pitch session. Here, we would like to have a short recess. In the foyer, coffee is served. This time, the purpose of this recess is your networking. So this is a little long recess that we are taking. So please make use of this opportunity to exchange business cards and do the networking. There are several booths on display, so I hope that you will visit the booths. 1650 will be the resumption time. So I hope that you'll spend this time in a useful and significant way. So we will have a coffee break until 4:50.
さて皆様、
We will be starting a panel discussion 2 momentarily. So please come back into the hall. We will be starting momentarily. Please move back into the hall.
Zoom のテストです。Zoom のテストです。こちら、沢村さん聞こえてますか？これ Zoom のテストです。一応、はい。これ来てれば大丈夫だと思いますので、お願いします。
それではお待たせいたしました。
Thank you very much for waiting, ladies and gentlemen. We'll start panel discussion 2. The theme is Digitalization of Cross-Border Payments as an International Financial Center, Trends and Outlook. The session will be conducted in hybrid format with online participation from overseas as well as those at the venue. So we'd like to have the panelists who are here step up onto the stage, and could we have a big round of applause to welcome the panelists. Thank you for joining us. Please take your seats. We'd like to have a senior chief researchers from Nomura, Mr. Inoue, serve as moderator. So over to you, sir, Mr. Inoue.
Thank you very much. Today, we're going to talk about digitalization of cross-border payments. And we have the most befitting speakers from Japan and other countries. And ideally, it would have been better to introduce to you their CVs, but their backdrop and titles are already projected on the screen. So let me skip such introduction to save time. But at any rate, we have a heavy-weighted panel, and I personally am very excited to be part of this session. The theme has been much discussed since this morning, and You may have felt that the theme that we are dealing with in this session is slightly different from other sessions, but supply chain has appeared as key words. But as a backdrop, there has to be the finance of the supply chain, and those are two sides of the same coin, and therefore we think that payment systems are of crucial importance. If we can have my slide on the screen. At the outset, I would like to speak about what we think as issues. Now, it's not necessary to explain to the panelists, but regarding cross-border settlement, digitalization of domestic payment system is progressing at a rapid speed. But on the international front, there are still challenges in terms of cost, speed, and access. And between retail and wholesale or B2B, there are different challenges. So we are constrained in time, and there's the issue of supply chain. So we would like to focus on B2B and think about mainly the wholesale sector. And we've made that request to the panelists. Digitalization won't solve all the problems, but especially in terms of improving efficiency of payment, information handling, or improving efficiency of information processes, this is an area where digitalization can make great contributions. So if we are to strengthen the supply chain, this is the other side of the coin that's essential. So cross-border settlement is the fundamental function of an international financial center, and it is indispensable for cross-currency transaction of funds and assets. Going on to the next page, the goals of the discussion. We have overseas participants and participants from central banks that are engaged in state-of-the-art projects. So we will hear from them the meaning of digitalization and their ideas in terms of digitalization. And based upon such backdrop, we will talk about the business and policy response by diverse stakeholders, so that each and every one of you may find our conversation useful. Cross-border payment and digitalization, I will ask the panelists to deliver their interventions, but interoperability and cross-currency and digital currency programmability, which is a unique technology to digital currency, I hope that the panelists can touch upon those aspects as well. Now, I don't want to waste the time, so let's go to the first question, going on to the next page. First of all, we will ask the overseas participants on what kind of initiatives are underway in their respective countries and explain the reasons why such projects are underway to describe the backdrop and factors. I will also be speaking in English since we have non-Japanese panelists.
Moments on the first set of issues. Let me say a few words in English. The major set of issues are the motivation and approaches of overseas cases. The audiences, as well as we like to hear the views of major factors of motivation, acceleration of digitalization of cross-border payment, with some reference to the user's viewpoints as well as the policymaker's viewpoint. And second set of point is that the overview of the ongoing prospective projects is a unilaterally mandatory. I understand that both in Asian region as well as the European region, there are some collaborative projects that have already realized some of the meaningful outcomes in this respect. So that I'd like to hear the views first from Aswan-san from Banque de France.
Thank you very much. I'm very happy for this invitation. Many thanks. Good afternoon to all. What is interesting when it comes to Europe is that it's both domestic but also cross-border within the region. So I think it might be worth tackling what is happening within European Union when it comes to payments. We have two main streams, which is very important within the European Union. What it regards wholesale payments, I think that we can say that we have a strong integration, a state-of-the-art one, thanks to mainly one thing, which is the fact that we have the euro for 21 of the countries forming the European Union, of course, but also thanks to the fact that we have financial payments infrastructures which are operated either by the euro system, so the central bank, or by private operators. So what we can say after a few years of experience is that the cross-border payments from a wholesale perspective for the business is as efficient as the European level as domestic ones. For the retail payments, and here, if I may, I touch upon a little bit on retail payments because the frontier can blur very easily between retail and wholesale payment when it comes to corporates, to business. We have had to push one on the regulatory front with several regulations establishing uniform technical standards. It is the single euro payments area, the SEPA regulation, but also a push in terms of cost in order to ensure that costs, for instance, for instant payment remain very low. It is free, for instance, for households to pay with instant payment. So the fast payment system is accessible across the board in the euro area and free for households and very low cost for business. The picture is not, completely clear and state-of-the-art because we still have some concerns within the EU in terms of cross-border payments. This concerns the countries where euro is not the currency, and we have addressed somehow the situation with the euro system payments infrastructure hosting non-euro, so for instance, Swedish krona, Danish krona, into the payments infrastructure for retail and for wholesale. So the instant payment infrastructure offers devices for the Swedish krona, for instance, and for other Nordic countries. And also one of the main concerns that we have is in the retail sphere, still with the card payments solution, which remain very domestic or which are provided only by international schemes, which account, for instance, up to 60 and more % of the payments when it comes to cards. The picture is, the landscape is bleaker when we go beyond the frontier of the European Union. And when you look at what is related to cross-border payments at international level, the fees are still too high, well beyond the 1% target defined by the G20 roadmap. And it is also, and the speed remains too low as well when you have a target of having cross-border wholesale payments credited within 1 hour of payment initiation. It's only 55% of those who meet the objective, while it should be much higher, like 20 percentage point higher. So we have to work collectively on the last mile frictions. It is on the beneficiary side mainly. And we have also to be very strategic and very dedicated in order to offer the right devices from a central bank perspective in order to promote cross-border international payments. So what we are doing, for instance, it's relying on our TIPS, so the instant payment infrastructures that we have developed in the Eurosystem in order to interlink TIPS with other fast payment systems. With Nexus, for instance, and maybe Alan will develop a little bit on that one. You know, it's a hub interlinking fast payment systems in the Southeastern Asia and India. We are also developing, and it's public, TIPS with UPI, the Indian fast payment system, and we are doing also the same with the fast payment system in Switzerland, so within Europe. So interlinking of fast payment system is key for cross-border payments on the business side. We have also some projects with the bank, the BIS, Bank of International Settlement, the project Rialto, which addresses, you know, tokenization, interlinking of fast payment system, plus FX, foreign exchange risk, and settlement in central bank digital currency. And maybe last point on that one, on the project that we have and we are participating in at the international level in order to enhance cross-border transactions, is the project Agora under the BIS aegis as well, where we want to take together tokenized central bank money, tokenized commercial bank money, in order to enhance the existing cross-border correspondent banking model. And it's a project which is taking place currently. What we do in addition, because I mentioned central bank digital currency, it's very important that we maintain in a tokenized world, because we consider that it will be part of the future with certainty, tokenization and DLT devices. We have to maintain central bank money in this tokenized world, and to ensure that for financial stability, but also for stability of monetary sovereignty and price stability, that we have to maintain the two-tier monetary system with the central bank layer and the commercial bank layer. And so what we are doing in the Eurosystem is that we are developing a wholesale CBDC. The project will go live at the end of this year in the fourth quarter, even in September. It is named Pontes. We will offer wholesale central bank digital currency in order to settle transactions vis-à-vis securities, but also in order to deploy CBDC in euro across cross-border, for instance, via Agora, but also via other interlinking. And the second aspect of our project would be to offer an infrastructure in order to have an integrated ecosystem on tokenization with CBDC, wholesale CBDC at the center stage of this system in order to ensure financial stability. I stop here. I was very long. Thank you.
And thank you very much for comprehensive coverage of the issues. And of course, regarding some issues you raised, such as the diversification of the prospective digital currencies, as well as the FS roles and integrating the retail and the wholesale and the cross-border and domestic, is a very important issue that we would like to discuss in the last session, or last part of the discussion. And sorry for waiting. That the Rim-san, that we would like to hear your views on the same topics or same issues.
Thank you very much, and good afternoon to everybody as well. So the way that I look at this topic, if I can maybe break it down in this way, there is, when we speak about cross-border payments, there are efforts that are looking at linkages at the QR level, which is more on the presentation layer, i.e. With QR linkages, for example, the idea is how do we enable a person that's overseas to be able to, an overseas person when they're traveling to a foreign countries, to be able to make payments using their bank applications by scanning a QR in a foreign country, and to allow the person to pay using their home currency or home payment application, right? So that's at the presentation layer. There are efforts that are underway that are also being undertaken, which is at the instant payment system or fast payment system layer, right? At the IPS level. And then there's a third leg, which is more on the wholesale and the settlement piece, which is also being discussed. Emmanuel did mention some of those as well. So if we kind of walk through those, on the QR linkage piece, there are certainly certain efforts that are underway. Just to share bilaterally, for example, for Singapore, we have QR linkages with countries such as Thailand, Malaysia, Indonesia, and also India, right? So the way it works is that as a Singapore traveler to some of these countries, I can use my home banking app. I can approach, for example, if I'm going to Malaysia, I can scan a Do It Now QR code, which is the national QR code for Malaysia, and I will be able, which my app will be able to recognize it. And because it recognizes it, I'll be able to effect payment through my banking app without actually having to be, let's say, onboarded to the local payment system directly as an individual. So what we will see is perhaps there will be more QR linkages. How do we allow, I guess, travelers to be able to pay as natively as possible? And I think it offers options over and above, let's say, other schemes that are more international. For example, how do we allow travelers to use more native opportunities? I'll speak about Nexus next, which is the interlinking approach that we mentioned. So Singapore today has bilateral linkages at the fast payment level. So, for example, between Thailand, Singapore, Thailand there is PromptPay. Singapore, there's PayNow. So as a traveler or as a retail person, when I go to Thailand, I'm able to actually fund or be able to make payments using the coordination between the two payment systems on both ends. And these are done bilaterally. The participating members are actually banks on both sides, so I'm able to actually make a payment entirely through a bank-led rail. We have similar arrangements with Malaysia, similar arrangements with India as well. Now, the question is doing this bilaterally the best way to scale this? You would, I think the natural conclusion is probably as we kind of grow this, it would make sense to have a multilateral approach rather than to have individual bilateral linkages. So what we have together with other central banks across the region done was to work on this initiative called Nexus. So Nexus really looks at a way to be able to facilitate this multilateral linkages of faster payment systems across different countries. It is now progressed beyond being a prototype. Now there's a separate legal entity that's been established. It's called Nexus Global Payments with its own set of governance and in time its own set of operations to be able to facilitate the interlinking of faster payment systems between the party. In essence, what this means is that if an individual faster payment system operator, for example, connect into Nexus and subscribe to the Nexus scheme, for example, they would be able to interact with other members of the Nexus scheme without having to onboard bilaterally each time they want to enter into a new country. So that is something that will be infected through the Nexus Global Payments or the Nexus scheme itself. So I mentioned QR, and I mentioned faster payment system. The third leg is around the wholesale or the settlement leg of the transactions. So when we talk about payments from a consumer and user perspective, when we make an instant payment, it feels instant to us. But the actual movement of funds do not necessarily happen immediately. And this again depends on countries. Some countries work on a deferred settlement basis. Once a day, twice a day, some more frequent than that. But others work, of course, on a gross basis. This has implication on liquidity and access to funds, etc. But what we realize is that perhaps there's efficiency to be gained by reducing the pre-funding that's involved, especially when you're talking about funds that are being transferred across borders. Whether there's necessarily a need to actually pre-fund some of these correspondent banking accounts internationally. Bilaterally, for some corridors, maybe you don't feel much of a difference, but the moment that you do this at scale, I think there's potential opportunity to actually reduce the costs if we are able to improve how settlement is actually achieved by optimizing across the different parts of the international, let's say, payment network. So with that kind of a viewpoint, I think there are multiple efforts. They are looking at how settlement could be achieved and optimized. There are definitely efforts domestically within respective countries. We ourselves have started our own effort quite a number of years ago through this initiative called Project Ubin. That's really looking at improving how settlement is done domestically across the different institutions and banks. We have gone forward domestically to implement a live operational environment for the issuance of wholesale central bank digital currency for the purposes of settlement. So we did a trial last year, and we are looking to enhance and extend that functionality this year. Now, on a cross-border basis, where we see opportunities, again, we speak about domestically across the different banks rather than holding, let's say, a tokenized commercial bank liability, and then the case of whether to undertake one commercial bank token or not. What we realized very quickly is that a wholesale central bank digital currency played the role of being a common settlement asset to bridge between two commercial bank tokens. Taking that further internationally, I think there are certainly a lot of efforts that are being undertaken at the wholesale level to look at whether there's scope for either a model whereby central banks have their tokenized central bank reserves or wholesale central bank digital currency on a common ledger. And we certainly see different projects that are doing that. Wholesale central bank digital currencies in different currencies on the same ledger. We see variations of that as well, whereby wholesale central bank digital currencies are not on the same ledger. They are interlinked and connected. MES has done, for example, a project called Project Mariana, which with colleagues from Banque de France as well, which really looks at how we can have our own central bank digital currency, is simulated in this case, connect to, let's say, a common network. So that allows flexibility for the respective central banks to still be able to control their own wholesale CBDC, but still be able to interact with each other. We have also seen maybe a third model just to highlight, which is entirely commercial bank-led model, whereby instead of wholesale central bank digital currency as the mechanism to bridge across borders for wholesale settlement, we've seen models where actually the commercial banks are in the middle, and they are the ones that are facilitating the exchange on a cross-border basis, wholesale settlement. So, for example, we've looked at some of these models around synchronized settlement. We have an active collaboration with Bank of England and also Bank of Thailand that's looking at some of these issues around how we can effect synchronized wholesale settlement across borders. And based on that model, it's also possible to imagine a situation where you have wholesale central bank digital currency on one side, but more traditional, let's say, settlement infrastructure, whether it's a real-time cross settlement system, RTGS system, or its equivalent in place. So I think that's where we see major developments on the wholesale side. I'll be remiss maybe just not to mention just the point about stablecoins and tokenized bank liability. I think we may speak about that subsequently, but I just want to bring out the point to say that a lot of the efforts so far from the central bank and policymakers so far, especially regards to operations and a real-world use case, has been centered around more wholesale settlement infrastructure. And I think a lot of focus has been around wholesale CBDC and commercial bank tokens. On the stablecoin side, I think there are some experiments and use cases at the retail side, which I think there are different efforts by different central banks kind of looking at that. We ourselves have an initiative and program which looks at the use cases of stablecoins. But at least for now, there hasn't been a cross-border, let's say, stablecoin projects that's directly been sponsored or looked at by policymakers as of now. So with that, I'll end my.
So thank you very much for extensive coverage of the issues. That among the issues you raised, I think first of all that among your initiatives that you are taking account of the relative importance of corridors of payments, which might be relevant for Japan, because the Japanese firms are looking at the opportunities of the China plus one strategies, that resulting in the increasing demand for emerging currency transactions in the future. And secondly, I think that both of you has mentioned the significance as well as the prospective roles of the wholesale CBDC. I totally agree with you, but still, that I think that there is an ongoing discussion. What is the concrete role of it? I think that depending on the choice of the technologies, for example, that the unified ledger is one of the options. But Rim-san mentioned, I think that the synchronization of ledger is another option. I think so that some kind of the options are there. So thank you very much for your comments. And let me turn to the second set of discussions. And this will be covered by Japanese participants. And let me discuss in Japanese.
And again, thank you for waiting. We're going to go to discussion point number 2. If we could go to the second slide, next slide, issues for discussion number 2. Likewise, in Japan, in many forms, private sector entities are engaged in several initiatives. So as you and your companies engage in those projects, what are in your mind? What kind of requirements are there? And what other projects you're involved in? I'm sure that the audience would be interested in hearing from you. Digitalization, not necessarily digital currency, but using digital technology. How can cross-border payment be facilitated? There are several stages or processes, but which phase would be the biggest beneficiary in terms of efficiency improvement? Ueno-san. Thank you very much. I am Ueno of Mitsubishi UFJ. I am the Deputy Chief Strategy Officer of MUFG Bank. On the other hand, our bank is currently the chair of the Japan Bankers Association. So we serve as the board member of FinCity Tokyo as well. So let me talk about the question you asked. First of all, demand in Japan for cross-border payment. On the global basis, cross-border payment is increasing, as explained by two colleagues from the central banks, and expansion is predicted. With international trade, service expansion, the transborder EC, platform economy, and digital payment technology becoming more sophisticated, we are expecting increase. And in Japan as well, cross-border payment market is slated to expand. But what's the uniqueness of Japan? Many of the transactions are between large corporates. In addition to international trade, there is the transfer of funds in the form of interest and dividend from their subsidiaries. And in individual remittance, the size in the Japanese market is smaller than European or Asian countries, but the number of foreign residents in Japan last year or 2 years ago was 3.77 million, which was a record high in 2024. So we think that the volume of remittance to their home countries will increase. But as I said at the outset, cross-border payment in Japan is mainly being done by large companies and large financial institutes. In other words, they are wholesale payments. So one characteristic is the amount per transaction being quite big tickets. So I think this is the same as other major countries, but so far, SWIFT-based methodology, which is the traditional payment system, had been chosen. And we don't think that this will change immediately in the short term, so SWIFT will continue to be chosen. On the other hand, FSB has come up with the G20 roadmap for cross-border payments, and they identify the objectives to be achieved by 2027. So, and as was already mentioned, stable coins, tokenized deposit, and other blockchain-based payments have emerged. And on the asset side as well, financial transactions that were conducted off-chain traditionally are now being done on-chain, although the pace of change has been gradual. So we have begun to see many examples of Japanese financial institutions participating in cross-border payment-related initiatives using blockchain. But there aren't so many use cases yet, so we're currently studying what use cases there could be. But immediateness of payments and programmability, in other words, digital information can be overlaid on top of the payment. So I think that those are many of the use cases, and we think that those are the conveniences offered by these systems, and we're engaged in several initiatives, but we're trying to verify the effectiveness of such traits. On the other hand, what are the projects our bank is engaged in? Please take a look at this slide. There are a few projects we're engaged in. There are more than 4, but due to time constraints, I will introduce 4. On the left top, we announced the stablecoin issuance by a few banks, which was announced last November, and cross-border remittance. As trust beneficiary rights stablecoins are issued, and Mitsubishi Corporation's Japan head office and foreign subs do cross-border payment, and this is being used to do a demonstration of such cross-border payment, and this has been granted the support from the Financial Services Agency of Japan as a fintech demonstration hub. We are planning to build up experience and findings through these projects, and eventually we will begin to see more use cases of multiple supply chain users. So we're trying to get outcome from this demonstration in order to feed in the findings into such projects. Secondly, bottom left, this was launched in October last year. European bank groups are, and we are joining a joint digital currency issuance initiative. It's still in a stage, so there's not much that I can report to you regarding this project, but as you can see, our bank is the only Japanese bank participating in this project, and we will be seeking a common platform under this project. The third project, now Emmanuel introduced this already, Project Agora. I will skip the details, but as indicated, 7 central banks and 43 private sector banks are participating. Our bank included, 3 mega banks and SBI Shinsei are the 4 Japanese participants. And it is the sophistication of cross-border payment based upon unified ledger. And the fourth one is on the bottom right, which is a SWIFT-driven project. It uses existing infrastructure in order to create and build a new blockchain infrastructure. SWIFT blockchain development companies and more than 30 financial institution groups, including Japanese banks, are cooperating to enable 24/7 cross-border payment and build a ledger that will enable such services. We are promoting the buildup of prototype. And further, this fiscal year, our bank is serving as the chair of the Japan Bankers Association, and the association runs the Zengin Net. And under the Zengin Net, we've established a study group to study the improvement of cross-border payment in other countries, stablecoin, tokenized deposits, digital currencies, and we're studying new trend in order to think about how we should try to upgrade the payment system in Japan. So this is more a mid to long-term project. So a variety of demonstration projects are being participated by our bank. So our bank will continue to make efforts to respond to the requirements of our customers in cross-border payment. So with agility, we will continue to participate in such demonstration projects. Thank you. Thank you very much. Next, thank you for waiting, Mr. Karamura. You are Executive Director of Trade Waltz. At FCT, I was doing research on supply chains, and you were a major contributor. So you're a user of cross-border payment, and you also run the infrastructure for cross-border payment. So thank you for being part of the panel.
Thank you very much. My name is Kawamura from Trade Waltz. I'd like to thank you very much for inviting me to participate in this session. Trade Waltz, as has been introduced, is working on a trade digital platform for the exporters and the importers and bank, insurance, and logistic companies. For those of you handling the practical aspects, we provide the platform for digitalization. And before I go into answering the discussion points, I'd like to talk about why I was invited. Trade and settlement and currency, the historical context is what I'd like to explain to share the backdrop. Going back 800 years in the 13th century in the Middle Ages in Italy, a very important revolution occurred in terms of trade. In the 13th century in the Middle Ages in Italy, a Mediterranean trade was very well developed, but the trade was very dangerous at the time. Gold coins were carried with the goods. There were pirates and bandits, and the ships may sink. And so the Italian people in commerce had a problem that they had to deal with. And a innovative investment was made. That was the bill of exchange. And where is the intrinsic value? Instead of carrying heavy gold coins, paper. Information was carried, the paper which indicated commitments for payment. And so it was an abstraction from gold coins to paper. And so after that, in the age of exploration, globalization was supported by the invention of bill of exchange. The Middle Ages, the bill of exchange was such that enabled endorsement and transfer of bills, and money became liquid. And the historian Neil Ferguson talks about the bill of exchange being the cryptocurrency of the Renaissance ages. And so this is the historic backdrop. If you could project slide number 5 among my slides, please. This, if you could proceed to the very last slide. Finally, I'm talking about trade and settlement. Until 800 years ago, there was the commerce flow, that's contract and bills, and then there's a money flow, and then logistics. 800 years ago, a bill of exchange was invited, and so the commerce flow and the money flow and logistics were separated. And it hasn't changed for 800 years. With SWIFT, invention of SWIFT, a settlement was digitalized and it became very fast. But in the world of trade, we still work with paper. And the bill of lading is issued by shipping companies, and it is mailed to the destination. And unless you have the paper, you can't receive the goods. And that still continues to this day. Going forward, stable coins with tokenization, the settlement platform will be digitalized, and what we're doing, commercial flow, trade business platform will be digitalized. And when that happens, programmable settlement occurs. When the rights are transferred, settlement occurs. And we assume that that will be what will happen. That's the great vision. And commercial flow and logistics will fuse. And in this context, where are we here in Japan? In the world of commercial flow, there's a major development. Web 2.0. In that world, a lot of digital data can be copied easily. But in the world of digital, for the rights to be transferred, how do we ensure that with a legal framework? How do we guarantee that? In 2017, UN's UNCITRAL came up with model law on electronic transferable records of MLETR. The right is transferred on the electronic field, and among the European countries, there's an aim to try to translate it into domestic laws. And here in Japan, finally, MLETR, transferring rights electronically, referencing this bill, one of the documents, Bill of Lading, and the laws related to Bill of Lading is coming close to materialization. We finally come to that stage. UK, France, Singapore, and Singapore has already moved ahead with legislation. The transfer of rights and electronic and digitalization for these to be legally stable. This would realize the settlement. And in Japan, we are ahead of the pack. And toward legislation in my capacity in the private sector, I have been instrumental in pushing this forward, and it's looking like it's going to materialize finally. And what Ueno-san is doing, the 3 mega banks are working on common stablecoin and issuance of common stablecoins. So that is another major flow. With FSA, I have many opportunities to talk to them, and cross-border settlement and trade transaction and stablecoin using worldview, I think, is something that the government and the nation should undertake. And from regulatory authorities, I receive questions. So we hope that we think that in that direction, specific projects will begin to materialize. Thank you.
Thank you very much. We will go to the last point of discussion. You have spoken so enthusiastically, so we don't have much time left. But we had the late start, so we can have additional time, I suppose. And we go to the third point of discussion. Once again, the last point of slide. So challenges and measures. Upside is opportunity. So there could be benefits, so including benefits and opportunities. So what is this proper balance between challenges and benefits and opportunities. In order to overcome this question, what is the thinking? What are the measures that we can employ? Of course, still, for overseas speakers have spoken, and as domestic speakers have spoken, we are in a nascent period, and everybody is groping for a lot of opportunities and possibilities. So concretely, not talking about overcoming specific challenges, what are the challenges which are important? Or you can talk about it, or anything that is on your mind. We will start from the Japanese side. So Ueno-san, can you start? Yes, thank you. Challenges. Cross-border payment. Before digitalization of a cross-border, what is the current challenges? In plural number of jurisdictions, plural number of entities are engaged, and cost is very high, and speed is slow. It takes time, and also access is limited. And transparency is a challenge, or regarding details, visualization is lacking. I think these are the challenges. In order to cope with those challenges, one use case would be this, blockchain technology utilization. I think that is promising. And in that case, tokenization and stable coin have come up on the stage. That is my understanding. In this context, as I spoke on our side, we are working on various projects, and we are proceeding with our studies. So having said that, the cross-border payment digitalization, we are discussing challenges. Against those challenges, stable coins and tokenized deposit could be the points that I would like to talk about. Stable coin or tokenized deposits. Recently, various projects are ongoing, but like SWIFT, single global network-based framework is not which comes from the stablecoin and so forth. Blockchain, what is the issuing entity, and what is the asset to be covered by the stable coins and so forth. So the objects could be diversified. So diversification would be always around us. So when we have diversification, then interconnectivity of various infrastructures and another networks that could be diversified. So operational challenges, system security could become very sophisticated and complex. So these are the possible concerns. So continuing that, the tokenized deposits and stablecoins, legal status thereof. Various countries have a different legal structure about that. So globally, if there is no standardization in the cross-border payment, technologically transfer is possible, but the legal certainty is not there, then there is a de facto transactional cost which will be introduced because of that situation. So for bankers, it is an urgent task. System-related cost. In the case of tokenized deposits, bank deposit will have to be expressed in tokens. And because of that character, the outstanding amount and the ledger-based balance of the bank have to be agreed instantaneously in a one-time event. So you have to connect it to blockchain. How about the cost of this connection? So this cost aspect is something that we have to study very solidly, and ROI is going to be another challenge. In addition, stablecoin, it is usually said when it goes ML/KYC protection, and consumers must be protected, and it has to be payment available 24/7. So we have to have a sturdy system to support that, especially in Japan. Blockchain engineers have to be nurtured and trained. That's a challenge. So we have multifarious challenges. But nevertheless, cross-border payment provides various opportunities and benefits. So pros and cons will have to be analyzed, and with agility we have to verify it, and we have to work on the investment scale so that we can have the solid verification and study. So in a straightforward way, in order to overcome challenges, we don't have a straightforward answer, but while we work on it, agility is something that we have to have in order to confirm what we study.
Thank you very much. In practice, I'm a CFO, so let me deliver my opinion from the EU's perspective.
For the CFO, whether it's tax purposes or for accounting purposes, you need legal stability, and this discussion is related to that. To put on the balance sheet what you don't understand is difficult. However, on our part, if it's a stable coin, that's cash. It can be treated as cash or cash equivalents. But that has been established. So the first entry point has been passed through. In practical terms, managing many accounts or owning many currencies in terms of corporate management, that's very cumbersome. So credible digital currency and the emergence of credible digital currency is important. In the field of crypto assets, there are different coins emerging, but there has to be convergence. So focusing on Bitcoin, or in the world of stablecoin, the 3 megabank stablecoins, or what can be securely used by companies. If that emerges, I think it will come to be used. And thirdly, whether we can go beyond just acceleration. When it's slow, it's cumbersome, but if you wait 2 or 3 days, it's delivered. Programmability, or a business transaction, when that occurs, the automatic settlement, the middle operation to be cut out. If there's a major change of this sort, I think it will begin to penetrate.
Thank
you.
Of the duration of the discussion that I would like to hear a very brief comment from overseas panelists as well. Aswan-san, please.
Thank you very much. For us, the way forward, in addition to what we are doing in terms of fast payment system interlinking, is about, of course, tokenization. It has been said extensively. We have additional opportunities that we didn't mention, but about compliance and the way the smart contracts can embed all the compliance features in terms of anti-money laundering and CFT. For instance, we have done a project with Mandala, which proves that it is very effective and very efficient, and that it could help further cross-border payments. The main challenges that we have to overcome are the key nodes, or the key features that we have to ensure in terms of playing on tokenization, which is a strong factor of success for sure, certainly, is to ensure that we maintain the two-tier monetary system. So having wholesale CBDC on one side, what we are going to deliver in Europe, but also maintaining commercial bank money in a tokenized form. We are not, the jury is still out whether it will be stable coins or tokenized deposits. We are quite neutral. I think that we can handle both. They will have use cases maybe different, whether it's stable coins or tokenized deposits, but we have a strong conviction, which is that it has to be provided by commercial banks, because they are the ones which finance the real economy, and we have to maintain a liaison between money, either tokenized or not, and the funding of the real economy. So that's core to a project. What we have to overcome, or to ensure or make as a prerequisite as well from a cross-border perspective, is of course the infrastructure. And when it comes to international infrastructures, governance is key. So we have built very good things with SWIFT. We have built also very good things with CLS on the FX risk change. We have to ensure that governance in terms of infrastructures, whether they can be integrated like a unified ledger or interoperable, which might be a little bit less efficient, but we have to see and continue testing and experimenting. They have to get the right governance. Maybe one last point on my side is that we have to ensure that regulatory framework is adequate in order to be fairly adapted to the tokenized ecosystem. We are neutral from a technological perspective. So if we have the same activity, we should have the same risks and the same rules. This speak about interoperability and equivalent treatment, which are core. Whether it's the legacy system or the new tokenized system, we have to be very consistent across the board. Last point is about liquidity. If we get into a tokenization, CBDC, stable coins, tokenized deposit, it is instant payment. We have to see and at the global level or for regional aspects, how liquidity flows and how we manage things rightly in terms of netting, which has not been proven so far. Thank you.
Thank you very much. And I would like to hear the same set of a very brief comment from Lim-san, please.
Thank you very much. I have similar comments as well around standards and compliance and on infrastructure. I think the observation is that with different efforts that are underway, there's probably going to be many different ledgers. There's probably not only going to be one blockchain. There will be many blockchains, some by the private sector and some could be by the public sector. So what we have undertaken together with colleagues from the central banks, Banque de France being one of them, as well as from the private sector, including MUFG, for example, HSBC, JP Morgan, Standard Chartered, and others, was really to come together with an initiative called Global Layer 1. The idea here with the Global Layer 1 or GL1, the idea was to develop a set of common standards and approaches for looking at how infrastructures that meets the regulatory expectation and in fact market practices should look like. So we have developed jointly a market infrastructure toolkit, GL1 market infrastructure toolkit. It's available online. You can take a look at that. But that hopefully provides a way for providers or operators to assess the readiness of infrastructure against existing risk management frameworks that are out there and the controls that are put in place. And maybe just to end off, Emmanuel talked about the idea of cross-border compliance. So that's another piece that we've looked into. How do we operationalize this in practice? How do we standardize, for example, how AML, CFT controls are actually programmed alongside the transfer of tokens? So that's something that we've looked at, operationalizing it under GL1. Again, there's a toolkit available under the GL1 Programmable Compliance Toolkit as well that looks at addressing some of those issues. Thank you very much.
ありがとうございました。ちょっと時間超過してしまいまして申し訳ありませんでしたけど、パネリスト。
Thank you very much. We've overrun the time. I'm sorry. We'd like to thank the panelists for covering the issue extensively. On our part, when we think about this, I think we've been given a lot of homework to do. So could we have a big round of applause for the panelists, please?
感謝の皆様ありがとうございました。今一度
Thank you very much to the moderator and to the panelists. Could we have another round of applause, please?
それではこの後のパネルディスカッションの準備のため
Thank you very much for the preparation of the next program. We need a little time to rearrange the stage. Please wait for a while.
また私カウント入れるんで、それ来たけど。
ではお待たせいたしました。
Ladies and gentlemen, thank you very much for waiting. We will go to panel discussion 3. The theme is what conditions are needed to launch infrastructure investment in Japan. So please welcome the panelists with a big round of applause, please. Please be seated. Thank you for coming. And from this point onward, I will ask Mr. Keiji Hattori to oversee the proceeding of this discussion. Mr. Hattori, please. Thank you. Good afternoon, ladies and gentlemen. What are the conditions to enable infrastructure investment in Japan? That's the theme. I am going to be the moderator of this panel discussion. I am Keiji Hattori of 6th Street. Pleased to meet you all. Thank you very much. I will introduce myself. I belong to the 6th Street Investment Fund, U.S. Investment Fund from December last year, and I am working on the launching of Japanese juridical person. 6th Street has the assets under management to the tune of $135 billion, in other words, over 20 trillion yen, and it is the focus of attention by a lot of investors because of the growth and the profit, but it is not well recognized in Japan. So I hope that I will do the PR work of my company. So sports investment is something that we have worked earlier, and we have more than 30 projects, data center, alternative energy, and social infrastructure. I am involved with the infrastructure investment. Like in the former company that I worked, it is well known overseas and yet not recognized in Japan. I am participating in such an investment firm to propagate the need for infrastructure investment. I will add one. Mr. Ono is case in point, one of the panelists. You see, we have our thought and we have our intuition. So how the actual outcome can be formed with the combination of ambition, thoughts, and the experience. So this is we are the samurai in the field of infrastructure investment. Sorry for digressing from my theme. Now, today's panel discussion. Before starting this panel discussion, once again, we would like to consider what is meant by infrastructure investment. This is not only about a physical facility and equipment. It covers traffic and transportation network like roads and railways and airports, as well as the energy, power, gas, and the optical fiber and information and telecommunication infrastructure. They are the backbone necessary for our daily lives. And that is what infrastructure investment is all about. As you know, in Japan, infrastructure is faced with a very big turning point. First of all, the facilities were worked during the high economic growth period, and a lot of infrastructure is aging. It is a problem. Then, together with the digitalization, the sophistication of communication is happening, and data center is increased. And together with that, we have big power demand. And then we need the increasing alternative energy, looking toward decarbonized society. So we have those challenges, and the fund's needs are going to grow larger and larger. There is a limit to what a fiscal fund can come about, especially aging is a serious problem. Last year in Yashio City, the water supply pipe ruptured. The road had a big hole, and even it led into the fatal accident. It's a very tragic accident. So no time to be wasted to look after the upgrading of infrastructure. So how do we have the takeoff of infrastructure investment? In other words, how can we entice the money of overseas and domestic institutional investors so that we can build a sustainable infrastructure? So we have the practitioners who are having daily battles. They are the panelists, so I'd like to hear their views. First of all, from the financial point of work, infrastructure was worked by Mr. Yasuhiro Ono for many years. He was with the Mitsubishi Corporation, and he was consistently working on investment, and he was on the screening side of infrastructure fund of the world at the Japan Postal Bank. And also, he is the Japanese representative of Stonepeak, which is one of the large infrastructure investment funds of the world. So he is the real samurai in the field of this particular topic. Next one is Ms. Kayo Ito. She was born in Canada, and she grew up overseas. She joined the NTT as a new graduate, and she worked in many Western branches and organizations, and she is now the representative director and president of NTT Limited, which is the data group company of NTT. She was involved with for many years the international networking business of NTT. Next person is Mr. Yusuke Toyoda, who is the representative director and president of Digital Grid. He joined Goldman Sachs from the graduate school of Tokyo University, and then he went through private equity funds occupations, and in 2018 he started Digital Grid, and he looked into the IPO of this. So he had a specific research to finance to forming a company. So he has a consistent career path, a very rare entrepreneur. So he can talk about the theme of today, speaking from his own experience. Now, I would like to turn to you. Please introduce your business, and please express your thought about today's theme. So please. Ono speaking, as was introduced. I belong to one of the large infrastructure investment fund. The 15 trillion yen was the asset under management when I joined, but we are going to invest in Asian countries. I've worked on that. Stonepeak itself, the investors to this fund is Washington State Pension Fund or Oregon Public Pension Fund. Public pension funds invest in our company, and it is being invested into infrastructure of across the world. Deepstone itself is a Japan team of Peakstone spinning out. So we became independent, and we created this company. What we do is not different from Peakstone's. Today's theme: how do we entice overseas funds into the Japanese infrastructure? I think that is the theme of this discussion. At the time of my working at the Stonepeak, there is one episode that I'd like to talk about. Asia Infrastructure Fund of Stonepeak was launched by us about 500 billion yen scale. 70% overseas investors want to invest in Japan. We talk about Asia, but the highest quality of infrastructure and service level is so high in Japan, so they want to invest in Japan. 500 billion, so 350 billion yen. was the amount of fund which wanted to come to Japan. But as a result, while I was working in Stone Peak, it was about 100 billion yen of investment that I handled. The 50 billion yen less was the amount invested in Asian infrastructure. Viewed from overseas investors, they want to invest in Japanese infrastructure. They have a high level of expectation. But as a matter of fact, it doesn't reach the infrastructure in Japan. That is a big riddle. So it's the enigma. As I enter this topic, I am showing you this slide. I am talking about the infrastructure fund. Actually, they are more or less a new kind of funds. The time horizon, very difficult to see, but the starting point of time horizon is 2010. From around the Lehman crisis until 2025. That's the horizontal axis, how the infrastructure fund grew in the world. This is the graph. Honestly speaking, before 2010, it was non-existent. Scale was negligible, but rapidly in the last 15 years, the market size grew. As of now, about 200 trillion yen worth of infrastructure fund is being formed. So in Europe, US, and Asian regions, these are the places, but it doesn't show in this graph. But Japan is at a very low level. It's close to the horizontal axis. So you see, the infrastructure fund has a lot of money, but it is not being invested in Japan at all. Other 2 points I'd like to talk about. As a matter of fact, as I noted here, airport, expressway, these are owned by the government. So they would be privatized, and that is the beginning of the infrastructure funds. But as I note, data centers or renewable energies or large-scale battery, they are the growth area, and this is where money is going, and it is leading the industry growth. The last point I would like to talk about, in Japan, fund and operational companies are confrontational against one another. That is the conventional way. But actually, the fund can grow. Fund has grown running alongside the operational industrial companies, especially in the case of infrastructure. Operational companies have to have a very heavy asset. Otherwise, they cannot have the operations. But in the case of public companies, they have the downward pressure regarding stock prices. So the asset light would be the situation where the operation is carried out. So we grew together with the actual industrial companies. Thank you very much. Sorry for being lengthy.
対立している事業会社の NTT になるんですけれども、はい。
NTT, which is competing with the previous company. NTT Limited Japan is what it states here. NTT Group's data center network, basic infrastructure. Other than Japan, we're doing global business and Limited Japan, NTT Limited Japan, subsea cables is a large part of my business. That's what I'm responsible for. As the previous speaker has mentioned, and I'm sure you've been discussing this all day, data center, AI demand, and I think there has been a lot of talk about the AI, and you read that in the newspapers. But the infrastructure, the network is also very important. We're an island nation here in Japan, and so in communicating with overseas, you think of Starlink or satellites. How many think we use satellite or Starlink for communicating with overseas? So please raise your hand. And so that's the result. 99% are such that we use subsea cables, and that's where the traffic goes. So large infrastructure, asset-heavy infrastructure is an area which is very important in the operations of a nation. So for Japan, this is the strength. First is location. Japan is such that it's in between Asia and the Western countries. And so when we think about traffic, if you think about airplanes, it's the same thing. You land in Haneda once, and then you go to China or to Singapore or to Asia. Traffic is pretty much the same. You land in Japan, and then you go to other places in Asia. It has a hub function. So going forward, we need to keep that. And I think this is a very important role that Japan ought to play. There are political risks which are found less here in Japan, and so that's very important as well. And traffic is such that AI demand is growing. And SDR is growing at about 15% annually. So you need to continue to make investments. And the strength of Japan's infrastructure, I'd like to talk about this. We, in various places, we install networks, but Japanese infrastructure is really outstanding. Japan's network availability, what is the percentage, people ask? And we say 99.999%. In India, it's 99.5%. And so what this figure is that 99.5%, that is only interrupted 5 minutes a week. 99.5%, that's 12 days a year where it's interrupted. 2 weekdays where the network is interrupted. So that's the difference between India and Japan. And that's basically a major difference. And so as Mr. Hattori has mentioned earlier, it's been 30 years since Internet emerged, and it's about time we change the infrastructure. And this is another opportunity because we need to replace the infrastructure. So we hope to discuss, I hope to discuss more on these points. Thank you.
Yeah. 改めましてデジタルグリッド
Toyota of Digital Grid, thank you for having me. Ito-san mentioned data center and cable communications. We are in charge of power in terms of infrastructure, which is inseparable from data centers. So that's our mainstream business. Very briefly, let me introduce myself. As Hattori-san already introduced, let me explain to you what I did research on in college. Infra power generation assets were already there, and they were gigantic. There were many historical turning points in the sector of power, but March 11th, the Fukushima Daiichi and the Democratic Party of Japan was the ruling party, and they began to invest in renewables. So that is the 15-year history. Bullet train. You see different landscapes from the window 15 years ago and now, and there are criticisms against solar panels, but there have been much investment in renewables. So infra format has changed. In a world of distributed power, pre-war and post-war era, there was gigantic infrastructure built, but we need more distributed infrastructure. So that was the theme of my research in university. More specifically, as indicated in this chart, power companies used to sell power. That was the conventional business. But you can purchase power from your neighbor, and distributed power system is local production and local consumption. That's ideal. You talked about submarine cables, but in the future, with increased number of data centers, you want to have the power source in proximity to the data center. So that's the watt-bit proximity, which is being talked about by NTT Data and iWon Vision. So we want to offer power, trying to approach that kind of ideal landscape. 1 gigawatt, 1 nuclear power generation is the capacity we currently have. It's still very small, but we hope that the capacity increases. So the point I wish to convey with you today is to talk about our dream. When we think about Japanese infrastructure and in power, there's much room for dreaming about the future. this is a slide that changed my life. And I encountered this picture in my college days. And the chart describes the size of joules, in other words, power. The top 4 are what disappears after consumption, like crude and gas. But if you look at the bottom section, 200-fold of energy potential exists against the consumption in the world. If this is made available, then if we invest in this area, energy can be used, marginal cost can be minimized. If such energy becomes available, of course, there are many challenges as we try to leverage such potential, but I hope to talk about that.
Now, without further ado, we will go to the main theme. Having listened to the remarks, Ms. Ito talked about the technological superiority, the continuation of optical fiber functioning. That's the superiority. So demand could explode in the future, the strength. In the business, how do you grasp this opportunity? And how are you focusing your attention to this possible area? Can you talk about that possibility? Ito-san, we'll start from Ito-san.
Yes, AI demand. That is pushing everything. That's the driver. And that's how things stand at the moment. To underpin that and to invest that is something that we have to do. Otherwise, Japan will not be able to keep up in the competition. It will see its competitiveness wane. And so there are difficult points, there are different challenges, power and resources, water and location, data centers have to consider that. When it comes to subsea cables, you have to invest properly. And how do we finance that? How do we collect the money to do this? Subsea cables, in the case of Japan, for example, NTT in Japan installs cables, that's fine. But if overseas foreign capitalized companies do this, how would you feel about that? There's the image, the image issue, which lingers. Maybe recently, there are people who are concerned about this. Funds are being provided from overseas in order to attract funds. When we think about the power of foreign capitalized companies, can everyone be positive about this? And to be positive about this, what kind of partnering arrangement should we decide on? Anything from you, Ono-san?
Thank you. Come to think of it, as a former overseas fund, I'd like to say something. Well, hot topic. What Ms. Ito said is a hot topic. The purpose of this meeting is how to entice overseas investors' money. Is it okay to receive foreign funds and so forth? So Japan has its legal system. It's a very solid legal system. So first of all, so legally, we can block anything which can have the control. For example, in the case of Stone Peak investors or the public pension funds, it has a very high degree of a public feature. So in the process of global operation, they want to have diversified investment. That's why they want to invest in Japan. So we can sort of dissect the problems of concern or concerns. Thank you.
Thank you very much. Rather than being concerned, I think there's this general view, and that is my thinking. The fund operation, including this in Japan, the on-the-ground skills and operation skills, that's our strengths, and that's our selling point. And when there is offshoring, people may be concerned. I feel that there's some of that.
おそらく先ほど期待はすごい日本のインフラに対して
There's high expectations towards Japan's infrastructure, but we're not seeing increase in investments. That may become the reason. From the Japanese side, they may fear global money coming in, but the reverse holds true. When global investors come to Japan, more than we expect. From the Western perspective, they may find Japan or the Japanese people as a different world. If I may give you an extreme example, we invite U.S. senior members in Japan to hold meetings in Japan, but regardless of the substance of the meeting, at the end, they all smile and say, "It was very nice meeting you. Thank you for coming," as closing remarks. It sounds as though it was a great meeting. Let's continue these conversations. That's the impression that you would impress on the Americans. Then they asked me, what's the next step? So I said, no, that's not what they wanted to say. They're just saying that as hospitality. So they were saying goodbye. We will probably never see you again. So from the foreigner's perspective, maybe the Japanese culture is difficult to understand. So it works both sides. There are high expectations. Maybe that's one of the reasons we're not seeing much investment.
How about you, Mr. Toyoda? Technologically speaking, Mr. Toyoda has a certain business sector. What is the area that you want to focus going forward? Well, following up from Ono-san, energy field is something where the government is working and the government is committing for renewables and nuclear fusion by 2030, 2040. They want to increase the market size and so forth because of the government commitment. So it's attractive. So I visited yesterday and I witnessed the MOU signing ceremony. Energy situation is well advanced in Europe. Renewable energy by 2040, the objective is already reached by UK now. So it's not limited to Europe. Viewed from the investors, the history that you are accustomed in your own country would be repeated. So it's almost like a time machine business. So I think there are a lot of opportunities available. Well, not talking about, thank you very much, nice meeting you. In the world of energy, the landowners are involved and you have to participate in the local festivals in order to win the hearts of the landowners and so forth. So you don't have the intention of taking over or buying over, but there is an allergy from the local people sometimes. So it's an interesting market.
Ono-san, earlier on, you talked about the 100 billion or injecting a lot of money in Japan, but it's difficult to invest in Japan. In Japan, how do we make Japan attractive to attract investments? And why is it such that it's difficult to channel funds into Japan's infrastructure? Where's the gap? What is lacking? Thank you very much. In that sense, throughout my career, what I've been doing is to overseas investors. I've talked about the attractiveness of Japan and opportunities for investment in Japanese infrastructure. And so it's close to being an interpreter. And what I mentioned earlier, there are cultural differences of the kind that I talked about earlier. And we have to give overseas investors a sense of security in investment in Japan, but there is no mechanism to do that here in Japan. And so we have to advance discussions on that, I think.
Related to that, the government, local municipalities, there are roles to be expected of them. So simply speaking, not only the subsidies, but in order to entice priming impact of inviting foreign funds, we have to have a certain mechanism and the systems. Altera is a fund, climate change fund in UAE. So So there is an anchor investor, the colossal amount of fund is looking toward the emerging countries. So the money is invested in that place, and the fund's reliability is enhanced. And then the institutional investors have the ease of coming into that investment. So it's a priming effect, catalytic capital it is called. It is a pump priming sort of function. So in this Altera, one characteristic is that there is a certain cap placed regarding the profit that they have, and then excess return would be distributed to other investors. That's the mechanism of Altera. So what is that? So there are difficult infrastructure projects, difficult for investment in emerging countries, and the institutional investors find it difficult to go in. But just an extra percentage of return, excess return, is distributed to the investors. So they look into the risk-return balance and they come to investment. I think we can learn a lot from this kind of mechanism. For example, the central government and Tokyo Metropolis can introduce such a system by way of creating funds as a catalytic funds. In the case of subsidy, it's only the money, but there is a leverage effect coming from this scheme, and then there can be a big swell of overseas funds coming to the infrastructure works in Japan. Considering them, I would like to ask your views, especially Toyoda-san. I think you have experience with subsidies. Do you have any views?
Thank you very much. Renewable energy. 15 years ago, solar power. It was 3-4-fold expensive than the grid. So unless there's a subsidy framework or support, it would not have penetrated. So that was essential. But more recently, there's overdevelopment of renewable energy. So batteries for the grid is necessary in order to store the excess supply. And framework is necessary. And central government as well as Tokyo Metropolitan Government is engaged in such projects. And Tokyo Metropolitan Government is quite aggressive in providing incentives to such infrastructures, including batteries, in order to increase penetration. But there are still room for improvements. If you receive subsidy, it becomes difficult to receive finance. That's the kind of structure in place. So when it comes to subsidies, in the case of batteries, there's partly the subsidy for the battery itself, but not for the substations. So it becomes rather complex. What's the subsidy ratio? It's difficult to calculate. But anyway, some local governments are quite aggressive in providing such support. And you may know this, but long-term decarbonization power source project is there. Cash flow floor is guaranteed, and the upside is given to the private sector. But if you make money, please pay back to the government. That's the kind of structure. And discussions are underway, which is a very interesting framework. That's my impression.
Ono-san, do you have a comment? Thank you very much, Hattori-san. 2 points I'd like to convey. I think that plan is very interesting. I've actually challenged different things in this country, and my comment is that there's a first mover's advantage. Merits go to the first mover. In Japan, I think Japan is hardest on the first mover. The second mover, there are lots of second movers in Japan. To become the first mover is very difficult here in Japan. And that's the first point. Secondly, all Japan or the nationwide policies and administration moving forward things for people to get together to do things. That kind of mindset is very strong in Japan. And what I want to say is that the Altera's framework that kind of framework, if the government could create such a framework, I think this will have a very good catalytic effect. What I said, there are walls that people find hard to overcome. It's hard to become the first penguin, and so if the government backs us up, this will help. It's not using taxpayers' money, it's a catalyst to input money as the catalyst, and then you bring several hundredfold of money from overseas, and to have overseas investors invest in Japan. If that materializes, I think this will be a very interesting approach.
Similarly, it's fund. It's the same fund, but how you use it and how it is structured depends upon that. Different aspects will come out, and that is the priming effect. And there will be a huge movement from a lot of investors. I think you have to craft something out of mind. Well, this is a rare opportunity. So in front of you, maybe you find it difficult to talk about. But if there are things that you want to ask, maybe difficult to answer. But is there any questions from the panelists? Infrastructure is difficult because it's not one-time only investment. It is an ongoing investment. If the structure is there, or structures are there, but the long-term ongoing investment should be possible. What are the things that have to be crafted? Do you have any ideas about crafting? Any ideas? Come to think of it, I don't know. Maybe you are aware of that. It's really super long-term. But sometimes it so happens that the financial return could become high, and the new asset people come into the picture. Hurdle rate, as well as the 20, 30 years long-term time horizon as the infrastructure. There is a huge gap between the two. The battery power generation is something which would follow in this category. Energy infrastructure, collecting, recovering the investment in 5-10 years, that's not possible. I elaborately explain that. Another important thing is the rules. The rules are often changed. If there are too often a change of rules, investors will find it very difficult to come in. So on the side of the administration, the rules should be made constant. It's very important. Famous story. I'd like. It's a photovoltaic and renewable energies would be purchased. This system was created in Europe, and then Spain said that we're going to do it. And then the investors sort of receded, withdrew. Japanese situation is similar to that. In the case of battery business, it's very similar. So consistent system design is necessary.
としてはね、やっぱりそんなのねやってられないみたいなところがあるから、海底ケーブルなんていっぺんなんかね海に入れたらもう25年出てきませんからみたいなところで、やっぱりそれをどう25年先。
It's there for 25 years once it's installed on the subsea. So I think it's difficult to have foresight. To add to that, when you look at it as infrastructure, there are infrastructure that ought to be protected versus infrastructure on the offense. And when I say defense, like submarine cables, those are infrastructure that will probably be perpetually used. In the analogy of real estate, the Marunouchi building in front of Tokyo Station, that building will continue to be used. In the form of REIT, they are included in REIT fund. So there are infrastructure and assets that will continue to be used. So we use long-term funds for such assets. But then, for example, there's a cable. You want to upgrade the cable in order to increase the asset value in 5 years' time. So you need to be on the offense. So you need to design a fund that would be appropriate for such purposes. So there has to be some adjustment in order to optimize.
That was a very good intervention. I believe that Japanese infrastructure has a value in terms of scale, quality, and demand. It's there. And so the rest is how overseas investors and funds can be attracted. If we could create a mechanism to do that, I believe there's a lot of potential. And I am convinced about that on hearing your discussion. And through discussions such as this one, I would like to take part in making the mechanism more attractive here in Japan. And I believe it would feed into raising the value for Japan as a whole. Thank you very much for your very interesting discussion. I'd like to conclude here.
ありがとうございました。
Thank you very much. Next is a video message by Finance Minister, Minister of State for Financial Services, Minister of State for Tax, as well as review of subsidies, Minister Katayama Satsuki. Due to official duties, she will give us a video message. Enjoy. Hello everyone, I am Katayama Satsuki, Minister of Finance and Minister of State for Financial Services. I wish to express my deep respect to FinCity Tokyo, led by Chairman Nakaso, for organizing this event, and to the speakers, panelists, and staff for contributing to the rich program. Since announcing the vision of Global Financial City Tokyo in 2017, the Tokyo Metropolitan Government has engaged in diverse initiatives, including the conclusion of the MOU with the City of London, attracting and grooming fintech companies and asset managers, and resolution of social challenges through finance. I personally, as early as in 2020, proposed to the then Prime Minister Abe at the Budget Committee that Tokyo should secure the status of a global financial center. Thereafter, as the chairperson of the LDP Research Commission on the Finance and Banking Systems, I have been driving efforts to establish special zones for financial and asset management businesses in Tokyo and 3 other cities, and initiatives for the development of the asset management sector in order to promote Japan as a leading asset management center. As a result, much progress has been achieved in diverse areas such as household finance through improvement of the NISA system and making it permanent, corporate governance reform, and asset management and asset ownership reform, which are highly appreciated by Japanese and global investors. The theme of today's forum is resilience. Japan has faced complex global challenges such as the pandemic and conflicts in various regions. In this context, our initiatives to promote Japan as a leading asset management center are bearing fruit because we have been successful in performing resilience by leveraging Japan's legal stability, comfortable livelihood environment, and retail assets of approximately 2,200 trillion yen. These steps have led to record high amount of risk assets, including equity and investment trusts in the household sector. At the same time, continued corporate governance reform since Abenomics has increased market capitalization of the Tokyo Stock Exchange to 1,200 trillion yen, which is the quadruple of 2012, while nominal capital expenditure of the private sector has reached record highs as the Takaichi administration promotes strategic investment as a priority policy agenda, with the public sector serving as a pump primer. We expect further expansion of investment. 90% of companies listed on the prime market of TSE have disclosed plans to manage their companies focusing on cost of capital and stock prices, which indicates that the mindset of corporate management is changing. On the other hand, the global economy is still surrounded with uncertainties due to the impact of trade policies and geopolitical tension. In order to flexibly overcome such challenges, the Takaichi administration is in pursuit of a strong economy, which is about growth-oriented resilience. Aiming to boost supply capacity, we will promote bold strategic investments that enhance resilience against potential crisis and investment for growth. The public and private sectors in partnership will engage actively in investment, mainly in strategic areas that will also contribute to enhancement of economic security to solve challenges that Japan faces, to promote blooming frontier industry and spur growth of the Japanese economy. The power of finance is essential in accelerating such growth strategy. Under the Council for Japan's Growth Strategy, a subcommittee for a new strategy by promoting Japan as a leading asset management center, which I chair, was established, where financial strategy to free up the potential of the Japanese economy and improve the wealth of the people of Japan will be created by summer, under which initiatives will be implemented through public-private partnership. More specifically, in order to further promote Japan as a leading asset management center, corporate governance reform will become more substantive to promote investment in human capital and growth areas. Public and private sectors will work together to expand the supply of capital for growth to support sustainable growth of companies and increase corporate value. Functionality of asset owners will be improved to secure the interest of beneficiaries so that the outcome of investment is appropriately returned to the people of this nation. Discussions will take place at the subcommittee on such themes. Based on the Regional Financial Power Enhancement Plan adopted last December, we will study measures to support regional sustainable growth through partnership between diverse players. As the speed of digital innovation increases, upgrading payment services that support economic activities is also an important challenge. I think of 2026 as the inaugural year of the digital era. Issuance of yen-denominated stable coins and tokenized deposits are emerging in Japan. The Financial Services Agency launched the Payment Innovation Project coin as PIP or PIP. Efforts will be made to implement blockchain technology and realize digital asset transactions by collaborating with Japanese and international stakeholders. I regret not being able to meet you in person today, but hope that each of you in each of your capacities will become an implementer of growth-oriented resilience so that the public and private sectors can work as one team for the further development of the Japanese market. I conclude my remarks as the Minister of Finance and Minister of State for Financial Services by praying that today's event will prove to be useful for all of you. Thank you very much for your kind attention.
誠にありがとうございました。片山様、ありがとうございました。では続
Thank you very much, Minister Katayama. We will proceed to the special session. The theme is how to make sports and entertainment as investment asset classes and integrate with the financial ecosystem.
Let us welcome the panelists for this session. Please welcome the panelists with a round of applause. Please wait for a few moments as the panelists prepare to come up to the stage. The theme is how to make sports and entertainment as investment asset classes and integrate with financial ecosystem. They are on their way. We apologize, but please wait for a few more moments as the panelists prepare to come up to the stage. Thank you.
間もなく準備が整いますので、
We will begin the special session shortly. Those of you who are outside the hall, please return to your seats. Thank you.
それではお待たせいたしました。
We will now begin the special session on how to make sports and entertainment as investment asset classes and integrate with financial ecosystem. Let us welcome the panelists. Please welcome them with a round of applause. Thank you for joining us. Please take your seats. The session will be moderated by Mr. Aritomo Keiichi, co-founder and American Chief Representative, FinCity Tokyo.
Hello, everyone. It's a long day today, and you must be exhausted. But it's almost like a dessert of the course menu. We are the last but not least. And also the discussion have been quite serious, but we want to make it more soft. So please sit back and relax and enjoy, have a good time with us as well. So let's see. How can I move on? Oops. It's some latency as well. Okay, so we're going to talk about sports and entertainment and how to integrate them into Japan's financial ecosystem now. And we have quite right people on the stage. And each of them have a different vantage point, right? So Akio in the middle is an author of sort of Bible about sports, finance, and business. She has an entire book, but she's going to try to explain and summarize so that we can understand the essence of the book. Of course, you're encouraged to buy the book and read it. And then Lisa Johnson can provide from a PE, private debt, also club owner's perspective as well. And she's also selected as the most inspirational female leader in finance as far as Asia is concerned. So I'm getting inspired by Lisa every day, and sometimes scolded, but she's quite inspirational. And Kohei is going to provide two perspectives. One is his own investor perspective. Also, Kohei was an entrepreneur, but he's working side by side with a legendary football player named Keisuke Honda. Unfortunately, Keisuke cannot make it in person today, but he and Keisuke discuss and share the perspectives. So So he's gonna talk about his own perspective, share his own perspective and Keisuke's perspective. So that's my understanding of our panelists. And then I'm gonna ask each one of them to briefly introduce themselves in maybe 1 minute or so. So Lisa, can you start?
Thank you, Kiichi, and thank you, FinCity, for having me participate today. And thank you to the audience. My name is Lisa Johnson. I work for Eldridge Capital Management. I'm based in Singapore, and I'm responsible for the launch and growth of the Eldridge business in APAC. Eldridge is a $70+ billion asset management firm. We invest across 4 verticals: real estate credit, diversified credit, GP solutions, and finally sports media and entertainment. We have some notable assets, which include the LA Dodgers, the LA Lakers, Chelsea Football Club, and A24. And I'm grateful to be here and with my esteemed panelists. Thank you.
So let's play a quick video about Eldridge so that you can better understand their portfolio companies. Can you play the video?
At Eldridge Industries, our approach is very simple. We invest in what people need and what people want.
Okay. Did you enjoy the video? It's fascinating, right? So, so Eldridge, there are lots of things going on with Eldridge. So, and next, Akio, can you briefly introduce yourself in 1 minute?
Okay. So thank you for having me today. My name is Akio Miyakawa. I'm a top of research department of Development Bank of Japan. At DBJ, we support the sports industry as one of the key sectors of Japan's economic growth, and also as an essential driver of Japanese regional revitalization. So we want to support growth of Japanese sports industry. So that's why I'm here today. Thank you.
Thank you, Akio. Okay, Kohei, your turn.
Hi. Hello, my name is Kohei. Thanks for having me today. I'm running a venture fund with Keisuke Honda, former national soccer player. But not only that, actually, we are building one of the biggest kind of like a celebrity venture fund platform. So we work with not only with Keisuke, but also someone like Steve Aoki. I'm not sure like how much you know about Steve, but probably like his dad. Rocky Aoki is pretty famous, who built like Benihana, the biggest like teppanyaki restaurant chain. So, but Steve himself is like a Grammy Award DJ right now. But also Kevin Hart is like an actor, and then Simu Liu is also one of the most famous Asian in the US, and then Giannis is the right person, is like an NBA player. So we work with like all like athletes and artists, and then doing the venture investment in the U.S. and in Japan. The reason is like the end of the day, the venture investment is like how to make an edge, and then the money is commoditized, and then founders want that access and then trust. So that's where like makes sense for the celebrities to invest. And then what happens right now is like celebrities invest with the institutional money, not just by their own money. So yeah, that's like a very interesting part. But yeah, that's a brief introduction. Thank you.
You want to also go ahead and talk about your portfolio companies related to sports and entertainment.
So we both invest in Japan and US right now, like 240 million AUM. But we're more like a general tech investment. So not only sports and entertainment, but also we invest like robotics and then autonomous driving, so etc. But these are like an example of like sports portfolios. Gen Z is a US esports kind of company, and Mintown is like a Japanese company who does like a blockchain game with some like a soccer IP, like a Captain Tsubasa. So Dapper Labs like does like an NFT for all like NBA teams. So those are like some like example for like sports investment. Thank you.
Okay. Well, actually, there are lots of similarities between investment and sports. So quite a few, former athletes are doing investment. So probably, Kohei, maybe your position to talk about your experience working with Keisuke.
Thank you.
As to how you observe Keisuke's ability to make the investment judgment as well.
Yeah, I think like I'm kind of rare. I have a very rare experiences working with both. Like I used to be working for Rakuten with Mikitani-san for a long time, both in the Tokyo and in the US. So I had both experiences like working with Mikitani-san as a Keisuke, but I feel like they have like a very similar like commonalities in terms of like aiming high, and then once they set the goal, their hustle level is like insane, and also they're really smart, of course, smart enough to like work strategically. So I think like athletes and investors, like business is like pretty like a same. When it comes to like really the top level. So that's what I learned from my experiences.
Yeah, so one thing is not necessarily clear is both athletes and investment are heavily data oriented as well. So in this sense, those are quite similar too. By the way, this chart was created by AI, and most of that charts on the screen AI generated. So we're not going to talk about AI, but you can enjoy they can generate lots of interesting charts. And then this is the table of the Olympic medals from the last Paris Olympic. So as you can observe, see, Japan did quite well, but Japan has been performing quite well over the last decade or so. And in terms of number of gold medals, Japan is number 3, following US and China. But US has about 3 to 4 times populations in terms of number of population, and China has more than 10 times more population. So compared to US and China, per capita performance of our athletes are kind of outperforming as well. So what do you think about this situation?
Well, first of all, I was pleasantly surprised when I saw that chart that you shared. What we would comment is we would say that Japan's Olympic results reflect discipline, long-term investment, not luck. And the same model applies can scale beyond sport. Sports and entertainment are now institutional asset classes, powered by media rights, IP, venues, and recurring cash flows. Japan is uniquely positioned to lead, combining global cultural appeal with strong governance and patient capital. The real opportunity, we believe, is in platform investing. It's integrating the teams, media, real estate, and technology. It's not just about one-offs.
Okay, so here's some comparison between the most valuable baseball team in the US, namely Dodgers. Lisa happened to wear Dodgers color, and my tie is also blue. And Yomiuri Giants is the most valuable team. But as you can see, in terms of corporate value and revenue, there's an order of magnitude difference between the two. It's interesting. Lisa, why do you think, what's your assessment about this situation?
Okay, I did plan on the blue, so it wasn't spontaneous. Anyway, look, it's the same sport, but radically different business models and radically different valuation outcomes. The Dodgers operate as a diversified sports entertainment platform, anchored by media rights, real estate, and global monetization. This drives an almost $8 billion valuation with $750 million in annual revenue. The Giants, while culturally iconic and dominate domestically, they remain primarily a team-centric franchise with far more limited commercial scale reflected in their valuation of $1.8 billion and lower reported income. The gap highlights how media rights, ancillary assets, and ecosystem and integration, not on field or success alone, it drives enterprise value in modern sports. And we'll get into detail what we mean.
Thank you, Lisa. So there are a number of different factors to this situation and between the global leading sports clubs and Japanese clubs in terms of media rights, fan base monetization, ownership, capital market, stadium control, player asset valuation mindset. And there's a whole book about this situation and how to do, fill the gap between the two as well. So Akio is the best person to explain about this situation.
Okay, so yes, to address these structural issues and accelerate growth in Japan's sports industry, DBJ published a book last year. The book looks at how sports developed historically in Japan versus overseas, how different origins and institutional setups shaped today's challenges in Japan's sports business. What's distinctive is that we map the sports industry's flow of funds across segments in a single view, so we can see where money is created, where it gets stuck, and why growth investment into leagues and clubs is constrained. Based on that capital circulation analysis, we then discuss what it would take to unlock a sustainable growth path for Japan, strengthening monetization, improving investment capacity, and building a virtuous cycle around fan engagement, rights, venues, and professional management. And go back to previous slide. Thank you. So this slide is flow of funds between sports segments in Japan. This is important because it shows that the sports industry is a broad ecosystem of several segments. And sports operations sits at the center of the money flow. It has both major inflows like broadcasting rights and sponsorship, and major outflows like payments to venues, talent-related costs, and services across other segments. That is why this node matters. If monetization in sports operation does not progress, the whole system cannot scale. In other words, even if apparel or participation sports grows, the industry's growth engine will stay constrained unless leagues and clubs can capture enough value to reinvest into content, digital, and venues, so the capital cycle can compound. Next slide. Next slide is U.S. sports industry's capital circulation. So as you can see, basically basically the so structure is the same, but so total size is much bigger. So US is much bigger, and sports operation sits at the center of the ecosystem. So it is a hub that both receives major inflows and sends major outflows across other segments. So it anchors the entire circulation. The implication is straightforward. Japan doesn't need a completely different model. The core architecture is the same. The real gap is the intensity of monetization and the capital circulation around the sports operation node. Please, next slide. So this is the sports industry segment size per capita, and compared with US and UK sports market. So Japan is especially small in professional sports operations. That's why improving the flow of funds into the operating segment is essential, because it determines whether the entire ecosystem can compound.
Thank you, Akio. So let's highlight one by one. Media right, that's one of the major differences between Western, including the US, and Japan. So probably, Lisa, you can share your real-life experience examples.
So what this slide basically highlights is that while leagues still control the core broadcast rights, clubs are increasingly becoming media businesses in their own right. The real value creation now sits in what we call shoulder content. This is the behind-the-scenes access, training footage, documentaries, and lifestyle programming. This is distributed directly to our fans. Falling production costs and D2C platforms have shifted the economics, allowing clubs to deepen fan engagement, build global audiences, and ultimately strengthen their leverage in future media and sponsorship negotiations. Sports is no longer just live competition. It's year-round storytelling.
Thank you, Lisa. Hold on one second. So, Akio, can you make any recommendation to Japanese club and investors about this? Hold on. Where am I? I'm just a bit ahead. Hold on one second. The question is, yeah, so do you have any Japanese recommendation to Japanese clubs? And starting from Akio for maybe 1 minute, and followed by Kohei, 1 minute.
Okay,
yeah.
Sure. Okay, so recent strong Japan origin example is the J-League and the dozen broadcasting agreement. It runs from 2023 to 2033 and provides long tenor contracted revenues. But so this slide is, so before this contract, so the top line is Premier League's broadcasting rights. And next, Bundesliga, Serie A, and La Liga, and Liga. And the light blue line near the bottom is Japan's J1 league. So with that in mind, the point is that Europe's top leagues return massive broadcasting revenues to clubs, while the J-League pool remains much smaller. This is not only a market size issue, it's also about content and bargaining power. If top talent flows out and rights management is fragmented or under-resourced, pricing power weakens and the funding flow stalls. So the policy lever is to strengthen content, professionalize rights packaging and negotiation, and make media revenue a stable investment engine for clubs.
Okay, Kohei, do you have any comment on this?
Yeah, just a brief comment, but I think like a good example is like when Messi arrives at the MLS in the US, that fundamentally changed the soccer in the United States. So I think with these talents, I think like he changed like all the broadcasting in Apple TV and everything. So yeah, also like I mentioned Mikitani-san as well. many times, but Rakuten brought like a lots of like not return, but like ex-Barcelona players to his teams, and all those moves are really interesting. But I think like each team's effort is like very limited, so maybe like J League can raise more money from external investors. I don't know, I'm roughly speaking, but J League is actually the non-profit. Yeah, so maybe it's really interesting. Like J League can be profit company and then raise money from all those international investors, and then that could be really interesting. Yeah, change factor.
Okay. Next, we're going to talk about ownership in capital markets. So there's some fundamental difference between Western global leading clubs in terms of ownership and Japanese clubs. Oftentimes, global leading clubs are owned by private equity firms or billionaire like a Todd Bowley or Mark Walter of Guggenheim. On the other hand, Japanese clubs are oftentimes owned by municipalities or as part of the corporate CSR. So, ownership structures are quite different. But, Lisa, can you share real-life sports business ecosystem based upon your experience?
Yeah, I think it's just important to highlight that these are two of our assets. They were very opportunistic acquisitions of iconic global sports brands, and they were driven by complex seller situations. While the franchises were globally recognized, the business operations were underperforming. This created a rare opportunity to professionalize the governance, unlock the commercial upside, and drive long-term value. And I think you see it today by the valuations.
Okay. Again, Akio Kohei, do you have any recommendation to Japanese clubs? And also, there are some quite a few investors here. So, do you have any recommendation to clubs and investors? Akio first, in 1 minute.
So, okay, it's not a recommendation, but I would like to address the situation in Japan. So Japan's sports industry still reflects its historical roots. For decades, professional leagues and clubs relied heavily on parent companies, which often covered operating deficits as part of their advertising budgets rather than treating teams as independent commercial assets. This legacy created stability, but it also limited incentives to expand media rights, upgrade venues, or invest in fan engagement. And so this slide about the sponsors explains the key constraint. Many Japanese leagues, so as I mentioned, clubs rely heavily on domestic sponsors. And while overseas leagues tend to attract a broader mix, including more global companies, that matters because sponsorship is not just marketing income, it's also a channel through which know-how, networks, and additional capital enter the ecosystem. When the sponsor base is narrow, the funding circulation and the profitability are harder to expand. So my recommendation is keep the regional mission, but upgrade the commercial model. Package rights better, use data to prove ROI, and create activation opportunities through venues and digital. That helps attract a wider sponsor mix while strengthening a local economic loop.
Okay, go ahead. Thank you.
Yeah, I think like more and more, for example, like a J League teams are opening up for the external investors. For example, like a Red Bull acquired the Omiya and then keep promoting from J3, J2, and then like Cyber Agent acquired like a Machida, and then. But one concrete problem I feel is like difference between professional baseball in Japan is like owner cannot name their corporate name into their club name. For example, like Rakuten Eagles is like a baseball, Rakuten, they can name Rakuten, whereas like Vissel Kobe is not Rakuten, right? So I think it doesn't make sense for the owner. So I think that's like one specific like improvement they can do.
Okay, thank you. Okay, next one is stadium. arena economics and from a real estate investment perspective. So there are a significant difference between the global clubs and Japanese clubs. Global clubs are more like entertainment hubs, but Japanese clubs, stadium arenas are more like a public-owned venue as well. So, so maybe Lisa, your position to be able to share your real life experience.
Yeah, thank you. So we could talk for a long time about this. So we've just highlighted a real life situation regarding stadium economics and real estate. The Dodgers are actually a textbook case of monetizing land control beyond the game. The first phase that we went through with Dodger Stadium was we wanted to capture the spending, what we say, inside the gates. And so we did a massive upgrade to the concessions. We added global brands as well as local brands. We added premium club-like seating, terraces, experiential seating. And that resulted in higher per cap spending, and it raised the EBITDA even before any real estate risk. Phase 2 was we reframed the parking development, and we basically treated the parking lots as a land bank. We planned mixed-use development that included offices, hospitality, retail. And this enabled us to use this not just during our games. Phase 3, with creating that year-round revenue and valuation uplift, instead of having 81 games per year, we have 365 days of foot traffic and rent. We did some layering with naming rights and sponsorship, and then we added media and experiential entertainment activation. So this is basically the phases of this. In terms of the outcomes, for strategy and control, we did not rely on a new publicly financed stadium. We avoided any revenue sharing, and we kept the control rights. This led to higher retained economics, faster decision-making for the owners, and a cleaner monetization stack. And then the asset transformation and value creation converted a single sports use venue into a multi-use urban node. The final outcome is we are top tier in the MLB in terms of revenue and among the most valuable sports franchises globally.
Thank you, Lisa. Very intriguing and insightful. Akio and Kohei, again, do you have any recommendation to Japanese clubs and government, including municipalities, about this?
So Japan still treats stadiums and arenas largely as public infrastructure, and which limits commercial flexibility. In contrast, global operators integrate venues with content, media, sponsorships, and even urban development to drive year-round revenues. The opportunity for Japan is to shift from viewing stadiums as public goods to managing them as holistic entertainment and real estate platforms, and enabling private sector participation and multi-use development to unlock their full economic potential. And we are finally starting to see a more integrated approach to stadium and arena management in Japan. In addition to global leaders, domestic real estate developers, railway companies, and IT firms are now using venues as anchors for broader urban development. This shift means stadiums are no longer just places for games. They are becoming the year-round community hubs that generate new fun experiences and sports local revitalization.
Okay, thank you, Akio. Kohei, do you have anything to add?
Yeah. So Rakuten sponsored the Warriors, the basketball team in NSF, and then I used to be going there with the team, and then I recently went to the Japanese B League Toyota Arena, the Tokyo Arupark, and I feel like they're really doing a good job to like follow what the NBA is doing, and and actually the stadium is full of people. So I think like also the basketball team is also following what's good in the U.S. and what's not bad. So I feel like a really positive trend.
Okay, so sounds like we are catching up, making some progress. Next, it's a bit tricky subject. So there are some cultural difference about the sports, right? I grew up in Japan, and the sports was a little bit stressful at school. But in U.S. especially, it's considered as part of the entertainment, and almost like performing artists and athletes are treated like same kind of people as well. On the other hand, sports are named taiiku, which is to train your muscle and also your mental to be prepared for any war against our adversaries as well. So it was inherited from the wartime training as well. So culture mindset may be quite different as well. But do you think Japan should adjust this mindset? And probably we can also ask the same question. Do you make any recommendation? Do you recommend anything to Japanese club and government? And Lisa is also positioned to share some US experience. So maybe we should start from Akio. What do you think about this?
Well, yeah, I agree with you. So historically, each country has built their sports industries on very different foundations. So in the US, sports commercialized early through professionalization, media integration, and the league-driven business models, and which created a huge entertainment market. And in the UK, modern sports originated with confined rules and strong club culture, later boosted by centralized media rights in the Premier League. But by contrast, Japan developed sports primarily through education and corporate teams, focusing on character building rather than commercial growth, so as you mentioned. So these historical pathways explain why Western markets naturally evolved into global entertainment industries, while Japan is still transitioning toward a fully commercial model. Yes, still on the way.
Okay. Kohei, do you have anything to add?
Yeah, I think generally like as KSK went to the Europe, and then now like more and more younger players are going to the Europe from day one. So I think like naturally like a competition world, like the players are more like globalized, and then their mindset is like not domestic. So I think that's great. But for the regular people as a sports, please correct me if I'm wrong. But bukatsu, the club activity after school is now going to the private sector, right? So I think like regular teachers is still teaching like all the sports in the school. It's kind of like made a little bit culture a little bit close, but I think moving forward, like bukatsudo, the club activity will be more like a public owned. So that also changed the culture in a way. So
okay, but actually, US has gone through some evolution as well. So Lisa, can you briefly touch upon this point?
Yeah, I mean, I just want to note that this it truly is it's a new asset class. Our founder, Todd Boley, he started investing in 2012, but it was not until 2019 that institutional investors were allowed to invest to the MLB. Then it was in the early 2020s that the MLS was allowing institutional investors. And then the following year, we saw institutional investors allowed to participate in the NBA and the NHL. And most recently, we're all aware that it was the NFL. So we're talking about, it's only got a 7-year history. There's a lot more to come.
Yeah, so which means that we can still catch up. We still have, how much time do we have? Maybe, can we stay for 7-8 minutes? And then we're going to wrap up. So there are global athletes making a lot of money, and actually Japanese athletes are catching up, right? So if you see top athletes, you might notice that Shohei Ohtani is one of the global top athletes. He happened to be Japanese, right? And there are lots of Japanese athletes catching up on global, highly paid athletes as well. So that's really encouraging as well. But if you look at those athletes, where are they? None of them is in Japan. They are everywhere, right? So maybe Lisa and Akio, can you briefly react to it? Maybe in a half minute or so.
I think it's pretty simple. Athletes are following the money, and it's basically powered by the same monetization schemes that we've discussed earlier. The elite Japanese athletes are pretty much increasingly globalizing early, and the question is not talent, it's whether Japan can create this domestic sports ecosystem, which I personally believe is possible.
Thank you, Lisa. Akio?
Yes, Japan just should focusing on strengthening the domestic value proposition, better media products, stronger clubs, and premium fan experiences that raise earning potential at home. If the league becomes a stronger entertainment product, talent will have more reason to stay. And even when they go abroad, more of their IP value can still be monetized domestically.
Thank you. Now, Keisuke started from Nagoya Grampus, and he only stayed in Nagoya for a few years. And after that, he was everywhere, right? So, what does Keisuke think about this? Did you talk about this with Keisuke before you came here?
Yeah, Keisuke didn't expect to play domestically from when he originally started soccer 5 years old. So his goal was set to become win the World Cup when he was 5 years old. So he would just keep doing what he have to do. But yeah, and now he worked more than 10 countries right now. But now he's not actually retiring yet. But he's now trying to leverage his soccer experiences with now investment work. So that's what he's doing right now. But yeah, the interesting story is when he watched national Japan versus a Brazil team when he was elementary school. He never talked to a Japanese player. He only talked with the Brazilian player because his dream was going global. So his mindset was really different.
I see. Okay, that's probably similar to our startup companies. Don't focus too much on Japanese market. Go global. Then the entire theme of this event, is resilience. So I'd like to talk about the sports and entertainment as an investable asset class, being resilient even under the economic downturn. So sports survives through some crises, such as the global financial crisis in 2008 through 2009, and then recently COVID-19. So in this sense, we think that sports are quite resilient, sports entertainment are quite resilient. But maybe, Lisa, you can share your real-life experience.
I mean, it's pretty simple. The higher media rights and contracted sponsorship of your revenue mix, the more resilient your team will be. Both the Dodgers and the Chelsea Football Club have high proportion of media rights and sponsorship as a percentage of their revenue, so they have resilient business models in the face of economic downturns. They both have extremely loyal fan base, and this fan loyalty helps during economic downturn. Efforts to index the value of major sports leagues in the US has shown the valuations to be resilient in the face of economic downturn, and also have shown low correlation with other asset classes. And I think that's the most important comment.
Thank you, Lisa. Akio?
So from an industry and a finance perspective, resilience makes sports assets more bankable. So after the pandemic, digital tools and the new viewing formats let funds engage in multiple ways, which strengthens the recurring demand. So this growth cycle shows how that resilience converts into compounding growth. Fund engagement improves pricing power, support media rights and sponsorship attracts capital, and enables reinvestment in venues, talent, and tech, creating a self-reinforcing loop.
Thank you, Akio. So I guess the time is up, but can you give a final few words, starting from Kohei?
Yeah, thanks again for taking your time today. So yeah, we're venture investors. So we hope as I said, a more sports athletes are going to the global. So why not for the startup founders, right? So we believe we can make next Shohei Ohtani in the startup world too. So yeah, we'll try our best. Thank you.
Okay, Akio.
So, thank you very much for having me today. And so if the audience have interest in more in sports, please purchase our book. Thank you.
And then Lisa?
Yes, thank you for today. And I spent 5 years in Japan early in my career, so it's been great to be back. And we truly support the Japanese growth. And thank you for your support of the Dodgers. We love Shohei. We're not letting him come back anytime soon.
Okay, so we have some gift from Eldridge. Let me distribute. So yeah, so basically it's happened to be Dodgers color. AI just chose the right color as well. So sports and entertainment are resilient, and in order for us to make our economy more resilient, we are encouraging our institutional investors to allocate more to diversify asset classes, especially sports and entertainment as well. So thank you very much. So we're gonna put this cap on, and then we're gonna do hand signal of Dodgers. So it's L and A. Shall we stand up together? And come to the front.
ありがとうございます。記念撮影。
Thank you very much. This is the photo opportunity. This is the photo opportunity. Please take pictures.
ありがとうございます。
Thank you. Thank you very much. So let's have a big round of applause to the moderator and the panelists. Once again, a big applause, please. Thank you very much. For the preparation of the last segment, we need a little time to rearrange the stage. So please wait for a while.
話カウントがあります。
それでは最後になります。
Last but not least, we have Director of Quick Cooperation, FinCity Tokyo Board Member, Mr. Keisuke Komori, to deliver closing remarks. Over to you, sir. Ladies and gentlemen, we'd like to thank you for participating in our program for many hours. We'd like to thank you for staying until the very end. It was a very substantial program. I'm a FinCity Tokyo board member, and I'd like to offer closing remarks and a few announcements about what happens after this. FinCity Global Forum is to enhance FinCity Tokyo was established in 2019 to enhance Tokyo's attractiveness as a market and to communicate to the world. Financial institutions, operating company, industrial associations, and administrative organs. Along with these entities, we have disseminated information about the attractiveness of Tokyo as a financial city, and we have exchanged views and cooperated with organizations inside and outside the countries, and we have striven to attract foreign financial institutions into Japan. And FinCity Global Forum is a flagship event of FinCity Tokyo to enhance Tokyo into the world's top-class institutional financial city. The theme today was the resilience of global financial city Tokyo. When the international financial order is shaken, how do we leverage our resilience, and how do we retain trust and credibility of the world? And that includes introduction of technology, state-of-the-art technology, and importance of infrastructure investment and sports and entertainment. We have broadly engaged in different issues related to the topic. And for quick resilience is a very important theme in terms of our management and multitude of economic data and market data. We provide this quickly and accurately. And with regard to AI and other technology, we will introduce this. And we have made proposals as to how to develop and leverage data. And as for the last part of our program, we have set aside some time for networking. We hope you will engage in business matching, and if you would like to engage with those who have represented, this is the time to do so. Although time is rather short, we hope that you will enhance exchanges, and we hope you will enhance your understanding about financial innovation. If the networking session provides this opportunity, you will be most gratified. And last but not least, we'd like to extend our heartfelt gratitude to those who have represented and to those who have participated in our program toward enhanced value of Tokyo as an international financial city. Let us walk together and strive. Thank you very much.
Thank you very much. We are approaching the closing time. So lastly, I'd like to make an announcement about the questionnaires. If you are in the hall, please watch the screen. And if you are online participants, on your screen, you will find the QR code. So from this QR code, I hope that you will participate in the questionnaire survey. We will contact you also by email. So lastly, we have prepared networking coffee in adjacent room. So I hope that you will participate as a place of networking. With this, we would like to complete the FinCity Global Forum 2026. Ladies and gentlemen, thank you very much despite your very busy schedule. We are so grateful for your large attendance. Thank you very much.
ありがとうございました。どうぞ。
Thank you very much. Make sure that you do not leave anything behind. And in the foyer, I hope that you will enjoy networking coffee.
大きな間違いもなく。ちょっとだいぶ無理してマッピングになっちゃったんで、ちょっと連携が取れてなくて。こっちも早かったね。なんかアーカイブでは大丈夫っぽい。なんかフィンシーさんも言ってますけど。フィンシーさんは気にしない。大丈夫です。フォローしてきましたから。フィンシーさんは。いろいろ助けられる。ちょっとなんか。やりやすい。